profit, even as the bank posts mostly positive results. Vodafone Idea follow-on public offering is oversubscribed, even as the retail section is subscribed 0.92 times. The government orders fresh quality checks on Everest and MDH masala after two countries banned them. And 30,000 suitcases are stuck at Dubai airport after unprecedented flooding. The Emirates CEO apologizes to customers. Let's get you a quick check of what's happening across the globe. Now, US stocks advanced, with the tech-heavy Nasdaq gaining over 1%, and the S&P 500 and the Dow Jones gaining quite significantly. In fact, the Nasdaq gained over 1%, the S&P 500 and the Dow gained about 0.9 and 0.7% respectively. The benchmark snapped a six-session losing streak and rebounded from the biggest weekly loss since March last year. Remember, about 180 companies in the S&P 500, representing over 40% of the index's market capitalization, are due to report earnings this week, and that includes the Magnificent Seven. Expectations are that the top tech companies in the US will report strong profit on the back of the push towards AI. Asian markets are mostly positive, or they were mostly positive at the start. Of course, the Nikkei 225 giving up a bit of ground. It was up about 1/3%. It is now just about flat, but the Hang Seng has opened with gains. However, the onshore markets in China have opened with cuts, with the Shanghai benchmark trading with cuts of about 0.75%. Seemingly, geopolitical tensions have eased just a tad bit. Brent crude is trading at just over $87 to the barrel, but you see bond yields that are still elevated, with the 10-year Treasury in the US trading at over 4.6%, and the dollar continues to remain strong at 106 or over 106 at this juncture. Let's talk about the Indian equity markets and what you should watch out for from the perspective of the latest F&O cues. Samina is standing by to tell you more about that. Samina, we saw gains for the benchmark indices yesterday, and I guess to a certain extent a break in the selling. We're seeing that across the board. What's the latest cues on the F&O side? I think we moved above that initial hurdle of 22,300, and that's what the bulls are going to be taking heart from this morning. You've had 2 straight days of gains. The VIX index is eased off quite sharply, giving some more comfort to the bulls on the street. And let's not forget, ex-China, most of your Asian markets are trading well. Global cues handover from Wall Street has also been positive. It's largely about earnings back home, and the general broader sentiment, remember, still remains intact. That's what the Nifty 50 looks like in terms of futures, trades at a marginal premium, and there's been a slight decline in open interest to the tune of about 7%. Bank Nifty was a star performer yesterday. A very sharp up move. It was broad-based. You had your private sector banks, PSU banks, all rallying up quite sharply, and that is why you're seeing the sharp uptick in bank futures with a sharp decline in open interest on the Bank Nifty. Well, in terms of puts and calls, we'll take you through where the action really stays. Largely what we've seen is this is pretty much where all the action remains, and that's a level you want to watch out for in terms of put writing. That was seen at levels of 22,000. Call activity, rather maximum open interest in terms of call, came in at levels of 22,600, which becomes an important level of support for the street, followed by 22,500 and 22,400. On the downside, 22,000 remains a key level of support, so we will be watching out for that pretty closely. You will also see activity around levels of 22,500 on the upside. So that's where the call puts are. On the downside, the Nifty will seek support at 22,000, which is where maximum put interest has been seen. On the upside, of course, you've got a maximum call addition staying at 22,400, 23,000, followed by 22,600 and 22,500. So the setup looks pretty solid this morning. It looks like we could see a gap up opening in early hours of trade, but what traders believe is that you could see some selling pressure emerging in the second half, which could, of course, see the Nifty probably end flat at best. That's what the indication is on GIFT Nifty. Marginally higher start is what we're expecting. The story of the day, though, Alex, will be Reliance Industries. We should be watching out for that. Numbers were slightly better than expected. Now, whether or not this gives traders an opportunity to make some money is anybody's guess. But for now, big earnings, broader market stocks will be that will be catching our attention. Likes like Hudson Agro, who've actually done quite well in trade. So lots to watch out for. The benchmark itself may stay positive with a marginal uptick bias. And in fact, thanks so much for getting us those details. We have to speak about Reliance Industries next, and I'm glad that Samina set that up for us. And we've got Mihika joining in to give you some perspective on the fourth quarter results, which was very close to being a beat, because we look at a 5% beat on net profit, and it was very close to that mark, the net profit gaining as much as 8% sequentially. What were the factors that led to that, though, Mihika?
Yeah, so numbers were backed by strong performance, specifically in the oil to chemical and consumer segments, which saw double-digit growth. Now, consolidated net profit was up 8%, as you mentioned, while revenue was up 5.6% to 2.37 lakh crores. EBITDA was up 4.6%. However, margins did fall 8 basis points, but this did meet estimates, and the board recommended a dividend of 10 rupees per share. Now, when you look at the segment-wise performance, when you look at the oil to chemicals, sequentially marginal uptick of 1%, but it was up almost 11% year on year. Now, this higher revenue was on better realizations on petrol as well as diesel. EBITDA was up 19.3% quarter on quarter, and this was driven by a sharp rebound in the gasoline cracks. And the strong results came in despite challenging margin environment in the quarter as well as the entire year, where fuel cracks fell to 20 to 25%. In the oil to gas segment, revenue was up 42% year on year. EBITDA also up 48%, and the higher EBITDA was led by higher production at their KGDC block, where production rose 66.4%. But on the whole, oil production was up on an annual basis. However, gas production was down 5%. And when we talk about brokerages, we have Nuvama on Reliance Industries. It's maintained a buy at a 3,500 rupee target, which offers an 18% upside to the previous close. Now, O2C, or the gas segment, accounted for 65% of the consolidated net profit, and the EBITDA growth was mainly on better crude sourcing from Latin America and strong domestic demand. And they've also said that the 23% year-on-year dip in the ethane input price gave Reliance a unique advantage. And lastly, they're saying that Reliance is nearing the new energy vision rollout, where they're bagging multiple PLIs, especially in the solar module space, and they've raised FY26 EBITDA by 8%.
Okay, that's interesting. But there's also a couple of other segments to talk about, Mika, the likes of Geo Platforms as well as Reliance Retail. What can you tell us about those segments?
Yes, I'll start off with Geo Platforms. Revenue is up 13.4%, mainly led by subscription growth and a better improvement in the mix of the average revenue per person. Now, EBITDA was up 12.5%, and the net subscription additions were 10.9 million, and ARPU was flat at 181.7. Now, we had DART, where the Q4 results were largely in line with the brokerage estimates, and they do say that the Vodafone fundraise is a potential risk to growth and the quasi-duopoly market structure. But however, the lead on 4G, 5G networks and the VI payout will lead to steep tariff hikes. And the muted ARPU lastly was due to lack of a tariff hike and the Bharat Phone Pay launch. And lastly, we have Reliance Retail. Now, revenue, it did miss estimates by 8%. This is on their financials. Revenue was up 10.6% year on year, however, and the growth was led by the consumer, electronics, and fashion and lifestyle divisions.
Thanks so much, Mika, for getting us those details. Let's stick with earnings then and talk about Tata Consumer, which is set to report its results today. Mahima is joining in to tell you about the street expectations. Mahima, morning. What can you tell us?
Morning, Alex. So, from what you can expect out of Tata Consumer's Q4 results is that revenue and margins expansion is on cards. We're expecting revenue to grow by around 10% and margins to expand at least by 100 BPS. Net profits are expected to grow in double digit. Now, in terms of demands, the demand trend in terms of consumer staples is expected to remain subdued. However, easing of raw material prices will impact the margin in a positive way. Now, in terms of rural demand, where rural demand is something that is languishing, is dragging the volumes at present, and decent revenue and cost synergies from the latest acquisitions will be on the radar to watch out for. Now, in terms of segments, it is expected that the beverage segment will grow anywhere between 9 to 10%, tea segment between 5 to 7%. NourishCo is likely to give a good growth of around 40%, and international business is something that will be on the radar to watch out for because it is expected to grow around 6 to 7%. So basically, key things to watch out will be the market penetration of international business, operating leverage benefits, and mid-single volume digit growth, and contribution basically from the recent acquisition of Capital Foods. So these are the key things that will be on the watch out for Tata Consumer Products.
All right. Thanks so much for getting us those details, Mahima. Let's move to a very important story that we've been tracking, and this is with regard to the masala makers here in India, in response to Hong Kong and Singapore's notice to MDH and Everest masalas, or the ban of certain masalas for possibly containing cancer-causing pesticides, India's food safety regulator has issued a quality check on these companies. And we've got Sesha joining in to tell us the latest here. Sesha, what are you picking up?
Right. So following the Singapore and Hong Kong flagging concerns around Indian spices being unfit for human consumption, the Food Safety and Standards Authority of India has initiated a new round of quality assessment on products from spice manufacturers. And this is not just MDH and Everest, but all the manufacturers in India. Now, ethylene oxide, the pesticide in question, and is known to cause cancer when consumed in excess of permissible limits, is banned for use in food items in the country. Now, according to government sources, no harmful chemicals like ethylene oxide have been found in the different spice brands available in the Indian market yet. However, the FSSAI has opened a fresh investigation. Samples of spices are being collected from various brands to assess if the products meet the regulatory standards. Now, the regulator has instructed state food commissioners to gather samples for testing in labs in order to identify the presence of pesticide ethylene oxide. A decision on further action can be expected in the next 15 to 20 days is what we are getting to hear. Now, officials have also stated that the products that are being exported do not fall under the jurisdiction of FSSAI. Now, it is typically the responsibility of the importing country to conduct testing on the products and determine whether they can be allowed entry. Meanwhile, Everest Food Products has issued a statement clarifying that their products are still very much available in Singapore and Hong Kong. Only one out of the 60 Everest products has been held for examination, according to a company spokesperson. Now, such an action, according to the company, is a standard procedure and not a ban. The exports are cleared only after receiving necessary clearance and approval from the laboratories of the Spice Board of India. This is what we have so far.
All right. Thanks so much, Sesha, for getting us those details. We have to slip into a very quick break, but let's listen into Macquarie's Abhishek Poddar talking about their new platform, which is aimed at facilitating the transition into the EV world. Listen in.
Calling as an integrated EV fleet solutions platform. What that means is it's a platform that will enable a seamless transition of vehicles from the ICE or the diesel world to electric world and address each of the constraints that comes along with it. And how we are enabling the same, we're enabling by providing leasing and financing solutions to operators. We're enabling the same by providing charging infrastructure, fleet management services like maintenance, insurance, battery management services, and end of life. So addressing all the constraints that comes when an operator looks at using electric vehicles. And our initial focus is on the heavy transportation, which are the buses, the four-wheeler fleets, trucks, which are the real polluters and the big capex customers.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs,
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome back. You're watching All You Need to Know. Let's talk about the key numbers to watch out for on the earnings front. And we've got a few companies that have reported their Q4 numbers. Anushi is joining in to tell you more about that. The likes of Mahindra Logistics as well as Hatson Agro and a couple more. Anushi, morning. What do you have for us?
Hey, morning Alex. So I have 4 stocks to watch on based on the earnings over here. I'll start off with Rallies India first. Now the revenue over here was down about 16%, while EBITDA did turn positive compared to a loss of about 64 crore in the earlier period, while the margins remain in the 1% range. Now what we are looking at is again a weak global demand for the sector over here, which has impacted the revenue. Its crop revenue, which is its biggest segment, continues to take a hit, about 18% of a downside over here. EBITDA, though, we did see some improvement based on the pricing and the cost management that the company was focusing on. Now, moving on to Tejas Network, quite strong numbers over here, the revenue being about 4 times what was estimated, beating all estimates. Again, EBITDA at rupees 306.5 crore compared to about 8 crore earlier, while the margins also have beat estimates by a long mile. Over here, the key highlight remained on the growth segment in its wireless segment. Over here, even if you look at the order book, that stood at about 8,000 crore, with most of the order coming from the Indian segment. Now, again, now the company also received about 32.6 crore of a PLI incentive in the FY23 period. Again, next on the list is Mahindra Logistics, revenue about 14% of an up, while the EBITDA and the margins remained under pressure. Now, these margins were impacted due to higher operating costs and higher startup and manpower cost in its largest segment, which is the 3PL contract logistic business, while the PAT saw a one-time impact for its doubtful receivable of about 10 crore, and again, IT costs going up about 2 crore over here. Last on the list is Hatson Agro product. Over here, the good set of numbers over here, revenue being about 14% up, while the EBITDA and the PAT remains on the key focus, with seeing about a 46 and 247 bips of a uptick again, and net profit almost doubling down. Like, this is mainly on the account of the purchase of stock in trade, which went down by about 49%, while again changes in inventory also, there was a huge differential, because of which we are seeing this sort of growth in the margins and the PAT. So these are the 4 stocks that should definitely be in focus.
Yeah. Absolutely. Thanks so much for getting us those details. Anushi, all of these stocks incidentally were active in trade yesterday, particularly Tejas Network, so watch out for that in trade today. Let's talk about a few stocks to watch on account of them being in the news, and we've got Varsha to get you some details on Patel Engineering as well as Vodafone Idea and a couple more. Varsha, morning, what are you picking up?
Good morning, Alex. So, few stocks which should be on radar for today, starting with Patel Engineering, wherein board have approved QIP of to raise rupees 400 crore, including which includes 100 crore of green shoe option. Now, board has approved opening of this QIP issue at floor price of rupees 59 per share, which is at a discount of 10% to last closing price. Now, company may offer discount up to 5% on floor price. Now, QIP will result in dilution of up to 9% of pre-issue outstanding equity share capital. Now, what are the reasons for this QIP? Is they are expecting huge order post-election, which will require high working capital. They had mentioned this in Q3 FY24 con call, wherein they have mentioned that they would raise almost 500 crore of fund. Next, we have Vodafone Idea, wherein we have seen strong subscription to their FPO fund offer, subscribed to almost 6x on day 3, and the bids were led by institutional investors at 18x, while non-institutional investors bid were at 4x. Then we have KP Energy, wherein they have received 9 megawatt wind power project order from Bhatwari Technologies. This need to be completed in FY 24-25 financial year. Also, yesterday we did see results of KP Energy, which were fantastic. Then lastly, we have HPL Electric and Power, wherein they've launched new product HPL fans in SAARC countries, Middle East and African countries. So these are the stocks which need to be watched out.
All right, thanks so much for getting us those details, Varsha. Let's finally get you a brokerage check, and we've got a focus on Aditya Birla Fashion, and we've got MK, which has maintained a reduced rating on the stock. Puneet is joining in to tell you about why. Puneet, what are you picking up?
Yeah, good morning, Alex. So on Aditya Birla Fashion, the company hosted a conference call yesterday to explain about the demerger process. And just to take a step back, the company has demerged its Madura fashion business and is in process to finally not liquidate, but separate the business. Now, ABFRL, which was the erstwhile business, will now host brands such as Pantaloons, TCS, as well as The Collective, while the new entity, LBL, which is the lifestyle brands, will host brands such as Van Heusen, Peter England, as well as Alan Solly. Now, MK has maintained a reduced rating with a target price of 230 rupees per share, which is a 4 to 5% downside from current levels. They said that in the con call, the management mentioned that they will do an equity raise of roughly 2,500 crores in the erstwhile business ABFRL, while they also said that the preference for growth among multiple businesses would be ethnic wear, value, and finally on the luxury segment. They said that the TCNS, which was acquired by ABFRL, which hosts brands such as W, will be demerged in the next 3 to 4 months, while the overall rate or business would take roughly 9 to 12 months to finalize. Finally, MK says that the new entity can unlock value while better capital allocation as well as investing better in these brands. But they see that the remaining businesses will require a lot of capital going forward, and they say that they will have to watch out for how the incremental businesses gain. So they have a reduced rating. Citi also has a reduced rating on the stock at 225 rupees target price. Back to you.
Got it. All right. Thanks so much for getting us those details. Now, finally, we have a small update from Vijay Shekhar Sharma of Paytm. And remember, when the entire fracas with the payments bank took place, he had stated his intention to dissociate himself from the payments bank, and that in fact took place. But he has still maintained that he is confident in the ability of the independent board that was put in place for this entity. Listen in.
And you're talking about payment banks, short answer, I personally or any of the OCL person has no connection whatsoever to the payment bank. There is an independent board. The board is actually very capable and they are working with whatever the process requirements, etc. are. So no more any update or no updates from our side anymore. So we trust and have full faith in the board and the full faith in what they are guiding and taking care of the next.
All right, so that's the latest from VSS on the Payments Bank. But before we wrap this edition of All You Need to Know, listen in to Dish TV's Chief Executive Officer on the company's growth prospects for the current financial year.
Coming year is going to be definitely a reversal of trends for us on subscription revenue as well as customer base growth, which will definitely translate into bottom line. So we are going to definitely with these initiatives because these are all customer driven and sought after by the customers. I think these are definitely going to be game changer for us. We'll see the positive trend coming out from this fiscal itself.
And what kind of growth have you seen in the last fiscal? Because because there have been a few good news for you as well, because you became a debt-free company in the last fiscal. So how has that been for you?
Yeah, so that debt burden we wanted to get off as soon as possible, and that is what actually set us back in making some investment, which we are doing now. Right, so I would say business could have been a little better, but then we would have been financing more of debt, so it would have still not translated into the bottom line. So that's a trade-off we have been able to do, and we are better poised at this point of time now to drive those growths which we have missed.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Welcome to India Market Open. I'm Samina Nalwala. Myself, Neeraj and Tamanna will gear you up for trade this morning. It looks like it's been a good run. 2 straight days of gains on D Street. The Nifty closed about 22,300 and it seems like a positive handover from Wall Street will cheer our traders up this morning. Bulls in control for now. Of course, the VIX has also eased off, which gives us some more comfort, and the PCR trades about 1%, clearly showing that the bias is on the upside. Across Asia, the markets look okay. Japan has eased off a little bit in the last few minutes, but barring China, every other market across Asia is actually looking good. Crude also trades around $87 a barrel. So, Neeraj, the setup is actually pretty good. We've had 2 straight days of gains. This morning, it's a positive handover. It could seem like we will attempt taking out 22,400, but the second half of trade could potentially see some profit taking. What I am betting on.
Yeah, and any reason why?
And RIL is the big daddy.
RIL is the big daddy. It's a bit of results. But yeah, I'm just trying to understand. Any reason why you think that they're going to be short?
I just feel like if we've had 2 good days and if we are leading the way up in terms of global cues, remember, Dow hasn't done well in the last 6 days. Asia as well started off much better this morning. And in the last hour or so, it's given up some gains. Japan especially, it saw a gap up, but sold off as we see it. The Japanese yen, interestingly, also stands at the 34-year low. China is not looking too great this morning. But I just feel like because we've had such a solid pullback, a little bit of profit taking cannot be ruled out at levels of 22,400, 500.
Interesting. Yeah, sure. So that's a valid point too. But just a few updates here. So one, if you just look at what's happened, a 6-day losing streak for the S&P 500 snapped with what the Dow and the S&P did in particular. So that is one good thing. Oil is steady after Iran has said that it will not escalate the conflict with Israel. Interestingly, crypto prices have gained after the Bitcoin halving incident is behind us. And amongst other things, There is a Nomura note today, before we get to trade setup, of course, there is a Nomura note today which says that they expect Indian GDP to grow at 7% for the next 5 years. So pretty strong showing out there for most things as well. But as things stand, let's take a look at the trade setup for the day today, and it could be an interesting morning. So the point remains that yesterday we saw a bit of a higher high, higher low formation on a trending day. Typically, people say that such a setup would suggest more upsides for the markets because we almost close at the high point of the day, and then therefore a trending day and much better technical formation as well. The other aspect was that the major call writing that happened at the 22,600 strike. It just showed that people who are wanting to bet against the tide as well are keeping a cushion. So 23,000, very high call concentration, and new writing or new addition happened at 22,600, not at 22,400, not at 22,500, at 22,600, keeping a buffer, which shows that the immediate point of resistance as well from the option side is straight at 22,600, so some distance away. And you know, pointless to talk about specific sectors per se because it was a rising tide, carried all boats along with it except for HDFC Bank, if you will. But capital market stocks did stand out, and I thought that was an interesting pocket of trade. And guys, one very interesting excerpt that came in from amongst the brokerage notes on a particular sector. So I was looking at the Citi note, wherein they did a roadshow for some 30 or 40 Asia Pacific clients. And amongst the various sectors that they've written a note on, they said that Adani Ports is their top idea, L&T looks okay, some other looks okay. But property, they say that there was general discomfort on residential developer valuations, but given strong pre-sales, we sensed reluctance to reduce exposure, which means that maybe selling is not coming, even if people believe that the valuations at that residential real estate end might be expensive in select cases.
So it's a dream that everyone wants to bet on right now, because it has moved up so robustly, and the pre-sales figures, at the end of the day, if you have people coming in, why not? Absolutely, that's a big one. I just want to go back for a second to the global setup because there's just so many things to look forward to, and housing sales in the US is one of them. So world over, a big factor over there. But like Neeraj said, you've had a rebound after 6 trading sessions in the US, and that's important because the mood definitely has changed. Look at the big sort of clouds in the horizon, Fed rates being extended, that has been shrugged off. Nvidia roared back up about 4 to 6%, 6% actually in trade overnight. So you've had sort of a great and very clear shift there. Everyone's going to be watching the mega cap results coming in, starting with a Tesla, and Tesla is really hurting. Maybe on hindsight, a good thing that Elon Musk took a couple of days to take care of his business instead of his India visit, because he's had to cut prices in more countries as far as Tesla is concerned. But Tesla, Meta, Alphabet, Microsoft, all of those results are due this week. The 10-year yield did not move too much, steady at about 4.6%, because inflation data later this week will be core in deciding where that goes. And, crude prices also cooling off. Once again, the question of what is the inherent next trigger for crude if you can see such a pullback in just a couple of days. I want to just pull up Asia, and Asia is looking like, a mixed trade as far as Shanghai is concerned, but overall not too bad. Our implied open is also showing that you might start in the green today, not with the big gains of yesterday, but definitely overall a positive mood. Quick look at the fund flows, and DIIs bought about 3,500 crores yesterday. FI sold 2,900 crores, but remember, you had a good day. Samina, the big one, of course, in terms of stocks would be Reliance to watch out for after the results yesterday, and overall better than what the street expected, except for retail, I would say.
Slightly better, and the brokerages seem quite enthused. But very quickly, while we were talking about other asset classes, a quick word on gold, and I think this is important because it gives you a sense of risk aversion worldwide. Gold prices are off about 2% in overnight trade, which clearly means that there is easing risk aversion, and risk on could very categorically be back on the street. Like we've discussed, the global cues are looking good. Implied Nifty is off to a positive start. There will be some more buying that's expected in the early hours of trade today, but in order to conclusively say that the market leg down is done with, we will have to build on those gains that we've seen over the last 2 days of trade. That's pretty much what the broader setup looks like, but Big Daddy RIL has reported numbers largely in line with expectations, a marginal upbeat to say the least. The ONC business is the clear driver for Reliance Industries. The stock may not see very sharp moves in today's day of trade. Remember, it is a big one. And if we do see, you may get a slight gap up, but whether or not it has a big rally is anybody's guess. We will try and understand from analysts over the course of the next 2 hours whether there's any trading opportunity for traders on RL this morning. Well, in terms of earnings, their revenues were up 5.6% Q on Q. Operating profits were up 4.6%. Operating margin stood at 18% versus 18.06%. The board has also recommended a dividend of 10 rupees a share. In terms of a segment-wise breakdown, oil to chemicals revenues were flat, up about 1%. Higher revenue was backed by better realizations for petrol and diesel. EBITDA came in at 19.3%. Driven by a sharp rebound in gasoline cracks and strong results despite challenging margin improvement. Fuel cracks fell about 20 to 25%. In terms of what brokerages believe, Nuvama maintains a buy with a 3,500 rupees target price. You've also got a couple of the other ones like Centrum that continue to remain constructive on RIL. So good numbers. A couple of standouts. ONC is the one that has actually driven earnings for this one in this quarter. Well, apart from that...
Samita, just one thing. I just thought that most of the notes summations seem to be that while the balance sheet is improving and all of that, a tariff hike is necessary for Reliance to make the next move. It seemed to be the case. So one is this whole listing of newer businesses that will happen, whether it's geo platforms or retail, but two, a tariff hike on the anvil. And I wonder if indeed that is the driving force for Reliance as well. And if we indeed look at a tariff hike,
for the sector.
Yeah, for the sector, what happens to a Bharti and a Vodafone? Yeah. We'll talk about telecom in detail, but I thought most notes said that tariff hike very necessary.
In fact saying that the lion's share of the push-up for Reliance is going to come from a geo because of those tariff hikes. I don't know. The optimism for those tariff hikes is... I don't know, maybe a bit misplaced. I'm not sure if there's going to come to that extent. I've been hearing about it for a while. What happens if they don't come in? Then becomes the scary sort of situation.
Indeed, it's definitely not going to work for the likes of a Vodafone. At least that's what we know, because they've been losing market share. So even if you have an increase in hikes, counters like Vodafone may not stand to benefit too much. Apart from that, two others that I seem to have got drawn to is Hudson Agro. I mean, those numbers are very impressive, to say the least. Revenues were up 14.4% to come in at 2,047 crores. So that's a good set of numbers coming in from them versus 1,789 crores. EBITDA was up 47% at 230 crores. Margins have also improved substantially, 11.21% versus 8.74%. And net profit is up a whopping over 100% to report at 52 crores versus 24.98 crores. We will connect with Hudson Agro at some point in the day to get a sense of what drove the numbers and what's the outlook for the company going ahead as well. Along with that, it's been a disappointing quarter for the likes of Mahindra Logistics. Once again, a disappointing quarter. They've had a very subdued year. In fact, they do have a glide path to 10,000 crores for FY26, but nowhere close to it for now in terms of Mahindra Logistics. While the revenues have come in higher by 14%, EBITDA once again is down 11.5%. Margins continue to compress, so they were standing at 5% in the same quarter last year. This time around, coming in close to 4%. Express Logistics has been the pain point for Mahindra Logistics, and remember, while you are seeing margins not looking too bad in the other businesses, it's a tough one. Like the way we see it. Well, they've also reported a net loss of 12.85 crores versus a loss of about 0.8 crores in the previous quarter. So it's tough. They've recommended, interestingly, a final dividend. But what lies ahead for Mahindra Logistics will be interesting to note, whether or not things are looking up for the company as we enter into FY25. But yeah, this year has been very, very rough. No surprises there.
You know, in terms of numbers to watch out for, I would look at a Tata Consumer. For one, the stock closed pretty decently yesterday as well. And though that entire pack is fairly muted, look at the kind of run-up Tata Consumer had yesterday, up 3% ahead of numbers. So suffice to say, what is being expected, revenues and margins expansions are being expected. The estimates which we've put together are expected to grow with revenues of 10% upwards. EBITDA is expected to grow 20% year on year, margins at 15.3%. So you could expect pretty decent numbers from a Tata Consumer. Net profits also expected to grow 28%. Easing raw materials could help them this quarter. And even though the rural demand languishing sort of story continues, but Tata Consumer seems relatively decently placed. So that's one that I would definitely watch out for. You've already seen an up move yesterday. Vodafone, you finally know the price that is out, 11 rupees. Is what has been finalized. It was subscribed finally about 6.5%. The retail investors, after they pegged it to 11 rupee price band, did finally, that segment also did finally get subscribed fully once. We'll wait and see what happens in the stock today and whether there's a further downside. Remember, the last 3 sessions, Vodafone has been closing down. Even as the IPO has been on. Tejas Network is another one that I wanted to talk about. I found this interesting because, again, a turnaround story, at least from what their Q4 numbers are showing. So their revenues have gone up substantially. So you've had nearly a 343% jump on revenues. Their EBITDA has gone to 306 crore rupees versus a loss of 8 crore rupees. So margins at 23% and net profit also at 146 crores versus a loss of 11 crores. So, you've seen already the stock doing fairly well yesterday, but in terms of a turnaround story on basis of numbers, you saw how Sterling and Wilson perform yesterday. You might see an interesting move on Tejas today, or maybe a sell on news, but Tejas is definitely an interesting number to watch out for.
Yeah, the stock itself was on fire yesterday, 17%, big volumes as well. So whether it's buy the rumor, sell the news is going to be something I'd like to see.
Yeah, but just the quantum of the business that they are in, the kind of numbers that they've posted doesn't seem like a sell on news, to be honest.
I hope so.
Yeah. They've been talking a lot about this linearity of growth going ahead as opposed to it being lumpy. Let's wait and watch how it shapes up. But certainly a stock that should be top of radar. Just before we talk about some of the other stocks, I thought and before my 3 stocks, I'm just saying M&M Financial is a really interesting development for a company to defer their Q4 numbers because of a fraud detected with regards to KYC documents. I mean, it's quite something, and you would probably see an impact coming on M&M Financial in the session today. Because every single time you think that there is stability coming in numbers, etc., there's an issue or two that keeps on cropping up for this one. I mean, you just look at the last 4 or 5 years, the stock has been steady between this 200, 300, doesn't go anywhere while the other NBFCs do what they do. And now this, having to defer the numbers because of a fraud detected, which was not detected earlier.
To the tune of 150 crores. I mean, that is a huge fraud. So while it sounds like it's a big deal to defer earnings on back of that, but with a quantum of 150 crores, you might have to take a break, take a step back.
Can I tell you what was the most frightening part for me? Of course, bad for the company, the numbers, the stock investors. The fraud is embezzlement of KYC documents.
Yeah, that's what
and forgery of KYC documents. So that
and hence the fraud
becomes scary for vehicle loans. No, it's because all of us give KYC documents constantly for everything all of the time. And the fact that there can be forgery and embezzlement of this, size is what is really worrying on all ends.
Yeah, so M&M Financial, and we should pull that stock up. We've already done that, but just watch out for that one. Now, to some other stocks. So, Piccadilly Agro could be an interesting one in the session today. It's a small stock, but revenues up 39% at 282 crores versus 202 crores. So watch out for that one. 39% uptake is okay. I mean, not as great as the Tejas Networks, but not bad. But then you look at what they've done on the operating line and they've on the PAT line. Operating profit margins at 22.82% versus 4.89%. Clearly people are having Indri whiskey by the dozens, it's seemingly. And PAT, as a result of that, over 8x jump in profit after tax at 43 crores versus 4.97 crores. We'll get the management today exclusively on NDTV Profit between 9 and 10 a.m. at some point of time. So you might want to tune in for that. But this certainly seems a stock which was up 5% yesterday, yes, but could react further to these numbers today as well.
And Neeraj, with this one, of course, that was a similar play out that we saw last quarter. Their numbers were a clear beat. The stock did really well. So I think they're notoriously getting famous for outperforming the street and doing really well. So alcohol clearly is the piece.
Yeah, and you know, they've done 110 crores as profit for the year. So therefore, optically, current earnings, it trades at 45 times. But if they manage to do this 45, 50 crores for the next year, hypothetically, if they do, right, then the stock valuation actually halves from 46 to 23 times for a company. Assuming that they do, we'll ask the management all of that, but assuming that they do, then it's a stock trading at 23, 24 times for a business growing at whatever times. So people might just see reason for that to continue as well.
And
so it could be a very interesting
discretionary spending, which is a sweet spot for Indian consumers.
And I think the point that you made, you have one blockbuster sort of a product when you talked about Indri. Yeah, and that can, you know, sort of perceptionally also change things.
Yeah.
So,
It's got one more to add.
Sorry.
Go on.
No, so just one was Piccadilly Agro. I thought Indraprastha Medical could be interesting because Quant Small Cap Fund has bought about 5.5 lakh shares at 249. These days, Quant name getting associated does evoke responses. Let's see if there is some reaction there. And lastly, guys, I know we've spoken a lot about Jio and the fact that, and we'll talk about it in detail, but telecom is in news for multiple reasons. Vodafone, FPO. I mean, yes, people are quibbling about the retail portion not getting subscribed. Look at QIB. 18 times on that size.
That's why I put it on my radar. I think Vodafone is definitely going to be an exciting one.
But this is what I want to understand. So you've got oversubscribed from HNIs and institutions. Retailers haven't taken to this. Does that mean that on listing of this, in that sense, you will see heavy selling because HNIs will come and dump the stock, right? No, but, it could be a gain that you've gone into because it was a discount, made that couple of rupees. See, this is not sticky money, right, at the end of the day.
Yeah, but I would presume that if the QIB book, which has been heavily subscribed so much, and there is so much of anchor book allocation that was done as well.
So barring the anchor book, I'm going to keep the anchor book out. I'm talking with the HNI subscription.
Could happen.
Retailers haven't taken to this, surprisingly.
So, again, you don't.
There was a fair amount. I'm not anti-Vodafone idea, guys. I'm just trying to understand because retailers did not catch this wave.
There was a fair bit of retail participation in Vodafone for a while. It's been a favorite of retailers.
Then why not pick it up at a discount?
Maybe.
I mean, if something looked good to you at 15 rupees, it should look great to you at 11, I'd imagine. Right?
At the end of the day, comparatively, retailer portion.
Now, this was an interesting angle which Sajit actually brought to my notice, and he said if retailers haven't gotten lock, stock, and barrel, HNIs will come out and dump this counter, and that's what's going to be interesting. So, barring the anchor book, of course, which is sticky, we'll have to wait and see. We'll have to wait and see what is going to happen for Vodafone Idea. But yeah, the stock today could be one to track.
Vodafone, and as a result of that, and I'll talk about it in detail, of course, but Indus Towers too.
Yeah, Indus Towers is an upgrade. I think that's a good play. The stock has done exceptionally well as well. But Rallis India, let's quickly get that one up as well. Those earnings, I'm not sure how we are viewing this one because while their revenues are down 70-odd%, its EBITDA came in at 6 crores versus a loss of 64 crores. So I think that's what is staring us in the face. Their export business is continuing to see a sharp decline. They remain focused on improving their market position through superior product offering to solve farmer needs, like they say. But the investments that have gone behind marketing, manufacturing, and digitization is what had led to that sort of loss being posted. But the company does expect that the catch-up will take place over the next couple of years. Margins at 1.37, I'm not sure what the comparables of those are, but for now, it doesn't look like much a story to tell. Revenues have dropped and lower prices and weak global demand could keep the tap on revenues. So, but I think the positive takeaway is that the EBITDA has actually improved and that may lead the stock to reacting well for now at least.
So Rallis, definitely one on your radar. I would just talk about a Honasa as well. Honasa already with that up move, but you have a Jefferies note which has retained a buy with a target price of 590 for a Honasa right now. That's for a 404 rupee stock. So an upside potential of 53%. They like the management focus and agility. The Derma company is the trigger because you've had a big bump up in the Derma company, and they say it's now comparable in scale to popular FMCG brands like Pantene and Sunsilk. The offers active-based products garner leads 20% share. So I would say growth over profits focus of Honasa is something Jefferies likes. The stock was already 4.5%, nearly 5% up yesterday. You might see another upside today. That's one worth watching out for. Neeraj was talking about Indus Towers. CLSA has a note out today. They've upgraded to a buy, revised the target price to 450 from 335, so further upside of 28% on Indus Towers. And time and again, our analysts have come on the channel and said that rather than a Vodafone, you might as well do an Indus Tower if you want to, have a better play on this. So the past due settlement is the entire play over there. Indus Towers is one maybe we should watch out for as well today on the show.
Just very quickly, Neeraj, and I don't know whether you've been tracking this. Capital market stocks, anything happening there? Because you've seen from your 360 WAM, Angel One, asset management play, UTI Asset Management, Motilal Oswal. Anything that you've heard from
yesterday
experts
too,
on the street? I'm just finding it very surprising that all BSE as well actually did quite well yesterday.
Yeah. No, yesterday too, all of these stocks were doing well. I was so incidentally post-market hours I met somebody who looks at this space very closely.
Yeah.
So for each of these customers, the call is that there's a story of annuity businesses, sticky annuity businesses looking good. So for Nuvama, amongst everything else, 20% of their book is this custodian business, which is very, very sticky. They started it 3-4 years ago or thereabouts, and that business has grown from whatever they started off with to currently AUM of close to 70,000 crores. And that's a sticky business, contributes to 18% of Nuvama's overall pie. So that is for Nuvama. For Motilal Oswal, the wealth business, for Nuvama, the wealth business, but for Motilal, the wealth and the asset management business, as opposed to the broking business, adding a very sticky annuity pie. Similarly, for 360 WAM, the distribution piece is so solid for them that almost every AIF or a PMS would have them as one of the distributors, and therefore that piece as well. And we know what's happening with BSE or CAMS, etc.
But you talk about this distribution and this wealth business, which is largely where the valuation game is coming for, because we've seen the likes of a Centrum or a JM who've not focused on that, and you've seen the businesses struggle. They've not got the premium that they've been seeking. But what also is interesting is that you've got a number of new unlisted players in the wealth business, right? Despite that, it's not coming in at a cost of the big daddies losing market share.
It's certainly not.
So I think with Angel One, of course, while the profitability wasn't great, the focus of the industry clearly is to win market share, focus on revenue, and build and profitably. Then I guess
and an expiry every day, Samina. Expiry every single day. Look at the volume.
My question is, how do you win market share when the moat is so low? Everyone has pretty much the same product. How do you get customer loyalty? I think it's an interesting sort of and a very tough fight right now.
But also sticky, right? If you've gone to a broker, you largely stick with the broker. Largely, no point to change.
Unless
you have a bad experience.
And financialization of savings, right? So I mean, you're going to increase your wallet share. I think it's about that hook. Once you've got that client in wealth, the money just keeps flowing in, and I think that is reflective of the way the market's participation has been from domestic players as well. But interesting play. I think I'd be very intrigued to try and understand more about the capital market sector. For now, it looks good. It's had 4 straight days of gains. Let's see what happens today.
Okay, let's now try and focus on Reliance Industries. That's the big one as well with the numbers. Remember, it's a big day for results today, but yesterday amongst the big daddies, it was Reliance. Reported numbers in line with revenues while profit beat the street estimates. Let's bring in Mihika, who gets us more details about the scorecard and what brokerages might be saying. Mihika, good morning.
Good morning. So numbers were backed by strong performance in the oil to chemical and the consumer segments, which both saw double-digit growth. Revenue was up 5.6%, EBITDA was up 4.6%. Operating margins did fall 8 basis points, were in line with estimates, and net profit bumped 8%. When you look at the segment-wise performance, first we have oil to chemicals. Sequential gain was 1%, but it was up 11% year-on-year in terms of revenue, and this was on better realizations for petrol and diesel. EBITDA was up 19.3%, and this was driven by sharp rebound in gasoline cracks. And the results, strong results, come despite a challenging margin environment where fuel cracks fell 20 to 25%. Onto the oil and gas, revenue was up 42%. EBITDA also expanded 48%, and the higher EBITDA was mainly driven by production growth, around 66.4% 4% rise in the KG D6 block production. And on an annual basis, oil production was up. However, gas production was down 5%. We had Nuvama, which maintains a buy at a target price of 3,500, which implied an 18% upside. And they stated that the OTC or the gas accounted for 65% of the consolidated net profit, and the EBITDA growth was on better crude sourcing, which is from Latin America, according to the investor presentation. And that Reliance is also at a unique advantage due to the 23% annual dip in ethane input prices. And they also envision the new energy rollout to take place and to be the next leg of growth for the company. Then we had Jio Platforms, revenue up 13.4%, mainly led by subscription growth and a better mix of average revenue per person, which was stable at 181.7 rupees. And lastly, Reliance Retail growth was mainly led by the consumer electronics, fashion and lifestyle divisions, where revenue on a consolidated basis for the retail segment was up almost 11% on an annual basis. And lastly, 562 new store additions with the gross area addition of 7.8 million square feet.
Okay, Mihika, thanks a lot for that. Just an offshoot of what happened in Reliance is what happened in Jio. And amongst everything else, analysts are now saying that in the calls that have happened with Jio or Reliance, as the case may be, Jio thus far has been putting up the posturing that they do not want a tariff hike. Now they're coming out and saying that tariff hike might be on the anvil, or they are open to a tariff hike. Now, that's the point that brings telecom firmly in focus. For Jio, and forget Reliance, but Jio in particular, the results that have come in, and if there is a tariff hike that comes in at some point of time in the next 3 to 6 months, what does it do for the whole telecom space? One, for Reliance is a positive. So because Jio is such an integral part of Reliance earnings now, and going ahead over the course of the next 2 or 3 quarters, can Jio be the big thing? So that is one for Jio. Then, if that indeed happens, I mean, for Airtel, they've been crying hoarse about the need for tariff hikes to come in, and almost everybody would say that Airtel is the best place to benefit out of a tariff hike if it were to come in. It brings Airtel firmly in focus. It brings Vodafone in focus because Vodafone, 2 aspects. One, now that the FPO has gotten over and they have the money and they'll raise debt, they'll be able to deploy 4G, 5G, which they have not been able to do capex for earlier. And that would mean a clutch of customers, which are currently 2G customers, move to 4G, and therefore the incremental beta for Vodafone in terms of ARPUs is probably the strongest amongst everything else, purely by virtue of this coming into play. And if Vodafone gets the necessary muscle to be able to repay the dues to Indus Tower, then Indus Tower comes firmly into play, which is possibly the reason why we've seen an upgrade today as well from CLSA and upgrades from multiple other brokerages over the past few quarters. Yes, the stock has seen a bit of a ramp, but a steady Indus Tower with maybe Bharti and Vodafone paying off their dues in equal measure, Vodafone particularly so, would mean that even for Indus, the going might be good. I dare say for the next 6 to 9 to 12 odd months, telecom might be one sector that you want to keep a keen eye out for.
You know, Neeraj, you talked about Indus Tower, and this is where I am a little stretched. I'm not sure what the CLSA price on the stock is, but the counter in the last 1 month itself is up to, oh wow, that's another 100 rupees from these levels. The last 1 month it's up 25%. The last 1 year the stock has done about 150. And there's also talk about an MSCME inclusion on Indus Tower. So things clearly working out for the counter. But yeah, 450 is not just ambitious, it's actually a pretty solid target on the counter. I wouldn't be surprised if it's another morning of a 10% gain on Indus Tower.
For Indus, definitely. But my only point is that when everyone is going to increase tariffs, everyone's going to ramp up. You have a Jio on one end, a Bharti Airtel. Vodafone might be do better than what it's doing right now. So in relative terms, there may be an improvement. But in that big picture, after a point in a 3-player market, are they really in a position to be a third player which gives a tough fight to the other two? I'm not very sure about that.
Deepak Shenoy, I think, said this on our channel, and again, disclaimer, I am not against Vodafone Idea in any way, but he did say that they've gone out and raised this huge sum of money, but they'll soon run out of it, and then what's next? So you keep you keep raising funds, but if you don't fix the house, it's only going to give you that much of a runway.
On this point, I second that concern.
From, of course, an analyst who tracks the stock. But yeah, nevertheless, worth a mention.
All right, time for a very quick break. But we'll come back with all things F&O after the break. So much more to discuss on what's going to be an interesting morning. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa.
Welcome back. You're watching India Market Open and it looks like it's going to be another positive start for the street. The bulls clearly in control. The last stories have been good. The Nifty closed about 22,300. We will attempt to get to 22,500 and of course in order to indicate that we've ended the interim selling on the street, we will have to see follow-up buying and sustainable buying in today's day of trade. Implied Nifty indicating to a positive start, no runaway rally. Remember, Asian markets aren't doing too badly. The handover from Wall Street was pretty solid, but they were of course weak for the last 7 days. And we've already eked out some of those gains. Well, that's Asia, so that's of course what we'll move on from. In terms of Nifty futures, there's a marginal premium. The Nifty futures currently trade at with a 22-point premium. Open interest seeing a marginal decline. Bank Nifty was the star of yesterday's trade with private and PSU banks both doing exceptionally well in trade, and that's reflective of what we're seeing on the screen. Nifty Bank futures traded a 65-point premium and open interest has seen a decline of 16%. In terms of the distribution of calls and puts, what you're really seeing is maximum call OI was seen at levels of 23,000. That of course was followed by levels of 22,600 and 22,500, clearly indicating that those are going to be two very important levels of resistance that the bulls will be facing in trade. Maximum call OI addition was seen at levels of 22,200 and put writing was seen at 22,000 like you can see. So that becomes a very important level for the support for the street at 22,000, followed by 22,200, and you've also got 22,300 that saw a little bit of call put OI being added. Well, you've also seen an improved PCR ratio which now trades over 1, clearly indicating that we've seen more puts options being bought than call options, indicating a fairly bullish sentiment on the street. A bunch of stocks are in the F&O band, so you want to watch out for those too. Be mindful when you go out and trade. Counters like Hindustan Zinc are out, but others have actually been added to that list. Well, that's what we have. If we can pull up a few stock, okay, I guess we've got Amit Goel who we're going to connect with to get a sense of what today's trades are. Amit, good morning. Thanks for joining in. 2 straight days of gains. It seems like we're in control. Maximum, of course, call OI is at levels of 22,600, assuming that's one attempt that bulls will be making over the next few days.
Yeah, hi, good morning, Samina, and good morning to all your viewers. Yeah, the market has been in a tearaway rally, taking support from higher time frame support levels of 21,800 odd levels. we had when we met last, I had kind of anticipated that we would have a little bit of bearishness last week, but it's essentially a buy on. It's a structural bull market, and it's going to be a buy and dip kind of a scenario, which kind of played out. And I see that 22,500 could possibly be attempted in this expiry. But I will refrain from giving a trade view on Nifty, since this is a regulatory obligation that since I trade in Nifty, I will not be able to trade, give a view on that, trade on that. But I can, give a view and a possible trade setup in Bank Nifty. Bank Nifty has been leading the rally, and we have had a very smart pullback from the low levels of 46,500 odd levels. Even here, both the structures look fairly similar. It's structurally a bull market. It's a buy on dip sort of a market. 48,500 could possibly be an attempt if the call unwinds. The call open interest unwinds at 48,000. That could be a possible trigger. So the kind of view that I'm looking in Bank Nifty is that if we see a change in open interest getting reduced for the 48,000 call, I would attempt to buy a simple call for the next week's expiry, that is the 30th April expiry. I will look to buy the 48,000 call for about 470, 490 rupees, keeping a rupee stop loss of about 3,000. And initial target would be about 3,000, and we can trail for bigger profits if we eventually have a tearaway rally continuation. And that's the view on Bank Nifty.
Right. Amit, so you're constructive on Bank Nifty. I believe you've also got a bull put strategy on ONGC. For our viewers, a bull put spread strategy is when you're expecting a moderate rise in the price of the counter. You want to take our viewers to that, Amit, as well?
Last time also when we met, I continue to have a bullish view on ONGC, since technically speaking on the daily time frame, it is trying to give a breakout from a triangle sort of formation. Even on higher time frames, it is a structural bull run sort of a counter. So what I would like to do is I would like to take a longish view for the next expiry, wherein we can construct a bull put spread. As you said, it's a bullish expectation, wherein I would look to sell the 270 put of the May expiry and not for day after tomorrow, and buy the 260 put again of May expiry, where the max profit, the theoretical max profit stands at 13,000, and the max risk, which is on expiry, stands at 25,000. But we are not really looking to incur all that. If the view goes wrong, we will again keep a rupee stop loss of about 3,000. And we will aim for a similar target of 3,000 and trail for higher profits. That's the view on ONGC.
So you're selling a put at 270, buying a 260 put, one lot each. You've got a limited profit or limit gain to be made on ONGC. ITC, I believe another constructive call there too, a bullish one on ITC, Amit?
Yeah, ITC has been taking support from 400 levels and has been smartly moving up. But it has also been facing resistance at about 430, 440 levels. So I kind of, see a fairly range-bound view on ITC. But on a smaller time frame, it has kind of given a slight bullish breakout. So what I'm looking to do is try and capture this, expected up move in ITC for the next couple of days. So here I'm looking to construct a call butterfly, which is for this current expiry. We could look at entering this. It is a limited profit, limited risk trade, wherein we sell a straddle of 430 call and buy wings at 425 and 435. Again, all calls. So the max risk in this trade, the theoretical max risk itself is about 2,000. So it's a very, very safe and limited risk trade, where if we are able to pin the expiry at about 430 or levels, we could look at making some profits of about 6,000 rupees. Though I would like to trail again at about 3,000 rupees and then trail for higher profits. The margin in this would be about 71,000.
Right, so it's limited profit, limited gain, but what you essentially, Amit, is recommending to do is to buy 2 calls and selling 1 call, and your profit could be up to about 6,000 per lot, and the risk, of course, there's a downside as well of about 2,000 rupees. Amit, very quickly, I know this is not part of your list, but a quick word on Reliance Industries. Is there any trading opportunity there today for traders? Any options there that you'd be looking at, doing?
let me just look at the chart. Yeah, Reliance is, I'm structurally bullish on Reliance. It has a similar meet as ONGC, but it has not yet given a breakout. The results, I'm a little concerned about the large cap stock results because they have not been really beating the estimates. They have been fairly, if I could use the word, underwhelming, right? So it really remains to see. It needs to be seen as to what it could do in the next few days. And I would probably look to take a bullish punt on Reliance for the next next expiry, provided it crosses 3,000 levels. Fairly bullish on the counter, but we need to see how the reaction goes with respect to the results.
Thank you for that, Amit. So that's a constructive call on Bank Nifty, on Reliance Industries, ITC, and ONGC. And it's back to you guys in the studio.
All right. So the other big story this morning, of course, that we're tracking is M&M Financial. So they delayed their earnings board meet, but the reason they delayed it is the important bit. This is after 150 crore rupee fraud at a Northeast branch. Now, what is this fraud and why was this concerning enough for them to delay their board meet? What is the impact on the financials of the company? Harsh is joining us for more on this. Yes, Harsh.
Well, Tamanna, you've pretty much said it, 150 crore in terms of quantum. But let me try and delve into what the cause of this is. It's in the retail vehicle finance portfolio of M&M Financial. So that's the first piece. The other one is with regard to a specific branch, and the reason for this is fraud with regard to forged KYC documents, which has led to embezzlement of company funds. 150 crore is the quantum. One is it's sentimentally negative. It brings down investor confidence in the company. The other one is also with regard to could there be possible other exposures within this branch which have not yet come out, or other branches. Could that risk percolate? That's the other one. Those are some open-ended questions, of course. With regard to the 150 crore itself and the quantum, when I'm looking at the profit after tax expected as per all analysts average on Bloomberg, it's around 690 crore. So, and this is Q4 profit after tax number. So the 150 crore number looks quite large in terms of the knock on the Q4 number, which is likely to happen when the results do come out. So maybe 20% of the profit will get erased just as a result of this particular issue cropping up. The other one is with regard to the provisions number. The provisions number was expected to be around 120 odd crore in this quarter, in Q4. So this will actually, if they were to provide for this number, it will ensure that provisions actually double up or more than double. So that is the other concern. So credit costs will actually spike up. Credit costs were expected to be around the 0.5 odd % mark as per Motilal Oswal estimates, and that number will likely go up to over 1%, and it will also have a knock-on effect on the overall FY24 credit cost or provisions number. The provisions number for FY24 as per Motilal Oswal estimates was supposed to be around 1600 odd crore. So 10% knock on that one as well. So likely, one, sentimentally negative, two, it's a decent-ish material number with regard to the FY24 overall numbers as well. So keep your eye on the stock, definitely an impact on this one.
Okay, so you're definitely going to see an impact, but perhaps more than just sentimentally. Also for a financial firm, if you can't keep your data safe, so then that is it's a big issue in any case. So Harsh there with all of those details. Meanwhile, Sunny Agarwal joins us today. He's head of fundamental equity research at SBI Cap Securities. Sunny, very good morning to you. Let's first start by getting your take on Reliance. What would you do with Reliance today? That's, I think, will it turn out to be the big mover this morning?
Yeah, good morning, Tamanna. Thanks for having me on the show. I think a very decent set of number from the Reliance, especially on consumer business side. So retail, telecom business, both continue to do well. Oil and gas business has been one of the star performer, led by increase in gas production from KG-D6 basin. I think one thing is pretty sure that looking at the number from the consumer business, very soon we will see an demerger and listing of the consumer business, maybe 12 to 18 months down the line. and that can be one of the value unlocking moment for the Reliance Industries as a whole. At the same time, what I like about the Reliance is that maybe 3 to 5 years down the line, the new energy business which Reliance is incubating on hydrogen, solar, and wind side, even that will become a pretty robust cash flow generator maybe 5 years down the line. And with the telecom business capex at the fag end of the cycle, I think the debt should peak from here on and cash flow should improve. So I think I would be buyer in the Reliance with an expectation of kind of 12 to 15% CAGR return over the period of 2 to 3 years.
Okay. Sunny, we were just talking about the extent of, actually, can I just extend that first argument to telecom per se and then talk about M&M Financial? But since we are talking about Reliance and telecom, Jio is showing the willingness to hike tariffs at some point of time. Assuming that tariffs, I mean, what would the hypothesis be? Would tariffs go up and therefore is Jio or Reliance a principal beneficiary? Would you believe Bharti will be the better telecom stock to play, or because Vodafone has now gotten the FPO out of the way and money in the bag, is Vodafone a prime way to play, or would you not play any of these and maybe go for Indus Towers?
So I feel that the entire telecom industry is in sweet spot because we all know that now earlier it was 2.5 player industry. Now with Vodafone back in the fray, I think it's a 3 player industry, and I think there is a pretty long runway in terms of likely increase in ARPU from here on. And time and again, we are hearing from the various management that from Bharti even that post-election we may see kind of 10 to 15% kind of tariff hike directly, indirectly through maybe chopping of the packages which are at the lower end, forcing consumer to migrate to the higher end packages, and there is a natural inclination to move towards the higher ARPU range because of the increasing consumption of data packages as you migrate from feature phone to smartphone, as well as within smartphone as you migrate from 4G to 5G. I think 2-3 years is the period where we may see a consistent improvement in ARPU, and it will be beneficial for all the 3 players, whether it is Vodafone, Reliance, and Bharti. So overall, we are bullish on a telecom as an industry. And at the same time, with the Vodafone issues, funding issues behind us, I think Indus Tower is also a good play to ride on from a short to medium term perspective.
Okay. Okay. So watch out for these. We'll talk about M&M Financial as well. Actually, we've discussed in great detail between us, and Harsh has come in and given us a sense also of what could happen there. So keep an eye out for that stock too. We'll talk about it in detail. Let me first get in Aditya Agarwala, Head of Research and Investments at Invest for EDU as well. Aditya, quick view, trending day yesterday. Does it mean that there could be more upsides? Good morning to you, of course. Could there be more upsides today on the Nifty? And couple that up with your stock ideas for the morning.
Good morning, Neeraj. Thanks for the show. Markets have seen 2 days of rally, as you mentioned clearly, and now we are sitting at 61.8% Fibonacci retracement level of that entire correction. So I'll closely look out for that resistance of 22,390, 22,400 on the upside. If that is not taken out, Neeraj, today, I believe market could be in for a bit of a profit booking as well. 100, 120 point correction cannot be ruled out. On the flip side, if bulls manage to drive the markets beyond that resistance of 22,400, then I see another 100, 150 point upside on the markets. So we are clearly at the midpoint of that range in which markets have been oscillating. So 22,400 is something that I closely eye and trade today. SGX is suggesting a positive open. So let's see after half an hour of trade, if markets do manage to take out 22,400, then I'll be a buyer in the market for at least another 100, 150 points. But again, having said that, markets are locked in that range on the upside. 22,700, 22,800 will be the major hurdle. Now, coming to some stock-specific ideas, I've got a couple of buy recommendations for viewers. The first is Aditya Birla Fashion Retail. ABFRL stock has shown a decent strength of late after a good up move. Their stock went into a sideways consolidation, and in trade yesterday, it's again broken out from that flag pattern on good volumes. So I believe at current levels makes a good buy for a target of 265 with a stop loss at 226 on the downside. The second stock recommendation is Divi's Lab. Again, Neeraj, the pharma space is looking interesting now again. And Divi's is something which has taken support at the 200 DM, and from there it's popped up again yesterday. So for a target of 3950, I'll be a buyer in Divi's Lab with a stop loss at 3650 on the downside.
Aditya, good morning. You talked about a Divi's lab, but there are others in the pharma space that have been really on an up move. Lupin, Zydus, any of those that you like or you're putting on your radar?
Oh, yes, morning, Tamanna. Definitely. So a whole host of these pharma names are looking interesting, no doubt about that. If I have to pick a couple of them, maybe Dr. Reddy is also looking interesting to me on the charts. That can also be looked at apart from Zydus Life. So these are the two stocks which I like. Talking of Dr. Reddy's first, I think stock can easily test levels of 6,400 on the upside with a star support at 5,800, 5,900 on the downside. Zydus Life too, after yesterday's good up move, I think stock is showing strength and can see levels of at least 1,100 on the upside with a downside support at 900. So makes a good risk to reward as well, Zydus Life at current levels.
Aditya, very quickly, some of these banks had a pretty good run yesterday. PNB, Bandhan, Axis Bank, SBI, Bank of Baroda. I mean, the whole host, private and PSU together. Any constructive calls on banking names today? I mean, HDFC was not much of a performer. Do you think they could play catch up today?
Morning, Samina. I still believe there's a better chance in the mid to smaller cap banks, be it the PSU or the private sector banks. As you mentioned, Bandhan Bank yesterday was looking interesting. RBL Bank is also something which caught my eye yesterday. It's almost on the verge of a breakout from a falling channel. And the moment it crosses levels of 260, which is the immediate hurdle for the stock, if it does so in trade today, Samina, I believe RBL Bank would be one of the banks to eye and can easily test levels of from here 275 to about 290 on the upside. So it'll be more of a positional trade in RBL Bank, and I easily see levels of 290 coming in about a month's time with a good support on the downside at 240, 245. I think RBL Bank is something which traders and investors should definitely look at. Has been an underperformer, but I think now it's time to look at our RBL Bank. And apart from that, maybe from the PSU space, I'll stick my neck out and hold SBI. Which is looking interesting after yesterday's up move. I think SBI is still looking good on charts. Can easily test levels of 800 on the upside. So SBI will be the second bet from the PSU space.
All right, SBI is second bet from the PSU space for Aditya, but let's focus a bit more on Reliance, the big numbers which were out yesterday. A beat, at least on the consolidated front, maybe retail left a little bit to be desired. Sushil Choksi joining us now. He's CEO at Indus Equity Advisors. Good morning, Sushil. Great to have you on NDTV Profit. Let's begin with your take on Reliance. Were the numbers as per your expectation? And as a lot of brokerages are saying, is your focus now on how Jio is going to scale up perhaps post-tariff hikes?
Good morning and thanks for having me on the show. I think the result was in line with the expectation of the street. There were some positives like oil to chemical, oil and gas. Retail was flat to marginal negative, and that is because of the seasonality coming from festive season in the previous quarter. Reliance Jio is still in making because they have not yet charging for 5G, and the ARPUs remain at 182. The scaling up based on all the services which they pan-India want to start, starting from home service and others. I find that ARPUs have to go up to get a better realization. So currently, based on the consolidated level, the numbers look stable. Most of the throughput, specifically on oil to chemical, the throughput at 78.2 million is the highest in last 5 years where refinery is concerned. And petrochemical is stable based on the current regime. You know, India is more Reliance is more a story of India growth because everything what they manufacture is touching a consumer end to end, whether it's retail, Jio, or plastics, or petroleum products on domestic or international, being the largest exporter. So I think it is, if Indian economy is growing at what it is, and our aspirations are 5 and 10 trillion, the business is what they are and likely to grow. So you have to take a proxy based on what the GDP number is and estimate that they will grow somewhere around 2 times like you estimate on banking credit.
Okay. Sushil, good morning. One quick word. Almost everybody seems to be penciling in that it will be telecom which will drive the next leg of earnings growth for Reliance, demerger, etc. notwithstanding. To your mind, what is that biggest trigger for Reliance going ahead? Would it be a tariff hike, or could it be the IPO / listing of platforms and retail separately over the course of the next 12 to 18 months?
If you look at historically, IPO has always given, or a listing on the new division, whether it is Geo or retail, will give a bump up. It is evident from Geo Financial listing, from where it got listed, it's already a double. So based on that, it's definitely a listing of Geo, which will have a positive impact. But ARPU is definitely, Sunil Bharti Mittal is continuously talking about 300 rupees in times to come. So just estimate if current margin of 50 to 53%, which they are hovering every quarter on quarter, if ARPU is increased by 25-30% over a period of 2-3 years, because the amount of consumption the Indians are doing at a consumer level on each mobile set or while traveling or watching movies or whatever, and the commercialization also is going to be positive. So I think telecom is definitely a driver, but equally the market gives the consumer business, that is retail as well as Geo, separately listed, would have a game changer where Reliance shareholders are concerned. And oil to chemical and oil to gas remains a stable horse in terms of providing the cash flow to deleverage the balance sheet. So whether it's the AGM or 28th of December, I don't know when the listing announcement will happen, but it seems that telecom is on showing some signs that it will be listed first.
So Samina joining in. Very quickly, how much of all this is in the price? Would you recommend buying RIL at levels of 3,000 for the next 1 to 2 years?
Everybody is talking about retail Geo and thing. I think the story will change with hydrogen and solar business, because end-to-end solar manufacturing, only two groups are talking about polysilicon to module. China dominates 97% of the world. But if you want green hydrogen, we need solar and wind. Reliance will add value there. And second thing, if Indian economy is growing at this 8%, which is estimated for current surprise, which is estimated, if markets can 15% EV to EBITDA growth on the current balance sheet size and deleveraging, they can attract good amount of capital to deleverage also. I think if you are taking a fixed deposit kind of a structure for 3 years, it is definitely going to be positive for long-term shareholders, because when foreigners return to India, they will be buying large caps, not mid caps or small caps, predominantly. So I think it's a good story. Only thing is, one needs to have a patience. The elephant can't dance every day. It takes time.
It's truly a heavyweight in that sense. But Sushil, always great having you on the show and talking to us about RIL. That's great perspective with all those decades gone into tracking this one. But be patient. The stock looks good. Numbers also largely in line with street expectations. Telecom could be the sort of the alpha generator for RIL going ahead. We'll take a break. Implied Nifty is indicating to a marginally higher start this morning. All that and more on the other side. So stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc.
welcome back. Are we going to have another good morning, and will that sustain? That is the question. The cues look set up for a pretty decent morning. Big boy Reliance has come out with numbers better than expected, or at least in line for most parts. Your implied open points to a spot of green as we start off. Sunny Agarwal and Aditya Agarwal are joining us this morning. Sunny, let's start with your picks. What would be your top plays today?
Yeah, so I would like to bet my money on Raymond Limited at current market price of 2050. The market cap of the company is close to 13,500 crore. And basically, if you look in terms of business, the company is a well diversified, basically into the branded apparel business, textile. At the same time, real estate business is doing well of late. And engineering business is something where the company is focusing in terms of future growth driver. Post sale of FMCG business, the company has turned debt free and right now is sitting on a cash balance of 1,300 crore. I think Q3, which is the December quarter, was one of the record quarter for the company, and we expect the performance to continue in FY25 and as well as in the fourth quarter of the current year. What we expect is that company is likely to deliver overall on a consolidated basis profit of close to 900 crore in FY25, and at current market price with market cap of 13,500 crore, I think it's trading at a very reasonable valuation, 20% plus ROE debt-free company. One can add this stock in a medium to long-term portfolio with a price target of 2,500 rupees. Another pick is from a mining sector, which is MOIL. So MOIL is a mini Ratna CPSE company at current market price of 350, close to 7,000 crore market cap. One of the largest manganese ore producer in India, accounts for close to 45 to 50% of all India's domestic manganese production. And manganese is one of the important mineral which goes in the production of stainless steel. And as we all know that the outlook for the stainless steel production in India is pretty robust. Close to 100 to 125 million ton capacity is likely to expand by 3x in over the period of next 8 to 10 years. And the indirect beneficiary continues to be the manganese ore producers like MOIL. At the same time, the company has undertaken a massive capex program wherein the capacity is likely to increase from 1.4 million ton to 2.5 million ton in FY25, and I believe that that will add a lot of kicker to the growth in terms of the earning for the MOIL. So one can add this stock in a medium to long-term portfolio with a price target of 400 over the period of next 6 to 12 months. Another stock which we like from the consumer sector is the Park Hotel. The company has listed recently. And what has happened is that pre-IPO, the company was making profit close to annualized profit close to 50 crore. And with an IPO proceed, the company has repaid the entire debt. And what we believe is that post this debt repayment, the company is likely to post profit of close to 100 crore. And at the same time, they are on the expansion spree. At the same time, what I believe is that their bakery brand Flurries is likely to do well going forward, and that is one of the additional value unlocking potential which we see in the company. So one can add this stock with a price target of 250 rupees with an investment horizon of 6 to 12.
Yeah, would you be playing for a little bit of a pullback on GSPL after a 20% cut yesterday? Will there be some sort of a bounce back which a trader can play into?
That's for me, Samina?
Yes.
Difficult to say. We'll have to see where the stock opens and how it behaves post-open. 310 on the upside is a clear resistance for me. Till the time that hurdle is taken out, I don't see a clear up move in the stock follow through. On the downside, the stock can slide to all the way to 290 levels, 285 to 290. So that is the target that I'm playing out with. I don't see a pullback. Maybe a continuation of the correction is what we can see all the way down to 290.
Just looking at some of the movers in the pre-open session, pull up M&M Finance. And we were talking about this data breach of KYC data they've had in one of their Northeast branches, hitting 150 crores, 10% down in opening trade on an M&M Finance. Vodafone, I just like to pull up Vodafone, also doing poorly after its FPO has closed. Another day of losses perhaps set up, at least in the pre-open session. On the other hand, Indus Tower, a good upgrade from CLSA, and Indus Tower's 4% up at least Yeah, that's right. 4% up. 450 rupees was the target price that CLSA has hit. So you're seeing some sharp and smart moves this morning in opening trade. Aditya, any of these on your radar? And just M&M Finance financials. I don't know if you track that stock. And of course, there's a fundamentally very negative story on right now. But a view on that counter?
So Tamanna, 260 on the downside is a major support for the stock. That happens to be the trendline support. If that is broken on the downside, as the pre-open is suggesting, then I believe there is a case for a sharper cut in the stock, and then can stock easily slide down to levels of about 240 on the downside. So we'll have to closely see if the stock actually opens below 260 levels. If it does so, then I believe it's still a short candidate because it's in an FNO space. So I don't think so. It will halt at 10%. Then it can slide all the way down to levels of sub 240. Easily can slide. Talking of from the rest of the pack, Tamanna, I think Indus Tower is something which definitely stands out. And this is not the first time maybe most of the analysts would be talking about Indus Tower. This is one stock which has clearly outperformed the markets and continues to make higher highs, higher lows. I believe on the upside, stock can easily test levels of 400 and beyond if somebody holds on to it for about a quarter or maybe 2 quarters. So Indus Tower definitely will stand out from the rest of the pack.
Okay, we'll talk about Tejas Networks, Piccadilly Agro, Hudson Agro, all of these as well in moments from now. I mean, still early days in the pre-open session, but I would suspect that all of these would have started off very well, or at least at the end of the pre-open session will be active. So keep an eye out on those stocks. Piccadilly is up 5%, I'm sure. I would be really surprised if Tejas Networks is not reacting already. Yep, Hudson Agro is up 9% too.
Ooh.
Tejas should come up on your screen next. Up 12%, no surprise there.
But when in life have we seen stocks go up 30-40% in 2 days, no matter how great the earnings
2021,
are, right?
2022, 2023 and 2024.
It's a new world. It's a new world order. I mean, so after a 17% rally yesterday, another 12%.
But blowout numbers, really.
Yeah.
But
really
justifies a 30% upside on a stock price, I'm not sure.
But you see, fundamentally, things have turned around for Tejas. Importantly, it would be great to even speak. I think we're talking to the management on the channel later today, and it'd be great to hear from them what that entire story is about. Harsh joining us very quickly with the top 2 brokerage notes handpicked this morning, the ones that really matter. Yes, Harsh?
Well, first off, thanks, Tam, is CLSA on Indus Towers. You have CLSA suggesting that Indus Towers is going to be the key beneficiary of Vodafone Idea's fundraise. 5,700 crore owed by Vodafone Idea to Indus Towers. What this means is around 21 rupees a share on a per share basis. So that's the kind of value accretion which will happen once Vodafone Idea raises that money, and if it were to make good on its debt to Indus Towers. So that's the first piece. Second is with regard to just growth. CLSA believes that the planned addition of around 48,000 4G and 5G sites definitely warrants an upgrade with regard to earnings, 1 to 9% increase with regard to its earnings estimates for FY25 and 26. It also seems to suggest that valuations seem very favorable. They are suggesting that Indus Towers trades at a 60% discount to global peers, and therefore the risk reward is more favorable in this one. They've hiked their target price from 335 to 450 rupees. That's a very, very large hike in relative terms, and offers nearly a 30% upside even from here. Upgrade from an outperform to a buy. Second one is with regard to Honasa. Jefferies reiterates their buy. In fact, what they are suggesting is Honasa is a high conviction buy for them. Target price 590, 50+% upside from here. What they are looking at in terms of levers is the new brands which Honasa is developing and working on, especially with regard to its actives-based BPC, which they believe is not only an exciting domestic opportunity but a very exciting global opportunity. They're suggesting is that the Dermaco, which is TDC, is one of those 3 brands which excite them. TDC achieved EBITDA break-even in Q3 FY24, and profit ramp-up will slowly start to happen going forward, but of course not in a large way. They'll continue to grow the brand well, and basis their valuations as well as basis the moats which Honasa offers, they are suggesting a high conviction buy on Honasa, 50+% upside from here.
Thank you for that. Those are going to be a few stocks you want to watch out for. Honasa is up 2%. Just quickly pull up Aster DM if we can. I'm not sure if the reading on my screen is right, but 23% off on Aster DM. Now, whether this is a pre-market phenomena or the stock's going to open lower is what we'll find out in a few minutes. But guys, anything on Aster DM? Do we have anything on it? Nothing on the face of it. We'll try and understand what's happening here, but the stock is expected to see a gap down, if not a 20% gap down, but looking like it's going to be a weak start. Aditya, a couple of other ones, I'm not sure if you've already highlighted, but anything in the capital market space that you're trading this morning? Some of them have done quite well over the last few days. An Angel One, a 360 WAM, GM, Centrum, the whole host of names, Nuvama have had a good run. Today, if we get a flat start, would that present as a trading opportunity on the upside?
Oh, absolutely, Samira. In fact, Angel One is something that I've been liking for some time. Angel One, and then recently it corrected. So it makes a good risk to reward at current levels from the capital market space. One should definitely look at the stock with a good support on the downside at 2650. I think stock can easily test levels of 3200 on the upside. If we are looking at this space, I think CDSL is something which also looks very interesting to me. After a good consolidation, stock is up and away. Above 2050, I think stock can easily test levels of 2150 to about 2200 with a good support on the downside at 1950, 1900 odd levels. So I think both these stocks, CDSL and Angel One, makes case for a buying opportunity at current levels, and both can give you decent returns in this week or maybe next week as well.
Right, just a quick update. Aster DM, the company has declared a special dividend of 118 rupees per share. So that explains the movement on that stock, the 22% downtick that you're seeing. So there's all is well, to say the least. Nothing really to be stressed about.
But M&M Financial, I'm interested in.
I saw that 5%.
It's 5% lower.
It's not hitting the rock in that sense. It's concerning, but 5%.
It started 10% down, and then we'll see in the.
But wonder what Sunny's view is on this one.
I think between now and the earnings, the pressure will be there, though.
Yeah, Sunny, M&M Financial, you saw that fraud news. Any quick thoughts here?
I think it's a one-off event, and we have seen this happening earlier also. If you remember in the campaign, housing finance also, these things keep on happening, and I think these are the small gaps which ultimately all these large organizations will plug. Although we may see knee-jerk reaction, negative reaction, but if I take a slightly broader perspective, I think company annually make profit of close to 1,500 to 2,000 crore rupees, and 150 crore is a one-time hit. I think maybe a knee-jerk reaction, and post that we may see once the things stabilizes, maybe again a path to recovery over the period of next 2 to 3 months. So I would be buyer at a deep post this correction.
I suppose, and it's also a risk this sector has to now, put into play and really guard against. In this case, it's literally fake KYC is given and then 150 crores siphoned off from one branch. Very quickly, Aditya, view on a Tejas and a Hudson Agro, both look placed for a very good start. Do you see buys at any point or time to book profits here?
Oh, no, definitely not, Kamana. Tejas, especially despite the fact that it moved up 16% in trade yesterday, 16-17%, it's on the verge of a breakout into an all-time high territory. And technically, we say that if stock has entered into an all-time high territory, uncharted territory, it is supposed to go at least 10 to 15% higher from those levels as well. So immediately, I'm looking at a target of 1150 on Tejas network. Immediate hurdle on the upside is 950. If that is taken out as the pre-opening is suggesting, one should definitely be buyer in the stock for a target of 1150. With a good support on the downside at 950, that can be a stop loss. So I think Tejas network does qualify as a buy even after this 10% gap up open. Hudson Agro, yes, that is also something which is looking interesting. The only thing is on the upside, 1100 is a hurdle for the stock. So we'll have to watch and wait and watch and see if stock sustains above 1100, that is the 200 DMA for the stock. Then maybe stock can test levels of 1200 on the upside.
Okay. Aditya, 30 seconds. Based on the pre-open rates, your top call for this morning?
So Neeraj, I'll stick to an Aditya Birla ABFRL for a target of 265 with the stop loss at 226. I think that is one stock which is looking very interesting to me on the charts.
Aditya Birla Fashion Retail. Well, remember, the corporate development having happened, the news flow and the brokerage views aren't necessarily the most constructive, but Aditya likes it on the charts. So do watch out for that stock in the session. A lot of stock reactions anticipated today, particularly from a results perspective. The broader end of the spectrum, the results are okay really. And in today's session, especially with the Tejas, with the Piccadilly, with the Hudson, we're already starting to see, or we'll already see some very strong reactions for sure. Let's see how they shape up post-open as well. And then keep a keen eye out for Tata Consumer, ICICI Pru, MCX and a few others as they report numbers today. But here come the first trades this Tuesday morning. We are in the green for sure, 80 odd points, 1/3%. Bring up the bank nifty. Yesterday did well despite HDFC Bank. In today's session, starting about 1/3% in line. Mid caps about 0.5%. Small cap index, which did very well yesterday, are performing today as well. Bring up the heat map and show you what's moving and what's not. Remember, a lot of mid caps will move because we don't have too much of moves on the large caps for sure. On the losing side, there is Nestle, which is down about 1%. Remember, it's a week of results for Nestle. M&M, a little bit off. I don't know if it's the M&M financial impact, but clearly no other reason, but it's flattish in trade. On the gain, Reliance is lying absolutely dormant. It's like 0.12, 0.13%, so hardly any move on Reliance Industries post results. What's doing well is Bharti. I don't know if this is the effect of a possibility of the market believing that ARPU uptick or tariff hikes are in the offing, but Bharti is the top gainer. Shriram Finance, second on a trot, is doing okay. And there is strength in IT yet again. TechM, Infi, Wipro, HCL Tech doing well. Remember, tomorrow and day after we have HCL Tech as well as Tech Mahindra coming out with numbers, and today's session Tata Elxsi. So it's a busy week for IT nevertheless, but clearly from a sectoral perspective, IT and banks still standing out, but IT in particular, Tamanna, seems to be doing really well. But the standout mover has to be Bharti Airtel. Less than 1% or just about 1%, but clearly the best mover.
I was just noticing Tata Consumer as well. Not too bad after the up move they had today. Ahead of numbers, but on the broader markets, let's just pull up the indices and see how the broader markets have opened, because Nifty in the positive, but not too much of an action there, just about 67 points up. The mid cap 150 up about 0.5%, small cap also in the green about 0.5%. So it's about individual stories and all about news flow. M&M Financials is what we'll pull up first. I want to see how it's opened. It was on a lower circuit in the pre-open session, stabilized by about 908, 910, but M&M Financials is going to see a bit of pain, about 6.5% down in the opening trade. So it's not just Q4 results being deferred, it's the reason why. It's because of a KYC breach leading to losses of about 150 crore rupees for the company. Literally fake KYC details were given and 150 crores embezzled in one branch in the Northeast, which is why they deferred their board results. Indus Towers is the other one. If you like what's happening with Vodafone, Indus Towers might be a good place. CLSA has upgraded it. They've hit a target, they've set a target price of 450 rupees, about 3% up on that stock this morning. Hudson Agro, Tejas Networks, both with good numbers. So, the point being that if there is a good set of numbers, decent fundamentals, you're seeing that play out as well, about nearly 7% up for Hudson Agro this morning. Tejas Networks is a phenomenal turnaround story. Perhaps the stock was up 17% yesterday and 14% up this morning. So for whoever has Tejas Networks in their portfolio, today is a good day. Our technical analyst says more to come in his view. Sterling and Wilson, I'll put in that category because of the same sort of story in terms of much better numbers this quarter, in fact going from losses to profits. Second day in a row it's doing well, 8.5% up. It closed 10% up yesterday. Spark on the other end of the spectrum, the pain is unending for this stock. Another day of fall and 5% down on circuit. So these are just some of the initial cues that I'm spotting. Samina, what else are you seeing this morning?
Stocks that are not doing too badly. So the broader markets are looking good. There is no runaway rally from what what we are seeing. But lots of names that are having a positive start. The broader markets outperforming the benchmark just a little bit in early hours of trade. Beyond Tejas, Sterling and Wilson that continues to see some gains. We've pointed out Yes Bank is another one that's catching my attention this morning. SPS stake sale is what's keeping the stock up and alive. 4.5% higher on Yes Bank is what we have. You've also got Inox Wind. They've seen a 4% up move. Honasa has got an upgrade on back of which the Inox Wind is up 4%. Honasa is up 3.5% as we see it. If we can also look at stocks such as GSPL, after a 20% cut yesterday, there has been somewhat of a bounce back on the counter. The stock is up 4%. Not surprising, I did think that there could be a technical pullback on the stock this morning, and that's exactly what's playing out. The stock is up 4% as we see it. A few other names that we highlighted this morning may not necessarily be driven by news flow. Those are those capital market stocks that we've been talking about. So Angel One, 360 WAM, continuing to be your top gainers in trade. If I can get 360 WAM, that should be helpful. 2% high on that one. BSE also doing quite well as we see it. Rallis had a bit of a interesting quarter of sorts. While they've turned profitable, their top line has been hit quite sharply. The stock is down 3% in trade. Mahindra Logistics, another weak quarter, another quarter where margins have disappointed. This company doesn't seem to be seeking too much clarity in terms of where they're headed in the next couple of years. The stock is down about 1.5%. GSPL, like I said, BSE is also looking good. A few other names to name in trade is Inox Wind, Indus Towers that we've talked about. Vodafone Idea is not doing too badly this morning as we see it. Adani Group stocks are also looking okay in early minutes of trade. Real estate is having a good day. So from your Phoenix to your Oberoi, all those counters trading with an upside bias. On the sell side, Elecon Engineering is seeing some profit taking after seeing some gains last week. You've got some of those diagnostic names as well, seeing small cuts, but nothing too concerning at this stage. But I think the standout really is stocks like Yes Bank as well that aren't doing too badly. So I think traders are finding opportunities. And GSPL, after a 20% cut yesterday, I think if you bought that stock as a trader this morning, you'd be also not as happy as Tejas Network, but nevertheless not complaining this morning.
No, and shouldn't. But I'm just saying that in GSPL's case,
I think it's a technical bounce, a dead cat bounce, like they call it, right?
But the issue that they're facing is a fundamentally harsh one, which is going to hit them for a while.
So this is trading gains, I'd look at it as. Intraday move, you take 4-5% off the table, check out.
Yeah. Let me ask Aditya,
so, in fact. I think he was negative on that stock.
Yeah, just one point. On Yes Bank, the market cap of Yes Bank is now back to the levels that it was pre-2018 dilution. So it's turned the whole corner after 6 years, and the market cap is back, survived, and now, in some sense, thriving as well.
So that's the Mr. Rana Kapoor is finally
out. I don't know if that's going to change things for Yes Bank.
No, I mean, it's coming a full circle in different ways than one. More ways than one.
No, the point is everybody talks about this dilution, right, in Vodafone Idea. Yes Bank has a 13x dilution in equity capital, and it's back to the 2018 levels. Yeah. That's the point. I mean, it's an interesting point, of course, but anyways, yeah. Sorry, you guys were wanting to ask something.
I want to get Sunny and Aditya's view on GSPL. Aditya, you're still negative on it?
Tamanna, yes, as Samina pointed out, it's a dead cat bounce, and I'll wait for 320 levels, which I mentioned. If it crosses 320, then maybe I'll look at further upside in the stock. There are other pockets where there is opportunity. I would look to stick to those pockets rather than going into GSPL at the moment. So 320, I'll watch. If that crosses, then maybe I'll look for a short covering rally.
What are those pockets after markets open?
Interestingly, Reliance has popped up after that flat open, and now it's looking good and up and away. If it crosses 3,000, then I think there's a case for a good up move in Reliance Industries, Tamanna, and can easily test level 3,200 on the upside. So Reliance Industry I'll closely keep an eye on. If it manages to sustain above 3,000 odd levels, then I'll be a buyer in Reliance at the stop close to about 2,900 with a target of 3,300 on the upside.
Yeah. So, Sunny, anything that you're liking after the opening rates and view on Reliance, and I would say even a Bharti Airtel?
I think it's a telecom day today, so I think I would like to go ahead with Indus Tower and Bharti Airtel at the current juncture.
Interesting. Indus Tower and Bharti Airtel. Well, not surprising really. Bharti Airtel 1.5% now, 13.16. It's had a really strong week, I must say, the last few. So keep that in mind. Now, Sunny, I don't know if you've tracked some of these names, but let's say Piccadilly Agro. It's done for. Do you track that one? It's done 45 crores of PAT in Q4. Looks expensive currently, but it's a liquor company which is growing at the rate of knots or more. And clearly the market seems to be liking it. Do you track this one?
Yeah, so I think it's under our soft coverage. So I think one of the brand has got a significant recognition internationally, and that is leading to this growth in the earnings. So I think the street is rewarding those numbers. So, but again, if the question is whether one would like to bet fresh money at the current juncture, I think slightly expensive on the valuation front. Better to wait for deep before adding this stock. And there are many other better managed companies, slightly bigger scale. So companies like Radico Khaitan, which is again doing a very fantastic job on premiumization. I think that can be one of the stock on radar if somebody want to play on a liquor company. And at the same time, on a summer portfolio, United Breweries, again, although trading at an expensive valuation, but looking at the way summer is panning out in India, I think even United Breweries is the one stock which one can look as an alternative to Piccadilly.
Okay. Yeah, Samir was just pointing out Inox Wind, need to mark that. That's up 7.5% on that bonus announcement, 638 and counting. Well, it'll be really interesting to see the Q4 performance for both Inox Wind and Suzlon, and what quantum of, what gigawatt or what megawatt of capacities do they, or execution that they do in this quarter. Because, and then the guidance that they give, because remember, for both wind, hydro, etc., the capacity addition plans are very, very high. By the way, speaking of that, hydro, bring up Patel Engineering. It was an NDTV Profit exclusive yesterday that the QIP will be launched. The QIP has gotten launched and possibly completed, but the stock is up 1% out of the 6.5-7% up move yesterday. Quick one, Sunny here. Do you track a Patel Engineering or an Inox Wind, all proxies to this renewable energy theme?
Yes, I think Patel Engineering, it's a classical turnaround story where we have seen a massive increase in order book. I think QIP has opened today, close to around 59-60 rupees. I think well placed, robust order book. So first round of re-rating is already done as far as Patel is concerned. Maybe from here on, one can expect a decent kind of return. I don't remember the order book right now currently, but I think they are sitting on a pretty robust order book at the current juncture. So that gives me a lot of comfort in terms of the earning visibility on Patel.
That is Patel Engineering. Lots of comfort on that order book is what Sunny believes. Well, some of these real estate names are also doing a little bit of positive play this morning. So from Oberoi to Phoenix Mills, counters aren't in a bad space. Oberoi is up 2.5%, Phoenix is up 3.5%. Aditya, has this caught your attention this morning? Any of these realty names that you would look to buy for the next few days of trade?
Definitely, Samina. There are a couple of stocks which stand out. I'll include a Godrej Properties as well in that list. So Oberoi Realty and Godrej Properties, these are the two stocks that definitely stand out. Talking of Godrej Properties first, I think makes a buy at current levels with a good support at 2,500 on the downside for a target of 2,700 on the upside. Oberoi Realties, that too can be looked at with a stop loss at 1,400 on the downside and for a target of 1,550, 1,600 on the upside. There's a bit of a pop in both the stocks, so I believe both the real estate stocks can be looked at.
Okay, well, that's one more set of stocks. I was looking at the contributors to the index, and HDFC Bank is in the green today. In a proper way, the top contributor along with Bharti Airtel being the second best contributor. Just shows how quiet the market is, to be honest. But even on the losing side, and L&T, Hindalco looking wobbly, but otherwise not too many losers. But the surprise is IT really. And just before we, at least my final question, Aditya, large cap IT from a trade perspective, from Friday, 3 days on a trot now ahead of the numbers, Tech Mahindra is in the green. We've seen Wipro do well since Friday and continue to do well, I believe, today as well. Infy is in the green as well. Is there a short-term tactical trade in large cap IT names?
There is, Neeraj, to be honest, and we have seen that the mid-cap IT space is seeing a bit of profit booking and large-cap IT names are seeing buying. I'll add a HCL Tech to that as well. So the three stocks that definitely stand out for me are Infosys, HCL Tech, and Tech Mahindra. HCL Tech definitely tops the list for me. At current levels, also, I think there is decent upside in the stock. Can test levels of 1550, 1600. Same is the case with Infosys as well. I think 1550 is something that I'm eyeing on Infosys and Tech Mahindra too. And given the fact that entire telecom space is doing well, who knows, maybe they can post decent numbers at Tech Mahindra. So 1240 on the upside is what I'm looking at Tech Mahindra. So all three stocks, Infosys, HCL Tech, and Tech Mahindra, I believe can be looked at and should see decent upside in at least a couple of weeks' time from here on.
Some of these Adani Group names are looking well placed this morning. I know Adani Enterprise is trading lower, but across the broader market, Adani names such as Adani Green, Adani Ports, Adani is not looking too bad. Sunny, anything in the Adani pack that you like? Cities put out a note that Adani Port is one of their favored picks. Are you thinking on the same lines?
Yeah, I think within Adani pack, I would like to go ahead with the cement businesses, ACC and Ambuja, and as well as on the port side, Adani Port. So these are the three businesses which we like from Adani overall pack. I think all the three businesses are, all the three companies are well on track to report a healthy earning growth driven by a very strong industry tailwind. And I think valuation also are slightly comfortable in all these three names. For the remaining name, I think valuations are sky high. I mean, no one can justify those numbers at the current juncture. So if I want to bet my money within Adani Pack, Ambuja Cement, which is again a holding company for ACC, and Adani Ports.
Okay. Thank you so much, Sunny as well, Aditya, for joining in today and giving us your thoughts and perspective and trades and ideas, more importantly. Really appreciate your time. We take a quick break on that note. On the other side, we'll be joined by the management of Paras Defense. Stay tuned.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic language.
Welcome back. You're watching India Market Open, and one sector that's been catching everyone's attention now for quite some time has been the defense sector. Of course, the other reason you're seeing the sector do exceptionally well over the last couple of months as compared to the index itself is largely on back of election play. Amit Mahajan, director at Paras Defense and Space Technologies, joins in to talk to us how things look. Amit, good morning. Thank you for joining us. Defense is a multi-year story. It's not 1 year, 2 years. We're looking at 5, 15, maybe 20 years from now. It's been a good run for Paras Defence, for the sector. I think what you're looking at about 25-30% sort of growth that you've witnessed. Margins are also looking healthy. You're at the forefront of this. Look ahead and tell me, over the next couple of years, do you think you could sustain growing at 30%, or it seems like that may be short-lived and there could be some downward pressure on those numbers?
So, firstly, thank you for having me on the show. Good morning. The defense sector today is going through a big paradigm shift when it comes to focus on Make in India. And if you are a manufacturing company in India, based out of India, then I would say 20 to 30% growth, which we always anticipate, is a very, very conservative number, I would say. And I'm not just talking for Paras Defense, I'm talking about any and every defense manufacturer who's based out of India. So Make in India is the way to go. This has completely made the whole market look inwards rather than we were looking very outward. We were importing all the technologies. We were having all the kind of, systems, and all the firepower which we had was completely imported. They were all being inducted without minimal indigenous content, or there was no obligation for an indigenous content. Now today, leave about indigenous content obligations, but the systems are expected to be manufactured, designed, developed, and manufactured in India. So you can imagine all that was being done outside India will be done in India. There is an impetus on the R&D organizations which are under Ministry of Defense to share the R&D and offload that R&D work also to the industry. So the amount of business that there are very few companies who can actually do justice to the requirements of the customer. Now, these companies are the companies who have been having legacy of projects to be done in defense as well as in space. And these companies will always get the first or the biggest opportunities in the sector. So yes, going 2 years, I would say I would extend that to 3 to 4 years, that we do not see any reason why we shouldn't grow at that percentage.
Well, you are in the thick of things, Amit. I just want to sort of move away from a multi-year story to what's currently happening now. And pardon me, apologies if, it's not a play for you. But with so much of geopolitical concerns, every other day we open the newspaper and somebody is bombing somebody's responding to somebody else. What does that mean for business for Paras Defense? Your export book is what, 16% from what I understand. Has it meant that more conversations are happening with friendly countries? Has it meant that conversations have now gotten converted into deal closures? Has there been any impact of what we're seeing in the rest of the world on the geopolitical side for your business?
So I have to be very frank that our export percentage has been limited. Our export of defense technologies has always been a plan B. The reason being, domestic consumption is so huge that, and also more profitable than exports. So Paras Defense has always given importance to first the domestic market, which is extremely potential. The geopolitical situation across the globe may not have fueled an export market in the Indian defense sector. But I would like to say that this has definitely changed the strategy of how military prepared, one, we should be, and secondly, how self-reliant we should be, such that our dependencies on any one particular nation is limited. We maintain friendly relations with the most of our partners, defense partners, but the reliance has been limited. And this, when I'm saying, the psychology of Make in India and self-reliance in defense technologies has been increasing, because seeing what is happening across the world, no one, you cannot have a dependency of your technologies on a particular nation, because tomorrow the geopolitical situation of that nation can change. So you have to be self-reliant and you have to be prepared for any eventuality.
Amit, good morning. Tamanna here, and just taking off from what Samina said, I think the big question right now is, do we have a shield? Or can we make a shield? Is Paras Defense working towards something like this? I think with what we've seen over the last week, Iran, Israel, etc., Now nations are building those protective sort of strategies in terms of warfare. Can you give us a sense if things are moving in that direction, or is there anything interesting that you can tell us, of course, with all sensitivities in place?
I have to tell you that India has been a defense technology consumer for some time and has been amongst the top 5 consumers across the world.
Right.
So Indian defense definitely employs one of the best technologies in the world. India chooses to be covert for the reason that we are a nation who believes in defense and not attack. And we are always, without divulging information, I can tell you that India is very well prepared when it comes to its own defense. And I do not want to tell you what technologies we have and what we don't.
No,
but
please don't.
Paras Defense is not just involved into technologies that we have been doing in the past, but also is currently working on cutting edge technologies which will enhance the existing defense technologies. And that includes drone and counter drones. When I say drone and counter drone, it's detection of drone and then applying countermeasures on these hostile drones to bring them down. All of these technologies, Paras Defense is working on.
You know, that's actually a great answer, Amit. And of course, we do not expect you to give details. I know it's a tough space to speak about. But if I can just get a little more from you on the January order, the latest order from the MOD. If you can explain to us how revenue accretive it is and give us a sense there.
So the January order, order book has been swelling for Paras Defense over the last 2 to 3 years. And this primarily, I would like to bring you back again to the Make in India concept. We have been Indian defense industry manufacturers for over 40 years now. Now, what has happened is because of our legacy and our involvement into very many programs, not just in production, but also in development of some certain programs. You can see today those programs being culminating into orders. These programs have also got a lot of attention because they are all homegrown development, and hence all the industries which are involved into these programs. I would like to mention BrahMos missile. Now, Paras Defense has been with BrahMos from the first missile ever manufactured. So this legacy will continue. These order books would mean only solidifying our position in the industry and will continue the growth trajectory that we project.
Just on BrahMos, and I don't know, Amit, how much you can share on this, but I know that India delivered its first BrahMos to Philippines. We made this for another country, and you're right, we have always traditionally been an importer of defense technology. We didn't make enough of our own, now we're making and we're exporting. Since you talked about Paras Defense in the context of BrahMos, I want to understand if you're going to see your export play or your export revenues increase in this sense as India moves towards a more, not just make in India, but make for the world as well.
I wouldn't play down export, but export always will become our plan B. Said that, I also want to mention that like BrahMos, we are building technologies for the world. Paras in itself is building and developing technologies for the world already. Now, Paras Anti-Drone, which is our subsidiary into RF and microwave and anti-drone systems, today is working with a French anti-drone company and developing next generation anti-drone, drone detection and drone jamming and spoofing technologies for a French company. So you can imagine if we are no more just a build to print kind of a nation anymore. We are developing technologies and the Western world is open enough to accept our technologies and then subsequently build their solutions on technologies which are developed in India. So we are no more just manufacturers for the world, but we will also translate and convert ourselves into a development nation for the various countries in the world.
Right. Amit, I don't know whether you can comment on this, but you've enjoyed very healthy margins, close to about 28, 29%. As we go into FY25, those margins seem like they could be maintained. I'm asking you, I know you'll probably be reporting earnings soon, but just looking ahead, 28 to 30%, is that a healthy range for us to expect on the margin front from you?
you're right that I am in a silent period. So I can't tell you absolute anything, but Paras Defense has always focused on, yes, one is national pride, which we put it always on the top. And second is profitability, because the company, there are 600 families who thrive on us. So if we don't make profits today, along with our employees, there are people who have built trust on us and invested into our company. So
completely
we are
right. It's not.
answerable
It's
to
just
them
not
and
just.
make sure that
Yeah, it's your.
we are always giving them what they want.
You're right. It's not just 600 employees. It's also your investors and shareholders that you need to keep happy. Just a quick follow-up, and I know a large part of your book comes from defense engineering. I think over 50% of your revenues is from there. Optronics is better margin business. In terms of your current order book, and of course going into 25 and 26, what is the sort of split you're seeking? And I just want to get a sense of that, because I also know drones is something the company has been focusing on, but currently it contributes very little to your top line.
So optics and optronic systems and defense engineering, if I have to split these into two verticals, they always go hand in hand when it comes to order book or execution. Now, in certain quarters, if defense engineering takes over, then you see that the next quarter optics and optronic systems compensates for it. On the yearly basis, which is how you should look at Paras Defense, they almost go touch and go 50-50. As a company, obviously, as a strategy, we would want optics and optronic systems to go beyond 50%, such that the profitability improves. Said that, drones market is a market which is a fast moving market. If you ask me, it is the most profitable, I wouldn't say yes, because the competition in that sector is growing by the day or by the hour. What we are really banking on is our anti-drone, that is a counter-drone, drone detection and drone countermeasures. That technology market, which will be really a market to look upon. And that will also be very profitable when I'm saying this. So looking at the strategy, we would always want a healthy optics and optronic systems. They should lead the revenues as well as profits. Defense engineering gives us a fast moving orders, and then anti-drone systems and technologies should give us the long-term growth as well as profitability.
You know, Amit, very interesting. Talking about shareholders and wealth creation, as we've been in this conversation, your stock actually trades at a day's high point. It's an intraday move, but nevertheless, in the last few minutes, it's picked up steam, trades the gain of 3%. So, along with the 600 families that depend on you, your shareholders are probably pleased you had this conversation with us right now. But good luck. We'll hopefully see you when you report your earnings. For now, the going is good. Paras Defense indicating that 30% growth year on year is actually being conservative. So don't be surprised if you see positive surprises coming from their stable. We'll take a break. We'll come back. We'll talk to Mahindra Logistics. It's been another rough quarter after a very quiet year for the company. All that and more on the other side, so stay tuned.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using
All right, we're talking about results today, and just before we go into Mahindra Logistics, let me quickly mark Paras Defence. So we spoke with the management short while ago, and stock near its day's high right now. Ram Praveen Swaminathan joining us now, MD and CEO for Mahindra Logistics. We're talking about their Q4 numbers. A bit of a rough quarter, I would say. Revenues were up 14%, but EBITDA down 11%. At 56.6 crores versus an estimate of 60 crores. Margins also squeezed to 3.9% versus 5%, and a net loss of about 11.9 crores. I'm speaking now with the MD and CEO, Mr. Ram Praveen Swaminathan. Welcome. Thank you for speaking with us here at NDTV Profit. Can we get a sense of where the pain points have been? I'm seeing one-time sort of a provision for 10 crore rupees as a doubtful receivables. Can you share any more details on that? And is that what has sort of skewed the picture? I think you're on mute, sir. Can you say something? I think you're on mute. All right. I think we need to try and get that audio sorted before we come to Mr. Swaminathan on what has been happening with that company. But, this definitely seems one very clear reason why you've seen a sort of a hit on the profits, because there was a one-time provision for doubtful receivables of about 10 crore rupees. There were IT charges of 2 crore rupees as well. So at net you have a net loss of 11.9 crore rupees versus a net profit of 0.2 CR last time round. So not that there was too much of a buffer, but this could be one of the reasons you're saying. If you take that out of the picture also, not real growth being seen there at any point. What else has been happening for the company? Well, their guidance say they aim to become a 10,000 crore rupees logistics service provider by FY26. They're on track to EBITDA break even as well. I think we have Mr. Ram Praveen back. Sir, can you hear me?
Yes, I can. Good morning.
Good morning. All right, there you are. Let's start with the numbers and what's happened with the profits. Do you put this down to those one-time provisions, and can you give us more details about it?
Sure. I think, it's actually a fairly robust quarter from a revenue perspective. After a kind of mute first half, we have got back to double-digit growth. Revenues grew by around 11% year on year during the quarter and grew sequentially as well. From an earnings perspective, our business is in two parts. There's a core business, which really is our 3PL and the global cargo business. And that business was pretty flat in terms of earnings. It was impacted by one-time charges, which I think you spoke about. Those charges were on account of several discontinued accounts. We exited some accounts in the commodity space some time ago, and we essentially reviewed those and took a charge towards those. We also went through a significant IT transition this year, and we had an incremental cost in this quarter for those. So both of those are non-recurring charges, and set off for that, profits in the core business is actually up 4% if you adjust for that. The second part of our earnings story really has been the express business acquisition we did some time ago, and that's an investment we are making from a long-term perspective, and we're scaling that network up, and that business actually had a really strong quarter in terms of earnings. Our losses in the business actually came down by around 34% on a quarter-on-quarter basis, and so that's been a really and we believe well set to achieve EBITDA breakeven in that business by the end of the first half of this financial year. So while I think peeling the numbers, actually we felt it was a fairly good quarter in terms of underlying earnings, and we have some pretty strong tailwinds going into the rest of this year.
So Swaminathan, I'm just going to take a follow-up question at Tamanna's, and you indicated that after a very quiet last 9 months, fourth quarter seen a little bit of an uptick in terms of top line. I believe you've set yourself a target of 10,000 crores by FY26. You want to tell us the glide path for it, because even at a 14-15% growth, that number seems a little out of reach, at least given the current situation.
I think there are really three parts to that story. I think the first one is our in our core third-party contract logistics business. We do expect that to grow in the mid-teens. As I said, it was important for that growth to come back. You must be mindful that we have three smaller businesses: our global cargo business, the B2B express business, and the last mile delivery business. These were inorganic acquisition-led businesses we have entered over the last few years, and those businesses are all in and growth phase, and therefore we expect those businesses to grow at higher than teen level over the next 3-4 years. And then of course there's a mobility business which actually still is below pre-COVID levels, and we expect that to recover right over the next 3-4 years. So in our math, the 10,000 crores is still pretty much in line of sight. We expect to be able to scale the business, especially on the back of the newer businesses and the mobility recovery quite strongly. We might look at more quarter here and there, but I think we still believe we are in line of sight for that.
Mr. Swaminathan, one quick question on margins, and those have been seeing again decline quarter on quarter, year on year, close to 4% now. Is there any sort of upside risk to margins in FY25?
As I said, so I think there are two parts to it. I think on a consolidated level, we have the core business, which has been there for some time. That's where we are historically being strong. And those businesses, sequentially, were actually flat on margin if you take out the one-time expenses, which were there. And those are non-recurring charges, which will not be there going forward. We're absolutely confident about that. I think the express business has been the large carry, and that we look at it independently as a significant long-term investment for growth, and both on a standalone basis and synergy it provides to the rest of our company. And that business, has been the larger impact in terms of our earnings over the last few quarters. Now that business is now in a clear uptick. Losses declined by 10% in Q3. They've declined by nearly to 30% in Q4 at an EBITDA level. So we feel pretty good that over the next 2 quarters, as that turns to EBITDA break-even, you will see a fairly big flip at a consolidated margin level.
So, just one last question, Mr. Swaminathan, and a little forward-looking. What are the sort of segments that you expect to fire going forward, Q1 and beyond? For example, your last mile delivery did fairly well this time, not so much freight forwarding, etc. What are those segments that you think will, boost you up to your guidance?
I think from a segment level, clearly our business segment level, contract logistics and last mile delivery, I think, are doing really well from a growth perspective. I think the forwarding business has difficult, challenging global macros. So growth is, we hope growth will come back, but there are some challenges there. I think in terms of end segments, for us, automotive and FMCG have been strong over the last couple of quarters. We've had good order intake. We expect that e-com now has bottomed out, and we are seeing an uptick there as well. It was a strong quarter in e-com in terms of recovery, and I hope we'll sustain that in terms of more penetration.
What is the revenue size you expect e-com to increase to?
No, I think we don't give guidance, but we do expect our overall third-party logistics business to grow at that mid-teen level. That's kind of what we've always aspired to. Last year was a bit of a challenge, but we expect to be back on track this year.
All right, thank you. Thank you for that, Mr. Swaminathan. That was the MD and CEO of Mahindra Logistics talking about the quarter gone by and putting down those losses and the margin squeeze, the profit losses, actually to one-time provisions. With that, it's a wrap on India Market Open, but stay tuned. Up next is Talking Point.
I pledge to vote and encourage all my colleagues at Godrej Industries Limited and associate companies to exercise their voting rights. It's the essence of democracy, and we stand firmly behind it. I would also urge everyone else to vote. We are thrilled to join NDTV's pledge to vote campaign and help spread the word in the corporate world and beyond.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah, on a day when the broader markets are showing exceptional strength yet again. The case for a chat with our guest today, and there shouldn't be a surprise considering his views in the past that we're talking about a few of the things that we're talking with him. One is the change of trajectory of rate cuts going to have an impact on deposit growth and on market-wide valuations. I think that's a conversation that we'll have. Is urban consumption, while has looked good, can it pick up further and will it show in the staple results because it's a week of very important FMCG numbers? And is telecom no longer being a duopoly, leading to a much anticipated uptick in the fortunes of everything related to the sector? I think we'll talk about all of this and more with Ashwini Agarwal of Demeter. He joins us right now on the show. Ashwini, great having you. Thanks for taking the time out. Hope all is well.
Good morning, Neeraj. All is well. Thank you.
And Ashwini, great to have you. Can I start off with this, Ashwini? I mean, this is now the 6th or the 7th time in a row that we're seeing the market climb the wall of worry. The reasons may dissipate, the reasons may change, but every single point of time that people have called this market to look very, very wobbly and worrying, right? And for the right reasons, I might add, right? This market seems to come back and climb the wall of worry. Is this, therefore, while expensive a market, remain a buy on dips market?
Neeraj, it would appear so. I mean, if you look at the market trajectory from the bottom of COVID, there was only one sort of meaningful correction that you saw, which started sometime in June or September 2021. And then lasted through till March of 23. And even that period, if you break it down, you saw one big decline from September 21 to June 22, and then again from about Jan 23 to March 23. Jan 23 to March 23 was also a fairly mild correction, though, that was the point when the whole Adani stock and Adani group was under a lot of pressure. But barring that, there has been no meaningful correction. And partly the reason is that the macroeconomic outlook for India has never been better. I mean, if I look back at 32, 33 years of my investing career, I think long-term prospects for India have never appeared to be brighter. I mean, you don't have any macroeconomic imbalances. You have a very pro-business policy tilt. And I think, on a global stage, India is set to continue to grow well. So, what's happening is that the domestic investors have kind of understood that this is the long-term trajectory for India and this is how it's going to go. So use every dip to accumulate, and further still, don't just bother about the short term, just keep investing for the long term. And the mutual fund flows are telling you that. So, a value investor like me can keep, despairing that the bond yield to equity yield differences are at all-time lows. And all indicators are telling us that the market is super expensive. But I really don't see how there is going to be a very deep correction. You could always have a 8 to 10% correction, events for which will unfold as we go along. But I really don't see how it's going to be much deeper in the current framework, unless, of course, elections deliver a surprise or something goes wrong in the rest of the world. Then we'll have to see.
Yeah, interesting point, Ashwini, because I remember you also, I mean, yes, you were rightfully pointing out, right, that if you look at on a valuation benchmarks, I mean, it's difficult to make a very convincing large call here. So, Ashwini, what have you made of the results season thus far? Because IT selectively is sulked, but maybe it was in the price, and the start of the financial services reportage, whether the quarterly updates or the actual results, has been okay.
Yeah, I think that's the right word. It's okay. There's no positive surprise. And yes, that can turn out to be a headwind for the market, because if you recall, both the September 23 quarter earnings in aggregate and the December 23 earnings in aggregate surprised the street. They beat the consensus numbers. And the beat was probably not led so much by the large caps, but the mid cap and the small cap cohort did exceptionally well. And aggregate earnings actually did reasonably well. And what we are trying to what we are seeing in the quarter so far, and let me caveat this by saying that we literally have had a handful of results. So we don't know if this is a reflection of things to come. But till now, we haven't had a very strong positive beat so far. I mean, the sole exception is probably Bajaj Auto. And even there, if you look at how the stock behaved post the earnings, clearly the earnings surprise was well baked into the stock price. So yes, I think if the earnings season doesn't kind of lead to massive or doesn't lead to reasonable earnings upgrades, you could have a situation that market could drift down from here. But again, it might be a correction similar to what we saw last year between July and October 23, which was of the order of about 8% or thereabouts. And I don't see anything deeper than that for the time being, unless something bigger comes to pass, which I spoke about, earlier in the conversation.
True. Okay, Ashwini, not asking to talk about a specific stock, but I'm just trying to understand what is the issue with some of the larger banks currently? I mean, for all the conversation around how HDFC Bank is giving value, and everybody from the marqueest of investors to somebody who's a newbie but does good work has given or made this argument about, look at HDFC Bank valuations currently versus its own history versus its peer set, and the stock has to do well. Now, you've heard this argument now for 12 to 18 months, right? And at different points of time, the valuation has looked cheap, and it's only succumbed to some further selling, except for maybe the last 1 month when it's found some feet. Is the market telling all of us something that it wants to look at large behemoth stocks or financial stocks or other stocks in a different light than what they may have been looked at in the past?
No, Neeraj, I don't think so. I think the bottom line at the end of the day in India is earnings growth, and which is the primary driver of stock price. And the secondary driver of short-term momentum is earnings surprise or earnings upgrades. Now, in the case of HDFC Bank, and due disclosure for your viewers, I do own a position there, being value investor, and obviously it hasn't done well for me last few years. But the point in HDFC Bank is that the merger has led to a situation where it will take them time to fix the liability side of the balance sheet and get to a loan to deposit ratio of about 90%, which is where they need to get to over a period of time. And this interim period, you will see below industry loan growth or higher than industry deposit growth being forced upon them and resulting to NIM compression. Now, the March quarter was reasonably constructive. It wasn't so bad, but I mean, that's what the street is pricing in. Coming to the rest of the financial sector, I think the question that I'm struggling with is that you will have very decent loans growth, but you will have some compression in margins because deposit costs are on the higher side and liquidity is on the tighter side. Now, the two will compensate each other. And below that, I think on the PPOP side, which is pre-operating profits, banks should be able to meet analyst forecasts. But there is no pickup left below the PPOP line in terms of lower credit costs. I mean, low credit costs are already in the base. So from here on, it's business as usual. And, over a period of time, one should expect that credit costs will normalize to long-term trends. So, you can't build an earnings case of very superlative earnings. Barring some of the PSU banks, which might see some significant write-backs on account of massive provisions and write-downs that they've done over the last 3 or 4 years. For the large private sector cohort, I really can't expect that. And valuations are kind of also, again, ho-hum. They don't leave a lot of room for the upside. So there's no room for earnings surprise. So, what's going to drive these stocks? I'm not very clear.
Okay, the other aspect is telecom. It's right up there in the points of conversation, Ashwini, with the Vodafone FPO getting subscribed the way it has. I mean, the QIB book demand was eye-popping, to say the least. Yeah. And some marquee names out there. Now, piece this together for me, a sector which largely has been looking for tariff hikes but haven't come. Jio for the first time, and in the analyst call yesterday, and some analyst notes seem to suggest that the management is now open to looking at some price hikes. So if we are looking at not a duopoly, but 3 people now being there, Vodafone, I suspect, will not gain market share, but will not lose terribly now, and all of that. And if there is a price hike and all of that, does it bring the sector firmly in focus for the next 12 to 18 to 24 months? And I'm not just talking about the telcos, I'm also talking about an Industar, I'm also talking about some of the ancillaries.
Absolutely. I mean, if price increases come through, and the competitive intensity from a price perspective abates, whether it's, 3 reasonable players or whether it was the case up till now, which was essentially 2 very strong players and one, the third player struggling because of limited balance sheet, whichever way you think about it. I mean, so long as the pricing power can be exercised by the players, you will see earnings upgrades and you will see the stocks do well. And the entire ecosystem, which is the tower companies and so on and so forth. So obviously, this is very good for the industry. If the price increases come through, we have the cheapest data in the world and we have the lowest cost of, mobile connectivity in the world. So, a little bit of price increase is possible. And if that comes to pass, I think, all these stocks will do very well. I think that's really the case. And which I think is why everybody jumped at the opportunity to make this investment in Vodafone Idea. Which was priced to bankruptcy at some point in time in the recent past. And now, at the offer price, it still offers substantial upside if the sector economics were to improve in aggregate.
Okay. Well, and telecom, remember, Industar as an upgrade from CLSA, amongst others who have already upgraded the stock for a while. And Vodafone's successful subscription means that the market will want to believe that the dues to Indus are now more probable to get commissioned to Indus Tower, therefore, and that could also act as a positive. But that was a nice summation from Ashwini Agarwal. Really, what we need to do is take a quick break. It's time for one. We come back, we extend a little bit of this earnings conversation because there are a lot of companies in the mid-sized end that have come out with a spectacular set of numbers. We'll try and talk about some of those or a large coverage around broader end of the universe, and then of course talk about the consumer piece as well in detail. Stay tuned, viewers, we'll be right back.
Presented by Patanjali Kesh Kanti Oil and Shampoo, टूटना मना है. Co-presented by Panasonic Green Impact.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can
Back with Talking Point right here on NDTV Profit. Let me get in my colleague Anushi to talk about some of the results that came out post-market hours on Monday and are making a serious move. Anushi, what do you have on your list?
Hey Neeraj, so first on my list is Tejas Networks, quite a spectacular set of numbers over here. If you have to look at the revenue, that has gone about 4 times up now in this quarter, while the EBITDA and the margins are at 23% margin, which is higher than the Bloomberg estimate of 7%. Now even the net profit has swung back to the profit number at 146 crore compared to a loss of about 11 crore. Now this revenue that we are seeing, about 4 times the growth over here, it is supported by all its product segments, especially led by the wireless segment. Even if you have to look at the domestic play, both the private and the government side performed well, clocking in about 100% of a growth over here, while the international business saw about a 10% growth. Again, if you have to look at the margins, where the major play is, so the margins 23% compared to about 7.5% of an estimate. Now this is on the back of the company indicating in its Q3 con call also that they had recorded lower set of margins due to the lower capacity that they saw. So that was on the lower end of margins, while this Q4 they were expecting this higher segment margins. So that has led to the improvement in margin mix also. Other than that, the order book stood at about 8,200 crore, with the India recording about 7,900 crore of an order book. Now moving on to next is the Hudson Agro product. Again, a 13% of an up move over here. Strong set of numbers, revenue seeing about a 14% of a growth side. While this is on the back of the normalization that has happened in the milk procurement, which is leading to these better sales realizations also. Apart from that, the EBITDA and the margins is, again, the focus remains over here. EBITDA about 47% of a growth side, but the margins have moved up to 11% compared to about 8% earlier. 2 key reasons that I would like to highlight over here. The purchases of stock in trade has gone down by about 49%. So that has supported the kind of growth that we are seeing in this number. And another is the huge differential in the inventory changes also, leading up to this net profit also going about 108% up. So these are the 2 stocks that are buzzing on the back of strong Q4 earnings.
Okay, Anushi, thanks a lot for that. Well, you know, it seems like that from milk to whiskey, the sales are really happening in the consumer space. Hudson Agro has had a good quarter. Indri Whiskey Maker, Piccadilly Agro had a very strong quarter. In between all of that, of course, Anushri spoke about Tejas Networks and the blowout set of numbers that they've come out with as well. Ashwini, large caps have been slightly quiet, but some of these niche, mid-sized players are making their presence felt in a big way. Anything that stood out for you, not just in terms of this quarter numbers, but something that you may have noticed in the last 3 to 6 months?
So think about both the stocks that were highlighted by Anushri, which is Tejas and then Hudson Agro. I think the two themes that are staring out at us is that India is starting to do things at scale. And Tejas's acquisition by the Tata Group has allowed it to exploit the scale that was possible for the business. I mean, India spends a very large amount of money on telecom equipment, the hardware side of mobile telephony and data services. And this was a very, very small company, but with a very strong technology backbone. And I think the ownership by Tata has allowed it to win at scale. And I think what we've seen in the latest quarter is simply a small window into what the future might look like. So that's one theme. And what you're seeing in Hudson Agro is the other theme, which is normalization of margins after the kind of boom and bust cycle that we went through during COVID. Now, while I could go into why milk went through this boom and bust cycle, but I think the point I'm trying to make is that the opportunity resides exactly here. One set of companies are going to be companies that will go from being small, mid-sized players to very large companies, because the opportunity set is extremely large. And there'll be another set of companies in the mid-cap space, small-cap space, which have been hit by very high raw material prices, and the margins are compromised, where you will see certain amount of normalization of margins. And I think both these will continue to offer some earnings surprises in the time to come. And I think, that's where I'm trying to kind of find ideas. So upstream chemicals, agrochemicals is one industry where I think you will see more of a margin normalization coming through. And of course, the scale business is there in variety of industries such as railways, defense, manufacturing, etc. But where valuations are very, very challenging, so one has to participate with some care. Coming to consumers, I think there are two factors at play. One is that the rural demand has been fairly soft for the last couple of years, driven by soft commodity prices, agricultural output prices, and by limited amount of spending that has gone into rural India. Rural India hasn't fully recovered from the upheaval in urban jobs that happened during COVID. So that's one. And the second is in urban India, you're starting to see a lot of innovation, a lot of direct-to-consumer sales by new startups, which is at the end of the day eating into potential revenue of the big boys. So the large companies in the consumer staples area are not able to produce the kind of growth, because some of that growth is getting eaten away by new startups, Mama Earth, or whether it's Nykaa or whoever else it is. So that is playing out. So I think the urban consumer demand is not so bad, but I think there are far more people vying for the consumer's attention.
Interesting. Ashwini, can I request you? I mean, take some time. It doesn't matter. But tell us about how you think about this opportunity sizing when you talk about it. I mean, because whichever example, I'm not saying necessarily Tejas, but whatever else, would love to understand how you think about what the opportunity could be a few years out. How do you think about this?
Well, I think there are various ways to do it. I mean, you try and look for an industry which is very large relative to the size of the player. You try and make an assessment of whether the company has the ability to exploit that size. And the story is not entirely forecastable at the outset, and you have to take a leap of faith, and slowly it unfolds. For example, in recent months, we've seen news of BrahMos missiles being exported from India. Over the last 2 years, we've seen significant focus on the success of India's space program. While it has been successful over the last few decades, I think it has come into focus only in the last 2 years or so. So, there are a lot of industries which have a lot of scale possible to them, and innovating at scale has become possible in the last 8 to 10 years, where I think the Indian industry probably lacked the confidence, lacked the bravado, I don't know, and possibly even lacked the policy support previously. If you were to look back at India's history, up till say 2014, 2015. So I think one difference that this administration has definitely made is that through policy support and through the organic growth of the Indian market per se, has made people aware about the opportunity of scale. So it's a very difficult question. How do you size the opportunity? I mean, it is a bit of a leap of faith. It is a bit of just kind of zooming out and thinking about how big the opportunity can be. And then placing your bets accordingly. I mean, you look at batteries, for instance. I mean, Exide, something I don't own, but they signed up an agreement to supply EV batteries to Hyundai. Everybody knew that they are investing in EV. They had a very strong balance sheet after some asset divestments that they had done. They have a very, very strong brand name and a very strong manufacturing backbone. So then the rest is just multiplication and trying to figure out who wins.
Okay. Well, and I'm sure it's not as easy, viewers, by the way, but it's good to get these the thoughts in process. Just one final question, Ashwini, before we wrap up this conversation. The age-old favorites have been IT services. For after a really long time, they are going through a period of lull. Some people argue that because this industry is survived and thrived for so many years, you will see a comeback again. Some argue that we are not mutual fund managers. We don't have to have every sector in our portfolio. Why look at IT right now? There are other sectors better out there. We'll revisit IT when the promise is shown, maybe buy it 15% higher, but that's a better way to do it. Which way would you lean on? You are not a mutual fund manager either.
I think the latter, easily. I think the earnings growth is quite lukewarm. And I think if you look at the valuations, despite the correction and severe underperformance on relative basis, valuations are still expensive. I mean, if you look at just the last decadal valuation range of something like Infosys, it has traded at lower multiples in the past. I tend to buy into the argument that if you don't see earnings momentum and earnings growth, is there really a need to be here? Now, I will just make one provision here. That IT services and stocks like HCL Technologies and Infosys have a very decent dividend yield at this point in time. So if the market were to go through a correction, for reasons that are not very clear to us right now, these stocks will probably outperform, supported by the dividend yield, strong cash flow profiles, and obviously best-in-class scores that they generate on corporate governance and so on. So I think they're good companies to protect you on the way down. But if you are really bullish on India and you want to invest for the next 5 years or 10 years, my suspicion is there are better stories to play.
Got it. On that note, Ashwini Agarwal, thanks so much for taking the time out and speaking to us today.
Thank you. Thank you for having me here, Neeraj.
Pleasure was ours, and viewers, thanks for tuning into this leg of The Talking Point.
Presented by Patanjali Kesh Kanti Oil and Shampoo, Tootna Mana Hai. Co-presented by Panasonic Green Impact.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to see.
Persistent Systems is a business in focus because the business has done really well, but is also a stock in focus because the stock came off a little bit after what the managed or what the street believed would come in, maybe didn't come out in the exact way. But it's therefore imperative for us to ask Sandeep Kalra about how does he feel about the business over the course of the next 12 to 24 months at a point of time when the street, whether on IT services or on products, is maybe clouded under a bit of uncertainty. Sandeep, great having you. Thanks for taking the time out. And I must say, for the Q4 and for the year as well, very decent show, as we do every time. Can we start off with how you thought about the quarter and the year? What are the highlights and were there any missing points according to you?
Sure. First of all, Neeraj, thank you for having me. As far as the quarter and the year gone by are concerned, the quarter was pretty decent. It was 3.4% quarter on quarter, 13.2% year on year, from a same quarter basis, roughly about 311 million, 310.9 to be precise. For the full year, we delivered a growth of about 14.5%, getting us to $1.186 billion. Now, if you look at it, for the last 16 quarters, this has been straight, quarters of sequential growth, and we are fairly confident of continuing the growth. Now, obviously, the market environment is such that you have to prioritize whether you want to optimize margins or you want to have a decent growth, decent margins. And as the market demand environment improves, you want to improve on margins. So that's where we are. We had a reasonably decent EBIT. The EBIT came in at 14.45% for the quarter, which is in a very, very narrow band from the last quarter. So that's the broader commentary. Happy to answer any questions.
Okay. So are you saying, therefore, that because... And I know it may not be predictable, but until it becomes predictable, you are happy to let go of a little bit of the margin picture in order to get business, because business might be hard to come by per se.
Yeah. So there are multiple things that are happening in the market specific to Persistent. So as we look back, 4 or 5 years back, we used to be less than $500 million. In the last 5 years, we've come from $481 million to being a firm with a run rate of about $1.2 billion. Now, what that means is our size scale has also given us an opportunity to compete for business in the bigger companies and compete against the bigger peers of ours. So as we look at the current macro environment, our customers are looking at us as a very refreshing challenger, big enough to scale, small enough to care for them. And that's where, we believe this macro gives us a very good opportunity to further establish ourselves in the market. And so if it is a question of having the same margin or a little better margin, but reasonably good growth compared to our competition, compared to the overall segment, we would prioritize getting the growth because margins optimization is a much easier thing to do than getting growth. The last data point on this, if you look at the last 4 years, while we have grown market share, we have delivered significant amount of EPS increase. If one was to look at the EPS side, last 4 years are at 32.9%. 53.1%, 36.9%, and 16.9% on a sequential year basis in terms of even EPS growth. So yes, growth with same margins or better is where the priority is.
And is it possible to kind of guesstimate or forecast, Sandeep, and don't if you cannot, because it is a state of flux, maybe the environment, but would you believe that being able to do what you've done in FY24 over FY23 or an average over the last 3-4 years might be possible over the course of the next 1, 2 or 3 years in terms of revenue?
So look, we don't want to give any forward-looking guidance, but from a possibility perspective, is it possible? It is fairly possible. So if you look at the entire track record of the team that has delivered this at Persistent, so if you look at the relative outperformance itself from the industry, so let's look at that data point as well. So for the last 4 years, if you look at the industry, it has delivered roughly 1.6%, 18.6%, 10%, and roughly 3% growth on an annual basis if you look at our peer set from India. Now, if you look at the Persistent relative outperformance, the relative outperformance at Persistent has been 11.3%, 16.6%, 25.3%, and 11.8% relative to the market. This is the outperformance.
Yeah.
So if you look at our track record, yes, and if you look at the kind of investments that we have done, and that's possibly also keeping our margins at where they are. We have invested in bringing a new chief strategy and growth officer. We have invested in geography-related leadership. We have invested in putting leadership behind the forward-looking technologies like generative AI. We are investing in building IP around all of that. All of that is towards building our firm towards the $2 billion and laying the foundation for a much bigger firm to come much faster than the competition would.
Are you laying out targets by timelines or milestones by when you will reach these aspirational targets, if you will, Sandeep?
Yeah. So Neeraj, we have fairly said over the earnings calls over the last several quarters. Earlier, our target was to reach $1 billion, which we reached ahead of the curve. The next is $2 billion. The next 3 years should see us pretty much reaching the $2 billion that we have as a target. So, and again, all of that is aspirational. It is not a forward-looking guidance. It's our aspiration to reach. And so far, we have kept up to our aspirations.
Got it. Sandeep, just one quick follow-up. And because I read this in a couple of notes that came in post the call, wherein one of the notes stated that the company is talking about a 200 to 300 basis points margin expansion in the next 2-3 years, but with muted growth in FY25. Have you guided to or have you spoken about the possibility of muted revenue growth in FY25 or FY24?
No, there is no place that we have talked about any muted growth. I think the reference, I don't know whether it has been taken from a margin perspective. On our earnings call, we have said growth is our first priority. Margin at the same level is what we are looking for. And if we can optimize that, absolutely we'll look to optimize that. So look, first thing is keep the growth engine on because it is our time. It is our, if I may say so, our time has come to take market share from the bigger peers and even some of the mid tiers. So first focus, take market share at the same margin. And then, if we can do more margin than that, absolutely, there are people focused in the company on seeing what can be done best from a revenue perspective, different industry verticals, people focus on margins and so on and so forth. So that's where it is.
Okay, just last 2 questions. Just one, getting a clarity. Sometimes it's a great strategy that in order to get your foot in the door, maybe work on slightly lower or better pricing or competitive pricing, if you will, which in fact might impact margins too. Is that the idea, that get the foot in the door with some of the bigger clients at a better pricing and then expand the wallet share, if you will? No.
So Persistent is not going to be a pricing-led kind of a company. It has never been, it will not be. Our thing is capability-led. We are very differentiated in digital engineering. We are very differentiated in AI. Now, increasingly in generative AI, we are differentiated in things like CX around Salesforce platform, cloud infrastructure security. We are right up there on the Gartner Magic Quadrant. If you look at the competition, we are ranked much higher than people who are even 20 times our size. So our thing is capability led. Our investments are in capability build. Our investments are in sales and marketing. Our foray, wherever these investments are going, is not to be the price leader, it is to be the capability leader, and that's what is going to get us the market share. And as the market comes back in terms of reasonable demand, you will see not just the market share expand, but margin also expand.
Okay. I have one final question, and it's actually a set of 2, if you will, Sandeep, humor me. But one, much unlike what the street or what everybody was expecting, there has been resilience on the global growth front. Now, while the belief might have been that with growth coming off, that a soft landing in the US and everywhere else, leading to some pressure on order flow or order win or deal wins for IT companies and product companies and tech companies like yours, is this slightly better economic performance globally, PMI numbers looking up globally, feed into you getting order flows slightly higher than earlier? Part one of my question is that. And part two is the slightly lower deal win flow for quarter four, is that an anomaly, and will it correct itself in the quarters to come for Persistent?
Okay, so I'll go the reverse order. So quarter four for us is January, February, March. Quarter three for us is October, November, December. Our biggest market, 80% of our revenues come from the US markets. So if you correlate the financial year closing for the US, it's October, November, December. That's where a bunch of our renewals come in. And hence the order flow, not just this year, many years if you were to go back, is the same. Now, if you look at, Neeraj, are you there?
Yes, I'm right here, Sandeep. I'm listening to you.
Okay. Yeah. So if you were to look at the order flow for Q4, it was reasonably healthy, and I am pretty sure the pipeline is good. So as we go along, we are comfortable with the order flow as of this point in time.
Okay. And part one of my question, which is a global recovery, does it feed into your ability to bag more orders?
Yeah, absolutely. So if you look at our performance in a bad macro, if you look at our performance in the COVID times, just to remind you and your viewers, we grew 12.9%, whereas the whole industry, I don't think there were many companies which grew even single digit. So whether it was the COVID times, whether it is the last 12 months, if you look at 12 months gone by, the financial year for us, 14.5% growth, I would tend to believe in a bad macro, if we can deliver that, the chances of delivering better results in a good macro are better.
Well, confidence personified. Sandeep Kalra, thank you so much for taking the time out and being with us. I look forward to a slightly more engaging or a longer conversation, if you will, on the capability that Persistent might have and Indian IT might have around AI as well, a bit later on over the course of the next couple of months. But thank you for this earnings call today.
Looking forward to it, and thank you.
Thank you. And viewers, thanks for tuning in.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-presented by Panasonic Green Impact.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice.
Hello and welcome to the FNO show. It's turning out to be quite a day of trade on the street today. After 2 days of an extended rally, the market's not doing too badly. As we see it, the Nifty and the Sensex both trading in positive territory. Well, the breadth of the market's also not too bad. The Nifty, of course, has slipped into some losses on back of profit taking emerging after a solid run over the last 2 days. Well, in terms of FNO activity, we've got a little bit of action, but lots of stocks. Specific trade is what's driving the street today. Well, to take you through that and more, we'll We'll be joined by Soni and Dharmesh in a minute. But just before that, the breadth of the market and the big losers and gainers on the index. The Nifty 50 is seeing stocks like Bharti Airtel, that's up 2%, Grasim, Bajaj Finserv, Titan, HCL Tech, not doing too badly. On the sell side, though, you've got Hindalco, Tata Consumer, Bajaj Auto, Tech Mahindra among the top losers as we see it. Well, across the Nifty 500, it's all about stock-specific trade, and that's pretty much what's driving the street. You heard the manager of Persistent just a few minutes ago. That stock clearly seeing heavy selling in today's trade as well. Along with that, you've got other counters that are seeing some pressure, but generally speaking, the market is on tender hooks after, of course, 2 days of straight gains. Well, Soni Patnaik now joins in, and Dharmesh to take us through their top trading strategies. Soni, good morning. Thanks for joining in. The Nifty is seeing a little bit of selling despite positive global cues. But after 2 days of a straight run, it's no surprise that some profits are being taken off the table. Fair to say so? Or would you remain a buyer at every dip?
Good morning, Samina. Thank you so much for having me on the show. I think, yes, Nifty, we've seen a good recovery last week. The weekly closing was above 22,000. It was quite a comfortable weekly closing. Definitely it has tested 22,400, but then this entire range of 22,300, 22,400 still remains as a congestion zone. It's a supply area as of now, and as long as it's not able to sustain above 22,450 bare minimum, there could be not a lot of upside can be seen in Nifty. So longs should only be initiated only if it's able to cross the resistance of 22,450. Above that, we can see it retesting 22,600, 650 for now. But as of now, there's a sideways trend. I think 22,200 is a good support from current levels, and 22,400, 450 remains as a resistance. So I think it could be seen that the entire today, tomorrow, we can see some more of consolidation taking place. Talking about Bank Nifty, I think Bank Nifty is more important over here because Bank Nifty is the index that can actually lead Nifty out of the congestion zone. And it is important for Bank Nifty to break above 48,200, 250. That's a very crucial resistance for Bank Nifty. If Bank Nifty is able to break above that resistance zone, it can see retesting its previous all-time highs of 49,000. So Bank Nifty is quite decent even at current levels. You can see 47,600, 47,500 is very strong support. So any move that can be seen in Bank Nifty perhaps by tomorrow's expiry.
I think you see that, Soni, because it managed to pretty much lead the way in yesterday's session as well without HDFC Bank. Now, if you're constructive on Bank Nifty, do you think a bet on HDFC Bank could be warranted? Just expectations in terms of playing catch up.
I think, as long as HDFC Bank is not breaking below 1,500, the stock can remain in a good accumulation zone from current levels to any small declines up to 1,480. So definitely, I think this could be a very strong zone to initiate longs and, wait for targets because HDFC Bank can test 1,600, 1,620 in the coming series. So perhaps if somebody is even holding an April series, can roll over the positions to May series. It has seen decent rollovers starting from April to March. So, it could be that it can test 1,600 in May series.
Right. Let's talk about a few other names. But just before we go into that, Soni, you've got a couple of trading strategies on stocks. Real estate looks like it's in a sweet spot. From your Oberoi, Phoenix, Godrej Properties, all are looking good in trade. You interestingly have a buy call on a DLF.
Definitely, Samina. The DLF, it has, we've seen a good daily intraday breakout today on charts, and it started with short covering in the first 5 minutes, but then it quickly converted into long built-up positions. So these are fresh longs that are getting added in DLF. So one can buy at current levels on any small declines up to 890. Also can be bought, keeping a stop loss of 880, and the target of 930, 935 can be seen in DLF.
Right. Apart from that, Aarti Industries, now that's an interesting one, Soni. What is it? It's a futures trade that you're recommending?
It's Aarti Industries, entire chemical pack has actually seen very strong rollovers. They've started with 39%, and it's the single alone sector that has seen very strong rollovers from April to March. And let us also, April to May, sorry. And let us also remember that, the next 3 days are going to be equally important. So Aarti Industries and Navin Fluorine, Tata Chemicals, these are some of the stocks which have seen very strong rollovers. Current pick, Aarti Industries look quite good. It has given an intraday breakout on charts as well. So from current levels, you can buy, keeping a stop loss of 720 and a target of 760.
Right. Soni, I want to talk about a few more stocks that have got my attention this morning. And one of them is GSPL. You know, after that big fall that we saw yesterday, the stock was doing a little bit of a technical dead cat bounce, if you may call it that. Do you think that could be an opportunity for a quick buck?
See, if we look at GSPL, of course, it has given a very bad breakdown yesterday. And, the stock has actually closed below its 200 EMA, which may act as a resistance going forward. So any fresh entry or on the long side should only be seen once it's able to sustain across at least 325 with the bare minimum. If it's not able to cross, then that zone, that level may just become a supply zone or a resistance. So any small any small pullback towards 320.25 and it's not able to cross, you can see it getting succumb to selling pressure. So initiate the buy only once it's able to cross 325.
Right. Soni, also a couple of more stocks may not be in the options market, but definitely worth a mention is Sterling and Wilson, Cochin Shipyard and Tejas Network. 16% yes, another 18% added this morning.
It's a Sterling and Wilson. It's a clear breakout on charts. It's a very strong. It's backed with volumes, and we can see good RSI, MACD, positive divergence coming. So a lot of positive parameters adding up to it. From current levels, 640.44 remains a very good support. So as long as it's not breaking below it on today's closing, it'll be important to watch for today's closing. If it's able to defend the 640.45, support zone, it can definitely head towards 700, 720. So stock is quite strong. And if we talk about Cochin Shipyard, the entire defense pack, even this stock, we can see it's giving a good breakout. There's good volumes. There's a good, intraday breakout as well. So 1170, 1165, very good support. Intraday basis, if it's able to hold and not give up these support zones, the stock can rally towards 1250, 1280.
Right, that's the call coming in on some of these counters that have been very clearly seeing a breakout. On the sell side is actually another one from the defense pack, Garden Reach. I know it looked good around levels of 850, 880, but now 930, almost 930 on Garden Reach. Still looks good, still a buy.
Definitely, I think it's heading for a breakout. The fresh breakout will come anywhere above 950. That could act as a small hurdle, maybe for a 2 to 3 days from current level. If you look at it from 925, 926, from here on 950, it can act as a small hurdle. So anybody already entered at a lower rate can look forward to some partial booking around 950. A fresh entry or fresh further rally can only be seen once it's able to cross 950. Above that, the stock can definitely test 1,000, 1,020.
Right, that's Garden Reach 1,000, 1,020. This one's been looking good from levels of 850, 880, and of course now seeing a breakout this morning with a massive gain as we see it. But Soni, we'd love to talk to you longer, but a little out of time. Hopefully we'll catch you next week again. But for now, looking good on the cards or on the street. Lots of stock-specific trade that we are seeing as we read the markets. Bank Nifty, like Soni said, is what you want to be tracking. Well, just a quick mention of stocks that are looking good across the broader markets. Tejas Network is up 18.5%. Interestingly, Honasa started of the day fairly quiet, but remember there has been a brokerage upgrade and the gains have come in over the last couple of minutes of trade, and that, Ekles, is a trader's delight because you've got a flat to marginally highest start, but the stock now trades the gain of 9%. Garden Reach has been looking constructive, a very clear breakout on that one. Cochin Shipyard is having a good day too. HAL, BDL usually are the front runners in the defense pack, but Mazgaon Docks too is seeing some buying. On the sell side, you've got counters that are seeing selling pressure. You've got M&M Finance on back of that 150 crore fraud is seeing some pressure, down 5.4%. Elecon is seeing profit taking. Gold has done a little bit of a break this morning, so your gold financing companies are also seeing some bit of cuts. Talking about gold, we've got with us Dharmesh Bhatia, Director Private Banking Emirates NBD, joining in with his trading calls across the commodity universe. Dharmesh, I'll start with gold. It's off 2% this week after a pretty much unilateral move on gold from the start of this year. This is one of those few weeks that it's seen some weakness. Would you buy the current weakness on gold prices?
Good morning. As per the chart and as per the fundamentally, the market looks like a cool-off period is going on in the price, and price has almost from $2,400 has started declining. I'm expecting the further decline in the price, maybe 1 to 2% more further fall can be seen in the price. The war premium has been discounted now and can expect the market to further slide down from the current level. If you have comparison with the spot price, the spot is already at $2 to $3 more discounted. So you can expect the market to correct more from the current level. So I would not suggest any fundamental buyers to buy at the current level, but speculators definitely, it's a good opportunity where you can go short from current level and expect at least 300 to 400 rupees fall from these levels.
That's interesting. So if you're a commodity trader, you could look at going short and go on gold prices. This is speculative trading, like Dharmesh said. So 300 to 400 rupees could be made on gold if you're short at these levels. Is that the same view you have on crude? 87 after seeing a pretty sharp rally, and like you said, the geopolitical stress is eased out, and that's given crude a little bit of a breather. At these levels, do you think bears have any grip? Would you consider going short on crude?
Talking about oil, especially on the WTI part, if you have noticed, all the forward months are trading in backwardation. That means fundamentally the current level is premium and second month, third month is trading at discount. So there is no firm buying going on in the market. The only reason the market rallied was a supply constraint, not the fundamental buying. So there was no physical buying going on in the market. All was being artificially driven. Plus, there is election from more than 40 countries, especially the big forces, US and India. They are the producers and the huge buyers. And if the price goes beyond $90, if I'm talking about Brent, there could be a jittering in the demanding countries, and again the currency would fluctuate. So I would not suggest current level is a good level to accumulate. It's the best level to keep on going short. You can expect the market to go around $77 to $75, in which the buying country and the selling country both are very happy, especially on the OPEC and the non-OPEC side. So you can expect $3 to $4 correction from the current level, that is on the WTI. On domestic market, you can at least expect a 400 to 500 rupees fall, which will also support Indian rupee also on this matter.
What about copper and silver or any other commodities? Do you have a view or a trading strategy on them?
I would go with the copper. If you have seen the copper rally from 2023 to 24, the rally was from 800 rupees to 680. From 680, again, it has touched 840. So the rally has both ways up. The major demand is China. As soon as the China reopened, the market rallied almost 125 rupees from the current level. So currently, this is a peak out 835, 840 is a peak out price, which was again a previous top. I would not suggest you to buy at current level. Speculators can definitely go short with a 5 to 6 rupees risk, and downside you can expect the market to head again 825 to 820. The dollar should rise from here with the election supportive, and you can expect if dollar started rising, the commodity will not support at this hype level, which is like almost a 24 months high, and you can expect a sharp correction from current level.
Right, that's the word coming in on a bunch of other commodities. Dharmesh, good having you on the show and getting some perspective on crude, gold, of course, copper, and some of those other commodities like you mentioned. In the meantime, the markets are trading flat. A little bit of profit taking, which is on the cards, is what the street is witnessing, with about a 30-point gain actually on the Nifty now. So it's oscillating between gains and losses as we see it. Bank Nifty as well trades flat. On that note, we'll slip into a break, but there's a lot more programming lined up, and it's a wrap on the show. But like I said, stay tuned for more on the other side.
I pledge to vote and encourage all my colleagues at Godrej Industries Limited and associate companies to exercise their voting rights. It's the essence of democracy, and we stand firmly behind it. I would also urge everyone else to vote. We are thrilled to join NDTV's pledge to vote campaign and help spread the word in the corporate world and beyond.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-presented by Panasonic Green Impact.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively. meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hello and welcome. You're watching the Small and Mid Cap Show. I am Mahima Vajrajani and with me is Harsh Saita. Well, before we move on to the two interesting managements that we're going to speak to today, let's take a quick check on how the markets are panning out to be. In terms of the benchmarks, the Nifty is trading in a tight range of around 80 points, roughly 50 points away from its day's high, currently trading around 0.2%. In terms of Nifty 50, the gains are led by stocks like Bharti Airtel, HCL Tech, Adani Ports, Tata Motors. In terms of contributors, if we can pull up the Nifty contributors, in terms of the green, the stocks that are in green include Bharti Airtel, ITC, SBI that are pulling up the Nifty. In terms of stocks that are pulling down the Nifty include L&T, ICICI and Tata Consumer Products. Now in terms of Sensex, the Sensex is also trading in a range of around 300 odd points, roughly 200 points away from its day's high, currently trading at 0.23% higher. Now in terms of the broader markets are clearly outperforming the benchmarks today. The mid cap 100 is up around 0.67%. For the small cap 250, it is up around 0.63%. If you can see the breadth of the market, the advanced decline ratio is skewed towards the greens today. Around 1357, that advance and decline around 471. But something that is really standing out today is Nifty Realty, Harsh. I mean, it's up about 2% as we speak. What are you gathering from it?
Well, yes, Nifty Realty has had a really good run, you're right, 2.5% higher if we can pull up the constituents as well, and pretty much all constituents in the green within the Nifty Realty. You have the likes of a Soba, DLF, Loda, all of which are gaining 3+%, carrying the Nifty Realty higher. So that's one positive. Suntech probably the only one which is around up just about 0.25%, not doing too much in trade within the realty space. Let's also focus in on some specific names, something like a Tejas Networks up roughly 19% in trade after a strong set of numbers. We also have Hudson Agro up around 11%, and we have the management of Hudson Agro joining us maybe in 30 seconds or so. I also want to try and focus in on Reliance Industries because that's the one which is probably pulling down the Nifty a wee bit, around 1/3% lower, mind you, a heavy weight and therefore slightly lower on that one. Let's pull up also something like a Rallis India down 3% on the back of numbers. KP Energy up 5% on the back of order win. Patel Engineering doing really nothing on the back of the announcement with regard to issue of shares. Honasa, Indus Towers, if we can lastly pull a couple of those up 8%. Honasa, 2.5+%. Indus Towers. Honasa, positive note coming in from Jefferies. Indus Towers seeing a positive note from CLSA. 28 to 53% upside on both of those is really what is pulling some of those movers within the BSE 500. Now, we'll switch focus to Hudson Agro. Plenty happening in this space. And we have RG Chandramohan, who's the chairman at Hudson Agro, to come and speak with us. Thank you so much, sir. Welcome to NDTV Profit. It's a pleasure having you here.
Thank you.
So, sir, first off, I want to try and understand the traction with regard to volumes for Q4. Numbers are very solid, of course. Volume led largely because there's been no change in price per se.
Yes, it's the volume growth and not the price inflation.
Sure. And so what's driving the volume traction in your view for Q4, and can it last in FY25 as well?
See, last 3 years, the COVID after effect was also hitting us, and it created inflation last year. And after that, it is settled and prices are corrected. And those corrections took the first half of the year. From the second half, we are comparatively well settled. So things are improving, and the market front also is helping us. And we are able to focus on business other than attending to the COVID issues and all that. Things are improving.
Understood. Mr. Chandramohan Mahima this side. Well, I want to understand from your entire portfolio, what are the products that are actually adding the value? I just want to understand the mix in terms of what products are adding value, and how much is, ice cream different from your overall milk products then?
We don't have the type of breakup. We are actually of the opinion there is no separate value-added product. If it is branded and if it is having the market leadership, that's a value-added product. We don't believe in this product is value-added, that product is value-added. Or we are into 96% of the sales is only branded goods, that is value-added.
Yes, sir. So I take your point. I just want to try and understand the mix a little better. As you have evolved with regard to products within if I can call it the value-added basket, from a perspective that you are moving more towards stuff like chocolate, more towards stuff like ice cream. And as you are moving into some of these spaces, what's the kind of mix that you are expecting to see in FY25-26 from some of these products? How do you expect the mix to evolve?
Now, if you leave milk, commodity and feeds, 35% will be the normal things on ice cream, curd and all that.
Sure. And so with regard to the mix, what is it currently in terms of what percentage of top line is milk versus other products, and where will that go in FY25?
No, 32% is the present, means it will become 35% in the coming year.
Understood. Sir, I also wanted to understand how have the raw material prices been like. From what I've understood, that milk prices have eased down for the last quarter. How have they played well for you, one thing, and going forward, how do you expect? Because from what I've understood is that, your inventory levels have gone up. So you've stored inventory because your raw material prices have gone down. So what does this play look like, and how will this impact your top line going forward?
See, last year has been an abundant supply of milk for all the people. And this is the time to store and reserve. And we have stored and we have kept a reserve. This year we are expecting an acute summer according to the Weather Bureau. If that is the case, the flesh may not be as good as last year. But we have got a war chest of commodities. In any eventuality, the cost of inflation will not hit us. And we are well prepared to meet any contingencies without any difficulty. And we will not be surprised by the price increase or anything. And we will be able to manage with our own stock in a much better and competent manner.
Understood, sir. That That's good to hear with regard to preparedness. Just with regard to how the margins are therefore evolving as a result of this, and therefore you might expect more stability in terms of margins in FY25. Is that a correct way to look at it? Can margins sustain above 12%?
Definitely, margins will improve better than the last year. Margins have to improve, and also we are expecting around 15% increase in top line and almost 1 to 1.5 basis point in margin. Both are expected.
Right, point taken, Mr. Morgan. Now, I want to understand in terms of debt. From what I've understood is that, for March FY23 ending, your debt was around 1,500 crores, both short-term and long-term, which has gone up to around 2,200 odd crores. So, how does the debt trajectory look like? Where do you think that, from when do you start the debt will reduce?
See, this is almost half of it is term loan and term loan and other things, and most of it is stock. But this stock will be very useful to us in the next 6 months. Gradually, it will get diluted, and we will be still maintaining some stock, but the debt levels will start falling.
Sure, sir. And extent of that fall, how much can we expect that to fall by?
We are not in a position to give any guarantee on that, because probably it all depends on how far the lien will be acute. Based on that, the stock prices, stock volume quantity will vary. But this will give us price stability without inflation. That's the only thing right now we are in a position to say.
Sure, understood, sir. And just with regard to capacity utilization, how will it evolve, especially with regard to your Solapur and Govindapur facilities? What are the capacity utilizations at these facilities currently, and how do they evolve in FY25? They are expected to get better, if I understand right.
See, in ice cream, we have 3 factories, and the Govindapur is the 3rd largest factory. Last year, we were able to do 50% only. But 24-25, we will be able to do 75% utilization for 2 reasons. These 2 factories are already saturated last year itself. So any growth will just go to Govindapur automatically. So this year we will be able to have better utilization of property. And also Solapur is likely to do much better, because Maharashtra also we are gaining momentum. And we are also supplying to North Karnataka and North Telangana from the Solapur factory. So both capacity utilization is likely to substantially go up.
Understood, sir. So I also want to understand that what do the margins look like when it comes to your, value-added products versus the milk that you're selling. Where is the where does the value come from exactly in terms of margin then?
I don't have any value-added product. Every brand is a value-added product. I explained to you categorically.
So,
even milk value-added product. We are doing well. Our margins are safer. So there is no for us, and we don't do it also.
Understood. So any kind of bifurcation that you can give us versus milk versus your the milk products then?
This is internally input problem. It's not for external discussion.
Okay. Okay. So then one more question to you. You've given a revenue guidance of around 10,000 crores, and right now your revenues are around 2,000 odd crores. So by when do you think you'll reach the 10,000 mark that you've guided?
We will be close to it by this year itself, 24-25 itself. Once when I am talking about 15%, from 8,000 it's about 9,200. It may be 15, it may be 20 also. It all depends on how the monsoon is going to turn out. We are most likely to come closer to 10,000. If not this year, next year we will cross it.
Sure, sir. And with regard to this revenue number, you've guided for a 15% growth, which is quite healthy. Pricing to remain stable, and therefore all of this will be volume driven?
Volume driven. There is no price increase we are anticipating. It's all volume driven.
That's good to know, sir. And just with regard to, you mentioned that the heat wave may have an impact with regard to milk production in the country. Does that therefore give you an advantage given the way you have shored up on your inventory versus competitors?
Compared to other people, probably we are well equipped, I can say. Well equipped. The reason being, In the flesh, we were able to gather all the milk, whatever that was supplied. And the procurement has gone up by 20% compared to the earlier year. So we accommodated milk, and today that is just going to help us in the process. In case if there is a acute lean also, we can manage comfortably. If there is a moderate lean, we may be able to sell some commodities at a good price and get out of it.
Okay, point taken. My last question to you, sir, would be that, you've mentioned in your con call that, you continue to explore export of ice cream to various countries. So I just wanted to understand what kind of initiatives you've taken in this regard.
We are already available in 4 or 5 countries, and we are trying to explore a few more. We are mainly looking for smaller countries where probably it is definitely penetration is easier. A country like Brunei, a country like Seychelles. We start looking at these type of countries, and we are already exploring it.
Well, okay, Mr. Chandramogan, thank you so much for taking our time and speaking with us at NDTV Profit. We'll now slip into a short break, but stay tuned. We have more on the other side.
Namaskar. After 5 years, we are again getting an opportunity to exercise our right to vote. This is a right which has been earned after a very long and hard struggle by our great leaders. We must not waste this opportunity. Once in 5 years, we get this opportunity to determine how our country will be governed, what will be the policies which will be followed to achieve economic, social development of the country. I have pledged that I will vote. I have appealed to all my family members and friends to come out and vote for the development of our great nation. Jai Hind, long live democracy, long live India.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can
Welcome back. You're watching the Small and Mid Cap Show. Well, one stock that is in focus is Rajratan Global Wires. They came out with the Q4 results where revenue is up around 9%, EBITDA was up around 2%, margins have slightly taken a hit. But to discuss more about this, today we have with us Mr. Sunil Chordia, Chairman and MD of Rajratan Global Wire, who joins us now. Welcome to the show, sir.
Thank you, Mahima.
So, Mr. Sunil, my first question to you would be that, do you see any kind of volume degrowth in India taking place and you're prioritizing Thailand because of that?
No, it's not like that. Our customers and our business in India is independent of our global business from Thailand. So the customers in Thailand are different and customers in India are different. In India, there is volume growth is not as expected, not closer to what we had targeted, mainly because of major imports in 2 quarters, Q3 and Q4 of this year. So our market share was lost because of that.
Understood. So from what I've understood is that as compared to Q4 FY23, the mix between India and Thailand has changed from 75-25 to now 50-50. So going forward for FY25, how do you expect the mix to be then?
No, it is not yet 50-50, but of course it has grown from where it was because we completed our expansion in Thailand last year. Our capacity increased to 60,000 tons in last year, which has become equal to our Pithampur facility. And this year we had a major growth in volume, almost 42% growth in volume in Thailand.
Sure, sir. So Harsh also joining in. So I want to try and understand, so what's happening with regard to India, and do you see a reversal with regard to volumes in FY25 where India is concerned, especially given that new capacities are coming on board in Q1 FY25?
Yeah, new capacities are coming up, but market is also growing. The tire market is supposed to grow at 7-8% per annum. The automobile is growing, the tire consumption is growing. And we are also starting our Chennai facility very soon. And we will do at least 14,000 tons of production from our Chennai factory. So I don't expect any growth in our Pithampur facility in terms of volume, but Chennai will produce additional quantity of 14,000 tons. We are also committed to do that with the PLI. We are getting PLI in our Chennai plant, and this much volume we have to come, anyway produce there.
Understood. So, since you talked about the Chennai facility, from what I've gathered, it'll have a capacity of almost 60,000 TPA. So, I want to understand that how much will this aid your revenues and margins by then?
No, so Chennai will be a 60,000 tons capacity. So, in 4 years, we want to achieve 60,000 tons of production in Chennai and a projected revenue of 600 crores from Chennai.
Understood. And in terms of your capacity utilizations, what are the current capacity utilizations?
Both in India and Thailand. Thailand, we did around 75% capacity utilization in FY24. India was 85% capacity utilization. Thailand this year will improve the capacity utilization, and we target to cross 50,000 tons production in Thailand.
Understood. And sir, with regard to the fresh capacity coming on board, 14,000 tons is what I gather for FY25. Where does that, you expect this kind of elevated utilization from India to continue despite the weak Q4 in terms of volume?
Yeah, because Chennai is strategically located very close to customers. We are also closer to port. So in the first year, we may not get major approvals from all the tire companies, but there are customers where we have the possibility of selling or even exporting from Chennai in the first year.
Understood. And sir, with regard to just raw material prices and margins, how are India margins versus Thailand margins? Because from what I understand, you have a bit of a monopoly, leverage where Thailand is concerned. And therefore, how are margins at both of these geographies? If we can just compare that. And what's the downside risk you see with regard to both raw material prices as well as the China factor?
Yeah, so, raw material prices in last 1 year has come down by almost 25-30%. So, and accordingly, the bead wire prices have also come down. close to 25-30% from the peak. And that is why you see, in spite of 16% growth in volume, there is no growth in the top line of the company. It is because of the correction in the prices. Number two, the China factor is very much there in Thailand also. So we are competing with the global players in Thailand, including China. We are also competing with China in India, but Chinese are not encouraged to sell more in India. And that is why the margin in India is little better. And our India capacity is also higher. We are approved with all the major customers, and strategically it is located in central India. So margins, because of all these reasons, margins are better in India. So in India, we do around 17 to 18% EBITDA margin, and in Thailand, it is 9% EBITDA margin.
Understood. And I also wanted to understand, with regard to your Michelin contract, I wanted to understand what kind of locations is that contract with respect to one thing, and second, any new contracts are you expecting from Michelin then?
Yeah, so we are now making efforts to sell to tire companies in Europe and America. We have started a company in America to market our products. We have also set up an office in Europe, and we have got 2 major approvals in Europe for regular supplies to tire companies. And in the current year, we are expecting at least 2 to 3 more approvals from customers in US and Europe for regular supplies to those markets.
Understood. And so from what I understand, that your Chennai plant is nearer to a port. So then, do you think that your exports will go up? And if yes, by how much percentage do you expect your exports to go up?
Yeah, so up till now we are exporting from our Thailand factory, and now Chennai is also located closer to port. And in long run, in 4 years' time, we expect at least 50% of Chennai production to be exported for global customers.
Understood. And so in terms of capex, if you can tell us what kind of capex you're looking at, because you'll have to increase your capex in terms, to increase your capacity. So then, what is the guidance that you'll give for your capex number?
Yeah, so majority of capex is done. Of course, some 60-70 crores will need to be spent for completing the capacity up to 60,000 tons in Chennai. But our capacity expansion took place in Thailand last year and 2 years back in Pithampur plant. So going forward for next 2-3 years, we don't expect much of capex to be invested for capacity. We have to work on utilizing this increased capacity.
Well, okay, Mr. Sunil, thank you so much for taking out time and speaking with us at NDTV Profit. That was the management of Raj Ratan Global Wires. Well, it's all that we have on the show for now. Stay tuned for more news and updates on NDTV Profit.
I pledge to vote and encourage all my colleagues at Godrej Industries Limited and associate companies to exercise their voting rights. It's the essence of democracy, and we stand firmly behind it. I would also urge everyone else to vote. We are thrilled to join NDTV's pledge to vote campaign and help spread the word in the corporate world and beyond.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. we have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social. Good morning and thanks so much for joining in. You're watching NDTV Profit. This is Ask Profit. My name is Alex Matthew and with me is Smriti Chaudhary. Like the name suggests, this show is geared towards getting all of your questions on stocks answered, whether they're short-term technical related questions or long-term fundamental questions. You can send all of them to us on any one of our social media platforms or indeed on the number that is on your screen right now. Let's first take a look at where the markets are right now, and it's a break in the selling. It's in fact the second day of gains for the benchmark indices as well as the broader markets. Currently, the Nifty 50 trading with gains of about 0.3%, 0.3%, and you have the broader markets that are doing better. In fact, you have the mid-cap index that's up at very close to the high point of the day, up about 0.8%, and you have the small-cap index that's up about 0.7% or thereabouts. Among the key contributors, and in fact, let's look at the sectors that are moving in trade. You have the realty index right at the top. Okay, so let's talk about the key contributors on the benchmark index first. Bharti Airtel at the top of the list, contributing quite a bit of the gains for the benchmark. And you have ITC, HCL Tech that are doing particularly well. HCL Tech, remember, still to report its numbers. It'll come later in the month. 29th, I believe, is the date when it will report its Q4 numbers. Reliance Industries is proving to be a bit of a drag in trade today. It's down. And in fact, the worst performer on the Nifty 50 in terms of contribution at least. Sun Pharma as well as HDFC Bank also lagging. HDFC Bank, remember, was a laggard in trade yesterday as well, losing over 1%. Let's talk about one stock that is outperforming though, and that is Tejas Network. It is up as much as 20% in trade today, and it was up as much as 16% or thereabouts in trade yesterday, and this is on the back of Q4 numbers. And in fact, let's talk about this a little more. This is something that is significant because it's a return to the black for Tejas Network.
Yes, definitely. And we saw some stellar numbers in case of Tejas. And first, let's break down those numbers. And to do that, we have Rucha joining in to tell us what worked for the company this time.
Rucha, over to you.
Yeah. So
there was a beat on revenue and margins as reported by Tejas. However, this beat was led by the BSNL 4G deal. Now the revenue grew 4 times to 1,300 crore, while the margins were at 23% versus an estimate of 7.5%. The net profit was estimated to be at a loss of 12 crore. However, the company reported a profit of 147 crore during the quarter. Now, this growth was led by the wireless segment, largely coming from India, while the order book was at 8,300 crore, 95% of which also came from India. Now, what the management mentioned in the conference call is that beyond the overall market growth, it is also looking at several high-scale opportunities in both Indian and international markets. So, the stock was up 40% in last 5 days and 70% in last 1 year.
Thanks so much, Rucha, for laying that out for us. In fact, that's a perfect moment or opportunity for us to go to our experts. And we've got Avinash Gorakshakar, who is Director Research at Profit Mart Securities, as well as Swati Hodkar, who's Senior Equity Technical Analyst Research at Nirmal Bang. Thank you so much to the both of you for taking the time. Very good morning to both of you. Avinash, I'll come to you in this one. Tejas Network, surprise results. And of course, the stock is doing incredibly well. The question is, if you are holding, what should your approach be? And if you're looking from the sidelines and thinking, why didn't I get in earlier? What should the reaction be?
So I think, good afternoon, Alex. I think, see, first of all, numbers have been much better than the street expectations. I think top line is almost 4 times higher, and the company has come back in the black as compared to a net loss in quarter 4 of last year. And I think this traction is going to continue because, looking at the kind of action in the 5G network business, Tejas is one of the key players which actually manufactures 5G network hardware equipment. And I think they are sitting on a very healthy order book. Plus the fact that now Tejas Networks is part of the Tata Group, that also has given a lot of confidence to the markets. But one point which I want to note, Alex, is that I was looking at their year-end numbers. The company still generates a negative operating cash flow. So I think, this is something which over a period of time, I think markets would expect that this becomes positive because, without operating cash flow, profits have actually got no value. So I think going forward, at least in the next 6 to 12 months, hopefully this operating cash flow becomes positive and then we could see a further round of re-rating here.
Okay, so would you buy at this juncture, Avinash, or would you wait for that metric to change?
So I would prefer to wait because, Alex, something which has gone up by 70% in a month and 40% in the last 5 days. This is a market where I think I would wait for opportunities, and I think markets are going to be extremely volatile. Last couple of days, markets have gone up, but I think there are going to be a lot of headwinds going forward, especially from the election schedule, from the global market. So I think it's better to wait and watch. One could definitely get an opportunity to buy the stock at slightly lower levels. I think the results have just come in a couple of days back, so the excitement is high. But I think one could definitely wait for some time, and obviously on weakness, one could definitely get a better risk reward. That's the logic from my side.
Right, fair point. Just adding on to this, we had Ashwini Agarwal in the morning at the Talking Point show, and he talked about Tejas, and he made a very interesting point. He said that now the Tejas already had a technological backbone, a very strong backbone of technology that they held. However, with Tata coming in and taking over Tejas, they've now given them the scalability or that sort of ability to scale their business, and that we're seeing in the numbers that have come out this time. But let's start off with the questions now. The first one is on the counter, DMart. This one's from Sameer from Kolkata. Good morning, Swati. The question here is that they already have DMart. Now they haven't mentioned the buy. Okay, they have 4,055 is the buy price for this specific counter. It's above that, trading around 4,800. Should you book some profits at this juncture?
Yeah, good morning, both of you and all the panelists. The DMart technically looks very positive on the weekly chart as such, and the stock is forming the flat pattern. It's on the verge of giving a breakout of the same. The volumes are really doing very well along with the price momentum. I will suggest to hold on since the buying price is coming at the lower levels. Upside, the breakout comes to at around 48.50 levels on the closing basis. Today we got a high of 48.90, but somehow it doesn't manage to sustain above the same levels. But once it manages to give a positive closing above that level, I believe this rally is likely to be extended towards 5100 to 5300 on the higher side. So yeah, I will suggest to hold on this particular counter as long as it sustains above 46.50 levels on the downside. So you can keep a stop loss, profit stop loss, and hold the long positions for immediate target of 5200 to 5400 levels on the high side.
Okay. All right. Just to clarify, 4650 is a stop loss?
Correct.
Okay, fine. All right. Chitranjan Patra has got the next question. HAL is a counter that he's looking at. That's Hindustan Aeronautics. And he's looking at buying the stock and adding to what he already holds. He's bought at levels of 3010. Avinash, what's the view on this particular counter?
I think Alex is a great kind of opportunity in the defense space, and I think already the company is sitting on an order book almost 55 to 60,000 crores. See, I think if the investor buys the stock at this level, already he has shares at around 3,000 odd rupees. I think he needs to take at least a 2-year view, and I think the risk reward in the next 2 years could be quite significant because this is one company which has got global, scalability potential. The Tejas aircraft which has been made, I think is going to now get scaled up in coming quarter. Next, possibly see a very strong risk reward happening here over the next 2 years. So I think if he has a time frame which is long term, he can definitely buy on dips and add to his portfolio.
All right. Next counter we're talking about is Aditya Birla Money. Now this one's from Ravindra Babu from Tirupati. They say they have already bought the stock. Not the buying price is not known here, but it's logged at upper circuit post its results, stellar results in Aditya Birla Money. So Ati, I'm going to come to you on this. This is from a mid-term perspective. The time horizon is probably less than a year here. So what would your suggestion be? Should you suggest holding on to this or book profits right now?
I would suggest to hold on this particular counter as of now. It's trading at 128 to 129 levels. Means downside, it has a very good support at around 120. So as long as it sustains above that level, the view will remain a positive. On higher side, we can see the breakout if the stock manages to give a breakout of 135 levels. Any move above that level, we expect a positive momentum to be carried forward to at least 145 to 150. So you can hold the long positions as long as it holds the 120 levels on the downside.
Okay. I want to come back to you on a stock that has done particularly well in the recent few weeks, Swati, and that's Mazagon Docks Shipbuilders. And we've got a question from Geeta. She's asking about this, and the stock is up as much as 4.67% today. In fact, if we can pull up the nearer term time charts and see how the stock has done in the recent past, take a look at that. Close to 20% over the last 1 month itself. Swati, the question is from Geeta, and she's asking whether it can be still a good buy at these levels for the long term.
Yes, definitely, Alex. This particular counter is also really doing very well on the monthly. You have rightly pointed out that it has given the return of almost more than 21%. And if you look towards the larger degree chart, say the weekly or the monthly, the line chart is forming the cup and handle formation, and it's on the verge of giving the breakout on the higher side. The breakout comes at around 2300 levels, and I believe looking towards the technical setups, the chart is also forming the upward rising channel. So we can definitely go for a long position at the current market price as well, or any tips towards to at least 2100 or between 2000 levels you can add on. For a longer term horizon, I'm looking for target of 2600 to 2800 levels. So definitely can add on this portfolio.
All right. The next counter, Swati, is Moschip Technologies. Now, the question here is what's the long-term and short-term outlook on this one? You look at the 1-year chart and it's given gains of over about 148%. 1 month, 66% up. What kind of upside do you see from a shorter term and even a longer term perspective based on the charts?
Yes, this particular counter is also really doing very well on the technical front. But if you look at it on the larger degree as such, yes, definitely it's a buy call on this particular this chip. But I believe that as long as it doesn't give the breakout of a 160 level, the momentum will get restricted. And once it manages to give it the breakout of, then smooth or swift rally, we can see up to at least 180 levels. So as of now, the downside, we can say that 145 is acting as a very crucial cluster support zone. So as long as it hold that level, one can definitely hold their long positions by maintaining a stop loss of 145. Immediate target will be a 180 to 190 on the high side, we can see.
Very close. Can you explain, Swati, why you keeping the stop loss so close to the current target, current market price?
Because this particular counter has already given the rally and the market is trading at nearby its all-time high level, we can witness a profit booking at any point of period of time. The mid-caps has already shown its rally on its way. So I believe that the profit booking can be seen at any point of time, and one should at least book their profits or at least cap their profits and should not face any kind of a losses. That's why I'm giving a strict stop losses in such kind of a market.
Fair point. I'm glad that you spelled that out. Avinash as well as Swati, we have to slip into a very quick break. Viewers will be back on the other side to take more of your questions. So do stay tuned.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice.
Welcome back. You're watching Ask Profit on NDTV Profit, and the next question we will take is from Varun, and he's asking about Vodafone Idea. The question is whether he can buy at the current market price, which is very close to the 14 level. In fact, it has breached that 14 level in trade today, up nearly 9% or more than 9%. And you would probably have followed Smriti's updates over the last few days, particularly yesterday, when the results of the FPO, or at least the buying of the FPO, came to be known towards the end of the day yesterday. It was oversubscribed, but the retail portion was subscribed about 0.92 times. So most of the attention or the interest came from the institutional buyers. Avinash, the question is, a lot of people are putting a lot of confidence in Vodafone Idea on the back of this fundraise. Is it something that you should consider investing in right now, with the anticipation that ARPUs will go up, business will improve, or is it an avoid from your perspective?
I think it depends on, Alex, what exactly is the time frame, because people who are expecting the stock to go up, when the FPO gets listed and expect some listing gains, I think that seems to be a little difficult. But I think if one look at the next 2 years.
Okay, I think we're having some serious trouble with Avinash's feed. I'm going to try and get that fixed. But in the meanwhile, let's very quickly go across to Swati, just to get a sense of what she thinks about Vodafone Idea. We've seen quite a bit of volatility, chop and churn in the prices on account of the fundraise announcement and everything that has happened in the interim. But Swati, from a technical perspective, should it be bought at this point?
Yes, Alex, we have to see it on a larger degree, the charts. And from the start of the 2023, we have seen that the stock has made a low of at around 5.7 rupees. And from there onwards, we have seen the rise towards to 18. If we draw the retracement of that particular rally, the stock has already retraced 50%, which comes to at around 12 levels. So now 12 level is acting as a very strong support levels, and which is also nearby its golden ratio. Whenever we calculate the retracement, golden ratio, we calculate up to 61.8 has been considered as a golden ratio. So 12 rupees is acting as a very strong support level in this particular counter. From the last 2 months, it has just touched that level. And again, we are witnessing a bounce back rally. So those who don't want to miss the rally on the high side, they can buy at least 20 to 30% at the current market price. But if the stocks comes down to any momentum or dips towards to 12 rupees, definitely one can go for a long positions by keeping a strict stop loss of a 10 rupees. And I'm looking forward for an immediate target again back towards to 18 and above that level. 24 levels can be seen very soon. So for a longer term horizon, definitely it's a buy.
All right. Now we have another question, and this one's from Neeraj from Hyderabad. This one on the counter no sell. Now it's they bought 100 shares at a price of 249. If you can pull up the chart and see, okay, it's trading at around 262, slightly higher levels from there. Swati, what's the outlook on this one, and would you suggest holding on to this in a maybe in a short term versus a long term time horizon?
Yes, Smriti, on the long-term horizon, definitely it's a buy call, but it's trading in a very slow momentum counter as such. If we look towards the last 6 months data, the stock has got stuck within the range of a 240 to 260 levels. It's not able to give the breakout of a 260, 265 levels on the closing basis. We need the breakout on the closing basis, and only we can say that the this particular chart stock will come down to the next level on the high side, at least 280 to 300 levels. But at the current market price, the stock is on the formation of the inverse head and shoulder on the line charts. It's just forming the right shoulder. So it will take little bit time, and upside the target means breakout comes to at around 270 levels if we consider the inverse head and shoulder formations. So any move above 270, we will attract some kind of a buying on the technical front, and stock may continue this rally at least towards to 280 to 300 levels. So one can definitely hold for a long positions. But as I said, I will give a stop loss at around 255 levels. So you can hold the counter with a stop loss of 255, for immediate target will be 280, then 300 levels.
I just want to point out to our viewers that we're having a little bit of trouble with the feed with Avinash, but we're going to try and get him on the phone line to get him to answer a few of your questions. In the meanwhile, let me go across to Swati for the next one, which is from Parth, and he's asking about Z Entertainment. Swati, he has bought at levels of 225. And he's got 176 shares, so slightly elevated, and he's wondering whether to exit and what his exit strategy should be.
But as of now, we are witnessing, we are witnessing some selling pressure in this particular counter, and it's already trading near the oversold zone. So we might not see more selling pressure in this particular stock, but definitely we will see some turnaround once the stock manages to find out the good support between the 140 to 135 levels. So the depth is limited on the downside, so I will not suggest to exit the long positions. But since you have held it for so long, I will suggest to hold this particular counter for some more period. I believe that once it manages to give the formation nearby 135 levels, we will see some turnaround towards to 160 to 180 levels. So it's a hold from my end. I will not suggest any stop loss at the current market price. But definitely if you want to average it out, 135, 130 levels will act as a very crucial level to take your average positions for a target of 170 to 180.
All right. The next counter we're talking about is Federal Bank. This one's from Vinod from Chennai, and they say they've bought the stock at a price of 147. It's slightly above that, trading close to 154 a piece. The question is, should they continue holding on to it for a period of 1 year, Swati, or should they switch to something like a Karnataka Bank or even an HDFC Bank?
Yeah, as of now, HDFC Bank and those stocks, private bank has already given the rally. Now it will be a time for the PSU banks. So I will suggest to keep the Federal Bank, because this particular stock has not given a much rally on the high side compared to the another stocks as such, because the whole 2023 year we have seen that the stock was trading within the range of 30 to 40 points only. So in future, if whenever the bank nifty will show some more spark on the higher side, this particular counters will show their rally, or they will try to participate in those on higher side. I'm looking for a target of 170 to 180 in this particular stock, but it will be a slow and steady momentum we will see. But yes, definitely one can hold there into the portfolio. Since it's a buying, it's coming at around 145, I will suggest to hold by maintaining a stop loss of a 135 levels on the downside for immediate target of 170 to 180 for the shorter term.
That's the view on Federal Bank. Avinash is back with us. Avinash, you were speaking about Vodafone Idea when we were rudely interrupted by the network. Let's talk about what you were saying.
My apologies, Alex.
No problem.
See, Alex, guys who want a short-term kind of listing gain on the FPO, I think any big upside is ruled out. But I think most of the negatives are in the price. And I think if the company can manage to increase its subscriber base, increase its ARPUs, then I think definitely, the risk reward could be significantly better. But I think keep a time frame of at least 12 to 15 months, because see, the money which has been raised now, Alex, is largely for the 5G rollout, expansion purpose. The debt on the books considers to be quite heavy. In fact, the debt is around 2,40,000 crores. So I think you're going to see a little more time before the company actually becomes profitable at the net profit level. So I think only for those investors who have got a slightly longer term view, you can hold on.
All right. The next counter, Avinash, is Trend that we're talking about. It's this one's from Dhruvaj, and they bought the shares at 1,037 levels. It's significantly higher from there, and even the prospects of Trend look very, very positive. So from a longer term perspective, how are you viewing this stock, especially in terms of other similar counters like an Aditya Birla Fashion and other counters in that sort of space?
I think, first of all, the margin of safety is very high for the investor, considering that you have purchased the stock at a very low level. My sense is if they keep a 2-year kind of time span, then even a 50% upside, from the current level looks possible. The company has maintained a fairly good kind of asset turnover, decent profitability margins, and their inventory, turnover has also been pretty good as compared to the other players. So I think, having said that the retail story is a long-term story, I would definitely suggest them to hold on. I think if they don't require funds, it's better to hold. I think one could expect a decent risk reward over the next 12 months.
Okay. LIC of India is the next counter that we're talking about, and we've got Satya, who's bought at levels of 1,030. The stock is currently trading at below that at 984, but not too far away from the buying price. Swati, what's the view on the charts for, well, he hasn't specified a time period, but he's looking for a target.
Yes, LIC is really doing very well. 984 is the current market price. As of now, in the last 2 months, we are witnessing that the stock was under the correction mode, and now it's on the verge of giving the breakout of the falling trend line. So I believe upside, we are looking for a target of at least 1,050 to 1,090 levels on the high side. So one can definitely go for a long or hold the long positions by keeping a stop loss of a 960 on the downside.
All right. This one's, the next counter we're talking about is Bajaj Auto. Now, this one's from Kamath, and they say that they bought the stock in January of 2022 at a price of 3,500 from a dividend perspective as well, along with growth, of course. Now, they say the growth is fabulous, dividend is, however, the dividend seems to be falling. Now, they wish to switch from this stock and need a recommendation, and the time horizon here is 3 years. For about, I mean, it's hard to put a number to growth in terms of 12 to 14% that they're asking. But from a perspective of growth and dividend, what other counters would you suggest apart from Bajaj, if you want to switch from Bajaj Auto?
Avinash, the question's for you.
Yeah, I think my guess is, dividend is not that important as compared to, the growth potential. I think Bajaj Auto has been a great, stock pick by the investor. They've already made a 3x kind of upside. So I would say that continue to hold this share, because we could see levels of even 10,000 over the next, say, 12 to 15 months. The company recently made a buyback. I think the two-wheeler market has taken off pretty well. So I think rather than looking at only the dividend option, I think look at the growth opportunity. The two-wheeler segment, according to me, is going to do exceedingly well in FY25, and Bajaj Auto would be a big beneficiary. So I think if you want to play purely on the dividend yield factor, then there are stocks like PFC, REC, or typically even a NTPC, where possibly the growth is moderated, but the dividend yield is much higher.
I mean, that used to be the case, particularly over the last year, but Avinash, they've surprised us on the upside. Perhaps that surprise may not happen going forward. So I take your point entirely. Thank you so much for joining in, Avinash, as well as Swati. Always a pleasure having you on the show. And viewers, we've tried to answer as many questions as we possibly could. Hopefully the conversations that we've had today have benefited you, even if your specific question was not taken. There's lots more coming up over the course of the day. It's a goodbye from Smriti and myself and the team that put the show together. Thank you so much for watching.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for
Good morning and welcome. You're watching, or rather good afternoon and welcome. You're watching Hot Money on NDTV Profit. I am Harsh Saita. Let's quickly take a check at where markets are at. We've slipped from the day's highs around 0.25% higher on the Nifty 50. There's the chart, but we're seeing a bit of a recovery now after slipping up a little bit, wee bit through the day. What we're also seeing overall is the broader markets are doing fairly well. You're seeing the Nifty mid cap up around 1% or thereabout. That one's at the day's high. The Nifty small cap as well doing fairly well. And the breadth of the market looking quite good. Let's pull up the advanced decline because that will reflect the breadth. Not bad at all after yesterday's gains of almost 1% on the Nifty. This is not a bad day of trade by any stretch. Let's look at some sectors which have meaning. The Nifty Bank is not doing much in trade today, just about up around 0.1% or thereabouts. But look at the Nifty Realty. The consumption stocks, FMCG doing fairly well. Nifty Pharma is the only one sulking, but outside of that, IT as well as the PSU stocks, all of which are doing fairly well, 0.5% higher on those. But Nifty Realty is the one which we really need to focus on. Pretty much all constituents in the green. If we can pull up the constituents there, pretty much all of them are sitting in the green. So very pretty where the Nifty Realty is concerned. Some specific stocks where there seems to be good action. You look at within the Nifty Realty, you look at Sobha, Macrotech, Oberoi Realty, all of which are up 3+%, including a DLF. But on the back of specific news as well as results, let's pull up something like a Hudson Agro. It's up 11%. Tejas Networks is up almost 20% in trade now. You're looking at a Reliance, which isn't doing fairly badly in trade, but down around 0.5%. Definitely not the best day for the large cap. You know, it's obviously a index moving stock, Reliance Industries, and after a decent set of numbers, down around 0.5%. We saw that kind of trend even coming in from something like an HDFC Bank yesterday, despite delivering a decent set, not doing too badly. I also want to try and flag off some of the other counters which are doing well, and Indus Towers is doing fairly well in trade today. And you also have the likes of a Honasa. It's up 8+% on the back of a positive brokerage note. Some stocks which we will focus on in trade today, something like Tejas Networks, Hudson Agro. We spoke with the management there. Honasa is doing very, very well, and we'll try to delve into reasons why. And something like a Piccadilly Agro, that one too on the back of its numbers is doing decently well in trade. So you're seeing across the board some good traction in some of these counters that we are seeing. And we'll talk about some of them through the show today. We have with us Lancelot Kunha of ValueX Wealth Connect. It's a pleasure having you here, Lancelot. Sir, I want to first up try and understand how you're viewing markets as a whole at the moment. We saw a bit of a correction last week. We're seeing a recovery now. What's the sense? Can this recovery now sustain and take us to higher levels?
I think the momentum at the moment is on the upside. There is, it's of course being tempered by the geopolitical situation playing out in the Middle East, as well as, interest rates in the US and bond yields in the US, which may impact the US economy. So what we are now getting news is that there may be some kind of a peace initiative which will unfold in the next, 3, 4, maybe 2, 3 months. And if that happens, then there could be a moment. Sentimentally, the market would move higher based on the fact that peace is coming in. Second thing that is actually driving markets is the fact that we have already seen our elections in India underway, and by June 2nd we should have the results, which everyone's expecting a very positive government for the markets as such. So given that background, I think you are seeing a trend of the market or the momentum or the sentiment remain relatively positive. And on the back of whatever results have already come out, have been reasonably good by most of the companies, although there have been companies which are, having a global exposure like the IT sector, where we have had, the outlooks being reduced for revenue outlooks for the next year, based on the geopolitical uncertainty and the economic uncertainty that is there in the West. But otherwise, domestic companies or companies that are focused on the domestic business have given good results, and most of them are, have been outlining a better forecast for the next 12 months or 24 months. And that is actually something that people are expecting, that there will be earnings upgrades over the period of time, and that's why the investment will continue in stocks at this point in time.
Sure, thank you. Take your point. I want to first off start by focusing in on a couple of earnings candidates. Tejas Networks is one of them. Stock up 20%, really doing very well in trade today after a very strong set of numbers. Rucha is here with the key details of all that's transpired in Q4. Rucha.
Revenue reported, the Tejas reported a stellar performance in the fourth quarter. Revenue was up 4.5 times at 1300 crore, while margins were at 23% versus estimate of just 7.5%. Net profit was at 147 crore. However, the street expected a loss of 12 crore. Now, this was due to the BSNL deal ramp up in the 4G segment as well as the wireless segment performance. The order book amounted to approximately 8,300 crore, 95% of which was coming from India. Now, the management mentioned that they are looking forward beyond the overall market growth. That is, they want to scale up opportunities in both the markets, India as well as the international markets. The stock is up 40% in the last 5 days and 70% in the last 1 year. Among brokerages, Emkay Global has a buy rating on the stock with 1,100 as the target price, implying an upside of 21%.
Okay, thank you for that, Rucha. Let me take it back to Lancelot. So, Lancelot, talk to us about some of these defense plays, including something like a Tejas Networks. The re-rating and the kind of growth that they're showing is extremely strong. Anything of value in this space, and how are you looking at Tejas Networks in particular, including the numbers?
So I think the numbers gave a very good boost that this company has done well this quarter, and the outlook is also remaining strong. So yes, there is a re-rating here. So the opportunity to buy is if you can make an investment, then one can still see further upside, in this stock. So this space is showing good results. Like I said, many of the companies are showing good results, good performance, and those will continue to see fresh flow of funds in those sectors as well as stocks.
Okay, right. So clearly positive on some of these defense plays, but from defense to agro, we had Hudson Agro in conversation with us earlier today, but stock again up and away 10% higher. Very strong set of numbers. Margins have come in far better, and the guidance seems to be continuing to be on a positive trend. Anushi, break this down for us because stock is up and away in trade.
Right, Harsh. So if you look at Hudson Agro over here, about a 13% of an intraday high. Again, strong set of numbers. If you have to look at the revenue has seen about a 14% of a growth. But more than revenue, it's the EBITDA and the kind of margins that the company has clocked in. The EBITDA moving up about 47% up, while the margins have shifted from the 8% range last year to about 11% this quarter. Again, accounting for both the revenue and the EBITDA growth, PAT also has increased about 108%. But a couple of reasons that we need to see the revenue growth if you have to look at. So again, this is a result of the normalization trend that we are looking in the milk procurement, leading to the better kind of realizations that we are seeing. Also, the base year, that is FY23, did see some of that impact wherein the procurement was not as strong. So that also aided in the kind of revenue growth we are seeing. But other than that, the margins also, if you have to look at the purchases of stock in trade, that went down by about 49 to 50%, which has resulted in the better kind of margins that we are seeing. Another reason is the huge differential that we are seeing between the inventory changes that has happened. So this time there was a negative 162 crore of inventory compared to about 101 crore last year. So that has also resulted in this improvement trend that we are seeing. And again, supporting this is the PAT 100% growth that we are seeing. So, so this is supporting the kind of results that we are looking at for Hudson Agro.
Okay, thank you so much for that, Anushi. Lancelot, some of these agri plays, on the back of what is going to be a tough next 3 to 4 months in terms of weather and seasons. Despite positive commentary coming in from Hudson Agro, but overall, how are you seeing the agri plays as well as Hudson Agro in particular?
Well, I think, if you look at the agri plays, I would agree. I think 1 quarter of good results need not necessarily mean significant improvement, over the next 12 to 18 months, especially because we are going to see a more, let's say, difficult weather and climatic conditions. I mean, this is not only in India, we've been seeing it world over that, climate change is having an impact on weather. And that will definitely affect agri products and agri-based industries. So that is something that we need to be, cognizant of, that this can impact performances going forward. And also, I think when you are looking at the rural economy, it hasn't really picked up as much. We are seeing demand slowdown in rural India, which is definitely going to have an impact on some of these agri companies. So I think while results might have been good and the initial reaction on the stock prices have been good, one needs to be a little bit more aware of how this is likely to play out, and valuation should then be accordingly tempered down accordingly.
Right, valuations need to be tempered down. Thank you for that. Let me again switch focus now from earnings to a candidate which is buzzing on the back of a very strong brokerage note coming through from Jefferies. They retain a buy on Honasa Consumer. The target price also remains 53% upside to yesterday's close, up 8% of course. Mahima, break this down for us. What is Jefferies seeing here?
Right, Harsh, as you rightly mentioned, they've given an upside of potential as per the last closing price of 53%. Now, what they're saying is that the Derma company is the second brand that have scaled up to a level that can be compared to FMCG products like Pantene and Sunsilk. So that is something that is working for Honasa. And active-based BPCs has an exciting global opportunity. And at present, this particular segment contributes 20% of the total share of Honasa. Now, in terms of TDC, they've achieved break-even in Q3 FY24 in terms of EBITDA, and the profit, however, ramp-up will be slower. However, they've mentioned that the management's focus on agility along with growth mindset is something that Jefferies really likes. And in terms of offers active-based products, that are garnering lead of almost 20%, and they've also mentioned that they expect 20% growth trajectory despite the slowdown in Mamaearth. So overall, these are the reasons why Jefferies is bullish on Honasa.
Well, bullish and how? 50+% upside. Thanks for that, Mahima. Lancelot, your views with regard to Honasa in particular?
So I think, the space is a very interesting space, and, Honasa has got some good brands in Mamaearth. They've recently taken over Be Blunt. They have Dr. Sheth's, the dermatological business. So, and most of these are being used, they're using digital marketing in order to expand their reach. But at the same time, when you're building up these brands, it always involves a higher cost and lower margins. So I think profitability, to be seen how it can sustain this profitability, especially in the face of rising competition. And when inflation hits into markets, these are some of the early products that get impacted when inflation is rising. So one needs to keep that in mind while considering valuation. And stock has already gone up significantly in the short term. So I think it's better to wait for some kind of correction in the markets or in the stocks, and then look at accumulating some of these stocks.
Okay, wait for a correction, not as bullish, but time to slip into a very short break. We're going to be joined by the management of Piccadilly Agro on the other side. Fundraise plus very strong set of numbers. Stay tuned, very interesting conversation.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your...
Okay, welcome back. As promised, we have the management of Piccadilly Agro with us. We have Dharmendra Kumar Batra, who's the whole-time director at Piccadilly Agro. Welcome to NDTV Profit, sir.
Thank you so much, Neeraj, for having me here.
Yeah, so sir, I'm Harsh. I have Neeraj alongside me as well, and we'll probably try and break down some updates from your company together. So sir, first off, I want to try and understand with regard to the fundraising via QIP. What's the purpose of the fundraise? What are the plans going forward?
So as you see, we've got this huge surge in demand, which we are thankful for, but we were not expecting it. And so we make about 12,000 kL, that is 12,000 liters of malt every day. And that's quite a lot. That's one of the largest in the country. But the way the demand is coming, we think we will need much more capacity for that. And as you know, single malts don't mature like ENA or other products. You need a gestation period of 5 to 7 years for it. So your capacity has to go up now so that the projections that we have for the next 3 to 5 years can be met. So we are doing a capacity expansion at the existing Indri plant, and there is a new plant coming up in Chhattisgarh where a malt expansion plan is also underway. And so what entails a malt expansion plan is basically you lay down liquid and barrels. So that is a huge capital cost. And most of this, the money which is we are looking for expansion is for that purpose.
Mr. Batra, good afternoon. Neeraj here. So
Neeraj.
What is the current capacity, Mr. Batra, and at what stages would the newer capacities come on stream, assuming that the fundraise exercise is successful?
So we started this exercise before even the fundraise was announced, and the capacity in Indri will commence within this year. So we will be almost 2.5 times the capacity we are within this year, and the next capacity will be installed next year.
Okay, which would take your capacity to what times of the current capacity, if you will?
So if we are 12,000 liters of malt every day today.
Right.
So it will go up to 30,000 a day by the towards the end of the year, say September, October.
And the new capacity coming in FY26 takes it up to how much?
60,000.
60. Wow. So you're nearly going 5x your current capacity.
Yes, and I think India, people, especially after COVID, have, kind of made up their mind that they want to maybe drink less but drink better. So people are going for quality over quantity.
Sure.
And so if you're drinking a whiskey made out of molasses, ENA, versus something which is made out of malt and it's been matured, is far superior. And I think people are now, they understand, people are well traveled in the country, much more education is there, and more disposable income. So we think this trend is going to carry on, and we'll have a better year this year than we had the last year, and each year should be better than that.
Sure. So Harsh, again joining back, I want to try and break down. So the 1,000 crore would take care of pretty much all of the expansion?
All the expansion, and so expansion is a very small part of this. Like the machinery and equipment is a very small part of this, but the barrel and the liquid expansion is the major part of this.
Right, and just in terms of how this will help you scale better, how your margins will therefore evolve, what's the sense like with regard to FY25 overall?
So we have a net profit margin this year of about 13% plus, which is, I think, healthier than most other alcobev companies in the country. And I think it should marginally improve over the next year. But, overall, because there will be products in the mix which are very high margin and medium and low margin. So when you balance that out, a 13 to 15% margin is what we are looking at.
Okay, Mr. Batra, a couple of questions. Have you put out any formal guidance or if not a formal guidance, a formal view of what you reckon growth could be like for FY25 or FY24?
Yes, we have put it out, but those are documents, work in progress as we speak. So we just got the approval from the board yesterday, and we will be now with our consultants putting in the key numbers and then probably speaking to the capital market regarding that.
Okay, so the formal guidance might come out in the next 2 or 3 days, maybe, if you will.
That's correct.
Something
That's
like that.
Correct.
Okay, but just to the question, you mentioned the net profit margins. The highlight amongst everything else was also the expansion in the operating profit margins. I believe 23% versus 5%. Is this the new normal? Would you believe you will be able to maintain an average of 20 to 23% for FY25?
So, in the sense that if we have a 30%, 25, 30% growth, and we lose maybe a percentage or two, I don't think that'll make a difference in the larger scheme of things.
Yeah, I agree. So, I'm not stuck to a number, but say circa 20% is an average that you reckon you can maintain.
We should be able to, because most of the products which we have now and which are in the pipeline are all premium or super premium products. And the company decided about 4 years ago that there's a lot of pressure on the the cheaper products where the volumes are huge, but the market pressures and the inflation was affecting it very badly. And we decided that we would discontinue that segment and concentrate only on the premium segment and the luxury segment.
Got it. So I have one more question on that, because twice in this conversation with us, you've spoken about the product pipeline. We know Indri's been rocking. It's been a great performer for you. What else is coming out? Is it largely a whiskey-based newer segments coming in? What else?
We do have a few products in that category, but what we've launched towards the end of last year is Kamikara. That's a pure cane juice rum. And we are very bullish about that because, as you know, from Kashmir to Kanyakumari, India grows sugarcane. And if you were to look out in the market, we don't have a good rum in the market today. There is zero rums from us. We have a lovely old monk that we have nostalgia about, but a good quality rum which is made from sugarcane juice, a sugarcane juice rum is more akin to a cognac, because they're both considered fruits. So if you will drink a 4 or 5 year old cane juice rum matured properly and a cognac VSOP, you would get similar tastes. So that is a market which is very strong down south, and the north drinks more rum, the south drinks more cognac, like brandy and those products. And we are looking at an expansion in that segment and to upgrade the drinker of the rums which are at the level of a 300 to 500 price point to take them to 1,000 to 1,500 price point.
Right. You've spoken about 30% growth and giving away maybe 1 to 2% margin. I'm just quoting you here. Just doing the rough math, it looks like you're nearly going to double in terms of your top line. If this is the trajectory at which you're going, just in terms of both capacity as well as pricing.
You won't get a commitment from me on that, but yeah, we would like to go that way.
Sure, and therefore likely next year. At least the math seems to suggest that you will double.
I'm just trying to think, Harsh, and I'd love to get Mr. Batra's comment on this. Again, no formal guidance here. But if Mr. Batra does what he's done in Q4 for the rest of FY25, then doubling PAT is also an understatement.
Yeah, you're going to more than double PAT. So, I mean, typically around 800 crore is the top line currently. Might go to 1,500 as per just the capacity increases. And we're not asking for confirmation, but
of course, no.
We're just chatting here.
There is one correction to be done here. So when we do a capacity expansion in any industry, what happens is you start to get results the same year. But in malt production, we start to get our results a little later. So it'll be 2 to 5 year projections that would be impact. So what I make today and lay down we cannot be bottled. So we follow the norm which has been followed by whiskey world over, that we mature a whiskey for minimum 3 years before it can be called a malt, a single malt.
Okay.
And so you need that gestation period for sure.
Okay.
Okay, so yeah, that kind of tweaks things.
I have one
Sure.
one final question really, and this is off numbers, Mr. Batra, but Indian whiskey, Indian gin, Indian alcohol at large seems to have come of age. Indri is of course the standout, but the clutch of others are doing well too across companies. You reckon global acceptance of this is picking up, and therefore my question is, would the balance of your sales over the course of the next 5 years tilt more in favor of what is happening in exports versus what the share would be right now?
Definitely. So that's what our plan is. In the next 5 years, we want to have a larger share of export than the Indian market. So the Indian market is great, and there's only so much that it can consume, right, in that segment. But if you see the US, which is one of my primary markets after India, is one of my largest consumers, and the demand there has, I have not been able to meet the demand this year. And so we are looking to build this capacity also with the vision that, the exports will increase manyfold.
Okay, thank you so much, Mr. Batra. It's been a revelation, and it's been a pleasure speaking with you and understanding the business as well.
Yeah. Wish you all the best for all the plans that you have.
Yes, absolutely, as well as all the expansion that you'll have to execute over the next 6 to 8 months.
Thanks a lot, Neeraj, and thanks a lot, Harsh. Thank you very much for having me.
Right. But with that, completely out of time on this edition of Hot Money from Neeraj, myself, everyone who puts the show together. Thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right.
Hello and welcome. You're watching NDTV Profit, and this is a very special show where we are going to try and cover premier explosives. Now, a couple of news worthy pieces which are playing out with regard to this counter. You have a stock split which has been announced 1:5, so one share will now be split into 5. and they are also going to do a fundraise. They've left it open for now, but it's a 400 crore fundraise, and that's a fairly large quantum just in terms of the amount. And you know, we have Mr. TV Chaudhary, who's the MD of Premier Explosives, with us to try and better understand what's happening, because the stock has been up and away. Firstly, good afternoon. Welcome to NDTV Profit, sir.
Thank you.
Sir, I just want to try and break this down. So 400 crore fundraise, it's a fairly large fundraise for a company of your size. What does it mean, and what's going to be the utilization like for this fundraise?
See, this funding is meant for utilization at our new project, like we have announced about a possibility of starting the new greenfield project in Odisha. So that is a major capex will be going ahead. Other than that, in the existing plants, capacity enhancement is there. So that is going to, first 2 years we'll be using it for capacity enhancement and adding the plants in the existing plants near Hyderabad. Then 2 years onwards, then we'll be going and expanding in the Odisha new land, which the Odisha government has approved. So that this is planned for almost a 10 years program. The whole thing is scheduled for 10 years in 3 phases.
Understood. So how much of this goes to the Odisha plant, and how much of this goes towards the existing plant capex that you have allocated?
Existing plant, it is 35 crores is about 35 crores is for the expansion of the existing plant capacity. And we also want to add some additional products also. So that will take care of that. And the balance goes to Odisha. In Odisha also in multiple phases. So first phase of Odisha will be around 100 crores.
Got it.
And yeah.
Got it. And how much of this will be debt and how much will be equity? Pretty much all of this amount will be upfronted in terms of the fundraise itself?
Yeah, this all from the fundraise itself we are thinking that we'll do. In addition to that, there will be internal accruals.
Sure.
Because the Odisha total project outlay is almost 800 crores we are thinking.
Okay.
So in these 3 years, 4 years, we expect good internal accruals. Together, that and this together should fund our entire requirement.
Understood. And the 400 crores, some component will be equity. Is there a number to that?
Yeah, that is not yet out. It is decided in the last board meeting that yes, we will go and raise some equity and all. But how much and all those we have to come to.
Understood, understood, sir. Okay, and with regard to the capital and the borrowing itself, of course, it'll raise your borrowing, but I want to try and focus in a little bit on your current liabilities as well. Those have spiked up a little bit. Do you expect this kind of a number to remain, or do you expect that to come off?
No, I don't think we have any large liability. It's more of working capital funds rather than any other debts. So it will remain, because as we are growing and to larger and larger, along with the capex needs, working capital needs also will be there.
Absolutely.
So we'll be maintaining at that level.
Understood, understood. And with regard to deliveries to Israel, I'll switch focus from the funding side of things. With deliveries with regard to Israel and recovery from Israeli customers, has that started to pick up pace as Q4 has ended?
Yeah, in the Q4 itself, we could dispatch a good quantity.
Got it.
Next week. So we are expecting this. It will continue in the first quarter of current year.
Understood. And would that therefore lead to a cool off on the asset side, on the current assets, on the inventory side of things?
Yes, that will help. And apart from that, some orders from MOD, they are also which could not be dispatched, they will also move out now. So together, the exports as well as the domestic MOD dispatches will definitely push us through.
Got it. And this new plant in Odisha, how much would that contribute to your overall revenue, and from when will it start contributing to overall revenue?
See, the First, it was an allotment of land. You know, explosive industry needs large land.
Yes.
So when the Orissa government invited us to look at the possibility of putting up a facility, we asked, our first requirement is land, which they said that is not a problem. And we have visited the facility, government, and then multiple facilities which are available, and we have selected the area which is suitable for the plant. So after the elections are over, I think the activity will pick up, and we hope that in 2 years' time, first phase will complete.
Okay, 2 years' time, first phase will get completed, and what would you manufacture there? I know it may not be absolutely accurate, but if at all there is a plan to that. And second is how much or how will it contribute to revenue? What's the plan there like?
See, the products which are going to be made there are mostly the explosive raw materials. That is RDX, HMX, TNT. RDX, HMX we are already producing in near Hyderabad, but the capacity is not sufficient, so we'll be going for larger capacity. And right now TNT we are dependent on other sources, outside sources. So we'll be producing ourselves, and there is a lot of big demand from Europe for these raw materials, that is RDX, HMX, and TNT. So mostly the capacity will be utilized for catering to the export market, because our present capacity is good enough for our own internal consumption. So with these, all these things getting added, so we are expecting a good increase, something like another 300, 400 crores should be added to the present turnover.
Understood.
That is in the first phase.
Yeah, right. And that's just in the first phase, right? And what about the margins on some of these products? What can one expect? 20% plus?
Yeah, it'll be in the between 20 to 25%, all these defense products.
Understood. So not margin dilutive either. Just for viewer reference, margins are roughly in the 20 to 25% range. Defense margins are slightly higher, north of 26. And so the other products are in the 18 to 20% range, if I'm not wrong, just for viewer reference. Anyway, so I understand your point of view. So you've guided for roughly 500 crores of top line in FY25. I won't talk about FY24 because of course your numbers are not yet out. I don't want to push you on that. But with regard to FY25, 500 crore of top line, 300 crore will roughly be the flares and the shafts which you will be selling to Ministry of Defense is our understanding. And therefore this 300 crore will be added from FY27 onwards, if I understand correctly. So what does your 500 crore do in FY26 and FY27? What kind of top line should one expect in the interim period for you to increase by?
It will be maintained at that 500 plus level, the coming 2006 and 7 also. See, it's a bouquet of products. We have multiple products. Now we have started different products. So they will keep on changing. Today, the main thrust is on shafts and flares countermeasures, the orders, and that also further orders will continue. What we are executing is an emergency order, but that's not the end of it. Other orders are in RFPs are there and RFIs are RFPs, so they will also materialize. Other than that, now we entered mines, land mines. The first consignment is expected to move out now before this month end. So the land mines is another area which is going to be full import substitution for MOD. Then we are now into warhead manufacturing, and we are now producing large volumes of rocket motors, which earlier we have developed and then designed and developed. Now they are in production phase. Those dispatches have started, and we are getting many more queries.
FY25, maybe 500-600 crore. FY26, what's the kind of growth trajectory that one can expect you to take?
These new projects, what we are planning, like I said, another 300 crores will come from Orissa plant. That's what is the plan.
Yes.
Yeah.
So with all the new products that you're building up, on top of this 600 in FY26, how much will some of these new products contribute? Because 300 crore will be flares, 300 crore will be existing business, is how I'm looking at it, the existing order pipeline of roughly 600 crore. The new products that you're venturing into, how much will that contribute to top line in FY26?
FY26, see that in these products, there is a long gestation period, product acceptance and all those. So whatever new facilities we are going to install, those will, the 26 will not be a year where we'll be getting a large revenue from those. But yes, it will start, and then I think another 100 crores we can expect.
Understood. And with regard to your space part of the business, you're expecting that to grow in a big fashion in the next 5 years. So what will the contribution be like to revenue, maybe in the next 2 or 3 years?
Right now, it is unpredictable, the space, how it is going to grow and all those. See, space scenario is totally changing. Up till now, the customer is ISRO for the space industry. Main customer is ISRO. But it's going to shift to now the private industry, which are private satellite launchers. Satellite launching companies will become our customers. So how the business is going to change is a little bit unpredictable. I think we need some more time to come to some predictions.
Understood. But you're confident that 5 years from now it will contribute 500 crore to top line, because that was part of your Q3 guidance.
Yes.
Understood. Got it, sir. And with regard to overall margins, what's the kind of number one can expect you to be at? Because margins have been on the lower side of 20 for a very long period of time. They spiked up, and in Q3 again we saw a bit of tepidness on margins because of course defense execution hadn't happened. So where can one see overall margins in the broader scheme of things, between maybe 23-25%?
I think we'll be at 20% level. 20% level. Definitely between 18 to 20%. It changes with the product mix. The margins, you know that industrial explosives is lower, but we will not be quitting that business. We'll be continuing in that business. So overall, if you go by the turnover, it's a volumes business, so turnover also will be good from that. So average margins, if you look at, will be at 20% level.
Yeah, sir, with regard to the fundraise as well as with regard to all the cash that you're pulling back into the business because you're making cash profit this year, what's the kind of return ratios that one can expect from Premier Explosives?
Yeah, return on capital definitely between 25 to 35%.
Understood. That's sharp. Thank you so much, sir. It's been a pleasure interacting with you. And of course, we look forward to continue to interact with you going forward as well. And many congratulations on this new development, and hopefully good luck on a good fundraise.
Thank you very much for the interest shown in our company, and thanks for all the good words. Thank you.
Thank you. So, of course, that was Mr. TV Chaudhary, who's the MD at Premier Explosives. Company looking at a fundraise of 400 crore, an organic expansion is what they're looking at, backward integration, and of course, very solid numbers expected to be clocked in FY25 onwards. Definitely keep your eye out on this one.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some may...
You're watching NDTV Profit, and we have a very special guest with us today. We have the management of Tamil Nadu Mercantile Bank. Now, this is one of those banks, just in terms of valuations, which are trading is trading at lesser than 1 times price to book. So that's something that makes it special, at least at the moment, just in terms of valuations. But we're going to not talk much about valuations. We're going to talk more about the Q4 quarter, because they've declared their Q4 numbers, as well as what's in store for FY25. So let me first off welcome on board Mr. S. Krishnan, who's the MD CEO at Tamil Nadu Mercantile Bank. Welcome to NDTV Profit, sir.
Thank you. Very good morning to you.
Right. Sir, talk us through the quarter. Margins have improved quite drastically, and your deposit growth has been stronger than advances growth. So talk to us about what's happening with margins. Why has that seen a spike? And what's the growth number that one can expect for FY25?
Good. As far as the margin is concerned, in fact, the bank has always been more cautious and focused on the margins always. The net interest margin, if you look into the previous year, that is 22-23, was higher. And the 23-24, we saw that the entire industry, there was a tight money position. The cost of deposit was going up, and the TMB is not an exception to that. So we also had a little increase in the cost of deposits. But what we did is basically that we focused on leveraging the funds available with us. We had surplus SLR and other things, so that we were conscious on the increasing the deposits. We concentrated on increasing the CASA. The CASA has really helped us during the last quarter, that is Q4, where I was able to take to 30% level of the CASA, a good improvement. And the deposits were taken on need-based. Though, yes, to be in the market alignment, I have been offering a competitive rate, but we have been very, very cautious on that. This ultimately enabled me to increase my margin for Q4. And it is really, I have to say that the journey of NIM during the 4 quarters of the last year, the Q1 was NIM was 4, the Q2 went to 4.1, Q3 almost was at the same level, little less, 4.08, and Q4 I could take it to 4.24. This is how the NIM has moved. And of course, for the full year, if I look into it, is 4.11 against 4.46 of the last year. That is basically because, as I explained, the cost of deposits had increased substantially in the industry across all the institutions. So that is the reason. Going forward, I expect that definitely we will be able to maintain a NIM of 4 plus. Why I say 4 plus is that, yes, at a given point in time, I expect that there may not be much of interest rate movement. I don't expect that the interest rate will be hardening further, though there are good demand for the deposits. The rates are still hovering around a higher range. But still, I expect that I don't expect that there will be a reduction or rate cut in the immediate future. So I expect that it will be flat, but keeping in mind various geopolitical situations and other economic movement, I give a guidance that we will be definitely able to maintain a NIM of 4 plus. This is what the guidance I gave last year also. The same I maintained that.
Sure, I take your point. And with regard to growth, that's been a bit of a struggle this year. So talk us through FY24 and what changes in FY25 and what's your growth guidance for both advances and deposits.
Good. See, as far as I will take the advances. As far as the advances is concerned, that I should say that the year 23-24, we took up a transformation project. Basically, we shifted from the age-old practices. We had taken up a business process re-engineering. As a first phase, we took the MSME, which is the focus area of the bank. We have established the MSME hubs in different geographical locations. I have 12 regional offices, of which 9 centers I have already established the hub. The basic purpose of establishing the hub is to ensure that my underwriting standards are better which will enable me to have a better breath. So I need not worry on the quality of the assets going forward. I have posted specialized, experienced people for the underwriting. I have also introduced a new role called the relationship managers in the bank. I have assigned the customers to these relationship managers who will be taking care of their requirements. And the underwriting has been totally delinked from the front line of business, the sourcing people, so that the quality, as I said, the underwriting quality can be ensured. Going forward in 24-25, in addition to this, we plan that we will be engaging the feet on street concept also for as a lead management. And we also have plans of, already got the approval of the board for co-lending. These things will definitely take the bank to have a better growth in 24-25. I expect that the growth will be in the range of 12 to 15% in 24-25.
12 to 15% on advances, but talk to us about deposits.
I will cover on the deposit. I will cover on the deposit also.
Sure.
As far as the deposit is concerned, I was telling that we were making a cautious move, keeping in mind the funds available with me and also to leverage so that I can effectively utilize the funds, so that my bottom line will also be better. Now, as far as the deposit is concerned, yes, we will have, my guidance will be almost the same 12 to 15% in deposit also, with focus on the CASA.
Right. So 12 to 15% growth on deposits as well.
Yes.
So talk to us where the challenge has been with regard to Tamil Nadu Mercantile on the deposits front for FY24, because growth single digit from a small bank, regional bank, how should one, reconcile as to what's happened in FY24?
No, I will not say there was a challenge. That is what I was telling, that in fact, I was having good, the CD ratio was very, very comfortable. I could have taken the deposits, but ultimately I have to see the cost also. The deployment has to be seen. So we look into the maximum funds. So as and when required, we will be able to. I have not seen any challenge in mobilizing the deposits. We have been able to. In fact, I have reduced the bulk deposits. If I say my retail term deposits has gone up, it is something around 84% as on March 24. So the customer base has increased. That clearly indicates that the customer base has increased. Hence, there was no challenge. I was having good surplus SLR. So I thought that why not I leverage that benefit what I have. So it was a conscious call for the growth on the deposit.
Right. Okay. So that clarifies quite a bit, and that probably also somewhere has trickled on that margin number, which is what I really want to come to. So because of this prudence, your margin number has remained above the 4% mark. Likely, that's probably the reason. Now, in terms of growth, both on the advances and deposits front, a lot of the growth has come in Q4 for pretty much the full year. So the sequential growth Q3 versus Q4 has been strong. Does this therefore, is this seasonality, or does this signal a shift in the bank's strategy to now shift and focus more on growth, and all the processes are therefore in place? Is that the real indication of Q4?
Yeah, that is what I have to say. The strategy will be that the focus will be right from the Q1. The growth, that is what we expect. The processes have been put in place, the systems have been put in place. So we expect that we will be able to have the growth throughout the year.
Okay. And sir, with regard to asset quality, GNPA saw a bit of a spike midway through last year, which is FY24. How confident are you with regard to asset quality, larger slippages not coming in, as well as retail? Because RBI has flagged retail time and again. So for a smaller bank like you, any concerns on the asset quality side?
Yeah, as far as the asset quality is concerned, I should say that mid of 23-24, we had a little larger slippage. In Q2, we had larger slippage. That is why it went up. If you look into the Q4 number, the Q4 gross NPA is 1.39 against around 1.44 in Q4. That is March 24 against 1.69 in December 23. That clearly indicates that we were able to bring down the gross NPA. As far as the slippages are concerned, the overall slippage ratio is 1.36, whereas if I look into the quarter-wise, the Q4 slippage is just 0.16, Q3 was 0.22, while Q2 we had a little challenge, it was 0.84, and Q1 was 0.27. So if I look into all the 4 quarters, Q4 was the best with the 0.16, the lowest one. Going forward, I expect that asset quality will be better, particularly because I should also say my SMA book has come down substantially. The SMA was 6.51 a year back, that is as on March 23, which has come down to 3.97. This clearly indicates that the stress position has come down. So I expect that the slippages will be contained in 24-25. I don't expect much of the slippages. And as of now, I don't have any big accounts which are likely to. Coming to the retail, what you said, the RBI is also expressing the concern. Let me say that the bank has got such a RAM segment retail portfolio where it is not like others. We are fully secured and the repayments are coming. As I said, the SMA book has come down. In fact, in almost all the sector, the SMA has come down.
We are joining NDTV's Pledge to Vote initiative. I pledge to vote and also encourage all of my colleagues to exercise their voting rights. Election is the largest celebration of democracy and we fully support it.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Markets near the day's high as Bharti Airtel extends gains to hit life high. Broader markets outperform benchmarks with Nifty mid-cap almost 1% higher in trade. All sectors barring pharma and energy in the green. Nifty Realty gains the most, it's up almost 3%, followed by Nifty FMCG and Nifty PSU banks. Tejas Networks continues to be in the upper circuit. The stock is up 20% as the company's revenue increased manifold. Net profit at almost 150 crore rupees. And Tata Consumer is all set to report its Q4 earnings. The company is expected to see double-digit rise in profit and revenue as raw material costs ease. business activity surged to its highest level in nearly 14 years on the back of strong demand, signaling expansion in both manufacturing and services. That's what the HSBC Flash India PMI appears to indicate. Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Before we delve further into the show, let's have a quick look at where the markets are at currently. The Nifty is currently at about 22,400. The Sensex as well as the Nifty 50 both trading in the green and up by almost about 1/3%. So we're currently back to trading once again close to the day's highs. Let's quickly have a look at the contributors of the Nifty 50. Well, Bharti Airtel, of course, in the lead, while ITC, HCL Tech, Infosys are some of the stocks that continue to provide strength to Nifty 50. What's not performing well is RIL, HDFC Bank, M&M. That's some of the stocks in terms of percentage change. Grasim is up by almost about 3.5%, as is Bharti Airtel. HCL Tech, Nestle, HUL, all up well by over 1%, continuing to push the Nifty 50 up. What's not performing well is Sun Pharma. The stock is down by almost about 3%. Some of the other losers are HDFC Life, M&M, Hindalco and RIL. But let's also have a quick look at the sectoral indices. Most are trading in the green. Nifty Realty, of course, in the lead still. It's up by almost over about 2.5%. Nifty FMCG and Nifty Consumption as well, up by over almost about 1%. But the broader markets continue to significantly outperform. The Nifty Mid-Cap 150 is up by almost 1%, while the Nifty Small-Cap 250 is up by about 0.8%. Let's take a breather and have a quick look at in the economy. Now, economic growth across India's private sector continues to strengthen in April. That's what the HSBC Flash India PMI appears to indicate. The index rose to 62.2 for the month of April. That's compared to final figure of 61.8 for March. This is, of course, a flash figure and we will have a final figure earlier next month. But this does appear to indicate that it's the fastest rate of growth seen since June 2010. In particular, services growth has accelerated further in April, and that's led by new orders in both domestic as well as international markets. In fact, at the composite level, new export orders have risen at the fastest rate since the series was started in September 2014. Now, on this front, services companies noted a quicker rate of expansion. This bodes well for employment as well, while service providers took on extra staff at a marginal pace. Goods producers have raised their workforce to the greatest extent in nearly an year and a half. Input cost inflation, meanwhile, has receded in both manufacturing as well as services companies. Prices charged rose to a lesser extent in April, but inflation remains above its long-run average. Finally, the latest results do show a pickup in business confidence as well during April, and that is expected to persist over the coming months. Let's move back to some of the stocks in focus. First up, Tejas Networks is in focus. The stock is up by 20% in today's day of trade. My colleague Rucha brings us key details. Rucha?
There was a beat on revenue and margins as reported by Tejas. However, this beat was led by the BSNL 4G deal. Now the revenue grew 4 times to 1,300 crore, while the margins were at 23% versus an estimate of 7.5%. The net profit was estimated to be at a loss of 12 crore. However, the company reported a profit of 147 crore during the quarter. Now, this growth was led by the wireless segment, largely coming from India, while the order book was at 8,300 crore, 95% of which also came from India. Now, what the management mentioned in the conference call is that beyond the overall market growth, it is also looking at several high-scale opportunities in both Indian and international markets. So the stock was up 40% in last 5 days and 70% in last 1 year.
Well, we also spoke to Ashwini Agarwal on how Tata's acquisition of Tejas Networks has helped the company stand out. Listen in.
I think the two themes that are staring out at us is that India is starting to do things at scale. And Tejas's acquisition by the Tata Group has allowed it to exploit the scale that was possible for the business. I mean, India spends a very large amount of money on telecom equipment, the hardware side of, mobile telephony and data services. And this was a very, very small company, but with a very strong technology backbone. And I think the ownership at Tata has allowed it to win at scale. And I think, what we've seen in the latest quarter is simply a small window into what the future might look like.
Another stock that's in focus is Honasa Consumer. Jefferies has retained a buy rating on the stock with a revised target. My colleague Mahima joins us with the details.
Right, Pallavi. So I'll start with the target price that they've given. They've given a target price of 590, which gives an upside potential of almost 53% from yesterday's closing. Now, what they've said is that the Derma Co, the arm of Honasa is the second brand to achieve a considerable scale, and now it is competing with FMCG brands like Sunsilk and Pantene. They've also said that actives-based BPC is an exciting global opportunity for Honasa, and 3 brands from this particular segment garner around 20% share overall, and TDC achieved EBITDA break-even of around in Q3 FY24, and this is why profit ramp-up will be a little slower. However, it will take up in the H2 FY25. Now, in terms of what they like about the management, they've said that the management focus and agility along with growth mindset is something that they really like, and they have also said that offers active-based products will be garnering a leading 20% growth, and they expect overall 20% growth trajectory despite of the slowdown in Mamaearth that they've seen. So these are the overall reasons why Jefferies is bullish on Honasa.
All right, Honasa is up by almost about over 8% in today's day of trade. But Mahima, stay with us. Tata Consumer is set to release its Q4 numbers today. Tell us what are the expectations on the street?
Right. So I'll start with, what kind of expectations you can have in terms of the 4 numbers that we always discuss. Revenue is expected to grow double digit around 10%. And we're expecting that the margins will improve by 100 basis points. And we expect that the net profits will also grow in double digits. Now, in terms of demand trends, the consumer staples, the demand trends is expected to be subdued. However, easing of raw material prices is something that will aid the margins. In terms of rural demand, it will continue to be remain languish. However, this will be the major reason that will be dragging the volumes down. Now, in terms of revenue cost synergies, that should be a key watch out for, because this is something that we'll be seeing because of the recent acquisitions of Capital Foods and Organic India that they have made. Now, in terms of segments, beverages business is likely to grow on 9 to 10%. Tea is likely to grow on 5 to 7%. Nourishco is expected to grow around 40%. And in terms of international business, they are expected to see a growth of 6 to 7% anywhere. Now, in terms of key things that will be, the major reasons to watch out for TCPL, we'll have something like market penetration for the international business, operating leveraging benefits, and volume growth in the F&B business, which is expected to be around mid-single volume digits. So these are the key things that will be, on the radar to watch out for in TCPL.
Thank you, Mahima. We'll continue bringing updates on that over the course of today. But another company that was expected to publish its quarterly results was M&M Financial, but it's delayed its earnings board meet after a 150 crore rupee fraud was unearthed at the Northeast branch. Harsh, hi, give us more details about this.
Well, yes. So earnings pushed, dividend announcement pushed. Also, you had plans to raise debt capital as well as debt funding. That too has been pushed, increasing of borrowing limits. All of that has been pushed, and it's because in a northeast plant of M&M Financial, they found a fraud. Quantum being 150 crore, it's around 0.5% of the market cap of M&M Financial, so not large in the broader scheme of things. But what is really negative is with regard to sentiment. That's one. Second, and let me elaborate a bit on the fraud itself. What seems to be coming out of the exchange filing is that there is a misrepresentation with regard to KYC, and therefore there's been an embezzlement of funds. This clearly puts a question mark with regard to some of the structures, the lending structures which M&M Financial has. That's sentimentally negative for the stock, and that's why the stock is down nearly 5% in trade today. Not much with regard to the 150 crore itself, just the sentiment being negative. Second is with regard to credit costs. Q4 numbers may get impacted because of this. Credit costs were expected to be around 120 odd crore as per Motilal Oswal estimates. That will definitely more than double up as a result of this. The profit after tax as per Bloomberg estimates was supposed to be around the 700 crore mark for Q4 consensus, and that will also get impacted as a result of this particular amount coming through. So some of the ROA and credit cost numbers will appear to be smaller, largely because of this number, and this is only for Q4, of course. Going forward, have to wait and see as to what's the impact on some of the other branches, if any, of this.
Harsh, do we have any visibility on when the company now plans to announce its results?
Not really. So they've said that they'll come out with a revised date shortly.
Okay, all right. And moving on, in response to Hong Kong and Singapore's notice to MDH and Everest over the certain spice mixes containing cancer-causing pesticides, India's food safety regulator has issued a quality check on these companies, with spice mixes being the primary focus. Let's bring in my colleague Sesha Sen with more details. Sesha?
Right. So following the Singapore and Hong Kong flagging concerns around Indian spices being unfit for human consumption, the Food Safety and Standards Authority of India has initiated a new round of quality assessment on products from spice manufacturers. And this is not just MDH and Everest, but all the manufacturers in India. Now, ethylene oxide, the pesticide in question, and is known to cause cancer when consumed in excess of permissible limits, is banned for use in food items in the country. Now, according to government sources, no harmful chemicals like ethylene oxide have been found in the different spice brands available in the Indian market yet. However, the FSSAI has opened a fresh investigation. Samples of spices are being collected from various brands to assess if the products meet the regulatory standards. Now, the regulator has instructed state food commissioners to gather samples for testing in labs in order to identify the presence of pesticide ethylene oxide. A decision on further action can be expected in the next 15 to 20 days is what we are getting to hear. Now, officials have also stated that the products that are being exported do not fall under the jurisdiction of FSSAI. Now, it is typically the responsibility of the importing country to conduct testing on the products and determine whether they can be allowed entry. Meanwhile, Everest Food Products has issued a statement clarifying that their products are still very much available in Singapore and Hong Kong. Only one out of the 60 Everest products has been held for examination, according to a company spokesperson. Now, such an action, according to the company, is a standard procedure and not a ban. The exports are cleared only after receiving necessary clearance and approval from the laboratories of the Spice Board of India. This is what we have so far.
Thank you so much for that, Sesha. With that, it's time to slip into a short break, but do stay tuned. We have a lot more lined up for you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on big decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome back. You're watching Market IQ on NDTV Profit. Now on to NDTV's special election coverage. The constituency of Thiruvananthapuram is up for a heated battle in the Shashi Tharoor versus Rajiv Chandrasekhar contest. The one bearing the brunt is the left front candidate Pannayan Ravindran, an ex-MP in left-ruled Kerala. Veera Raghav joins us with the report.
Nandi Namaskaram, Jai Hind.
I think it is more Mr. Tharoor's attempt to do it, make it very personal. I certainly have not. I don't think this is about personalities at all. There is obviously people who haven't done very much in their opportunities when people are giving them the opportunity, who want to make it about personalities. That's not me. I'm not doing that.
There is no personality clash. It is a clash of ideology. We're talking about Kerala having to make a choice between a candidate who not only delivers, but takes certain very clear positions on the key issues facing the nation, versus a candidate who represents a party that has communalized discourse in this country.
Whatever the reasons, the dominant theme in the contest for the Thiruvananthapuram Lok Sabha seat is the face-off between these two suave, erudite, media-savvy and high-profile personalities. The incumbent three-time MP Shashi Tharoor and the Union Minister of State and Rajya Sabha MP who has been given the task of conquering the seat. In the Shashi Tharoor versus Rajiv Chandrasekhar contest, the one getting squeezed out, at least in terms of optics from a national point of view, is the left front candidate Pannayan Ravindran, an ex-MP in left-ruled Kerala. Well, are there grassroots equations between the INDIA allies? Because the left is also fighting a battle for national relevance in terms of retaining numbers in parliament. Ravindran was the last left candidate to win this seat in 2005. While Kerala is predominantly a left versus Congress battle at the state level, Thiruvananthapuram is the one Lok Sabha seat where since 2014, the BJP has firmly held the second place with around 32% vote share, and the left relegated to a third place with around 25% vote. There There have been accusations of a tacit understanding between the INDIA allies in a parliamentary election to keep the BJP out.
So the issue is not at all about whether India Alliance, two partners, represent a challenge to the BJP. The issue is whether they will resort to some dirty tricks or vote transfers, etc., to keep the BJP out. And I am ensuring that I campaign hard to make sure that even if they try that, we have enough of a majority.
Fantastic understanding between us because we are sworn enemies in the state of Kerala. If anything, we have seen a number of places there has been collusion between the left and the BJP because the BJP nationally really believes in pursuing this Congress Mukt Bharat concept.
Grassroots equations in this highly literate, politically astute and extremely aware and involved state are intricate. Can the Narendra Modi persona and the Rajiv Chandrasekhar campaign rewrite the BJP's Thiruvananthapuram script? The party has been nurturing this constituency for a while, coming second in 2014 and 2019. The Thiruvananthapuram experiment for the Bharatiya Janata Party is an important one in its Kerala narrative. For the Congress, it's the last of its bastions and every seat counts here. And for the left, a quest to retain relevance, making this much more significant for the three national parties than just a clash of personalities. In Thiruvananthapuram, Peter Raghav from New Delhi Television.
Well, that's indeed going to be an interesting one to be watching out for. But staying on with the elections, NDTV's editor-in-chief Sanjay Pagalia spoke to the MP Chief Minister Mohan Yadav about the party's strategy in the 2024 polls. Listen in.
अभी सेटल होकर राज्य चलाना है और फिर एक बड़े चुनाव प्रचार में आप लगे हुए हैं, तो उसमें जो सबसे बड़ा चैलेंज है आपके लिए वो है कि मोदी की गारंटी तो हो गई, लेकिन अब आपको मोदी को गारंटी देनी है कि 29 में से 29।
निश्चित रूप से, और मुझे इस बात का पूरा भरोसा है, प्रदेश की जनता ने माननीय मोदी जी के 10 साल के कार्यकाल को देखा है। वैसे भी हमारे प्रदेश में 2014 में हम 27 जीते थे, 2019 में गुना हम जीते थे। अब माननीय श्रीमान सिंधिया जी भी हमारे साथ आ गए, तो स्वाभाविक रूप से 28 हो चुकी है और 29वीं केवल लोकसभा छिंदवाड़ा बची थी, तो हमने जिस ढंग से कैंपेन की है और जनता का जो प्रतिसाद मिला है, मैं निश्चित कह सकता हूं कि छिंदवाड़ा भी हम जीत रहे हैं।
तो छिंदवाड़ा जीतेंगे तो एक बहुत ही बड़ा रिकॉर्ड बनेगा, लेकिन चूंकि ये तीसरे बार की इनकम्बेंसी है, तो ऐसा हो सकता है कि एकाध सीटें चुनौती आगे पीछे और कहीं 28 का 27, 26, 25 तो नहीं हो जाएगा।
नहीं, ये तो कहीं से संभव ही नहीं है। माननीय मोदी जी के काम से जनता जिस ढंग से आनंदित है, आपको एक उदाहरण देता हूँ। माननीय मोदी जी ने पिछले इसी विधानसभा चुनाव में, जिसमें हम लोग जीत करके आए, एक स्लोगन चलाया, एमपी के मन में मोदी, मोदी के मन में एमपी। इतना हिट हुआ, आपके सबके बड़े बड़े राजनीतिक पंडितों के सारे रिकॉर्ड ध्वस्त हो गए, जो कह रहे थे कि यहाँ सरकार बीजेपी की नहीं बन रही है। तो लगातार हम 2003 से बीजेपी यहाँ सरकार में है, एक 1.25 साल कांग्रेस का छोड़ दे तो लगातार बीजेपी। तो मोदी जी के उस भाव के कारण से राजस्थान भी जीते, मध्य प्रदेश भी जीते और छत्तीसगढ़ भी जीते। तो इसलिए मोदी जी का कोई एंटी इनकम्बेंसी वाला मामला नहीं, मोदी जी को तो और उसका लाभ मिल रहा है और हमको भी लाभ मिल रहा है।
In today's segment of How Rich Is Your Candidate, we bring to you the wealth details of Union Home Minister Amit Shah. My colleague Alex Matthew joins us with more. Alex?
Well, it's a whopping amount of wealth for Amit Shah, and let's take a look at some of the details there. The interesting part, of course, is his equity portfolio, and we'll come to that in just a bit. For now, though, let's talk about the taxable income that was reported in FY23, and that stood at 75.09 lakh rupees, and that's risen from about 57 lakh in the 5-year previous period. Let's talk about the domestic FDs. They stand at about 1.9 crore rupees, and he's also got cash that he's declared of about 24,000 rupees. He's got jewelry of about 72.9 lakh rupees and movable assets of 20.3 crore rupees. Now, he's got a significant amount of inherited listed shares, which stand at 16.09 crore rupees, mostly he's got shares. He's also got no motor vehicle, which is quite interesting, and no mutual fund investments either. The value of the shares that he's acquired himself stand at 2.34 crore rupees. He's got immovable assets as well, agricultural land that is worth about 1.78 crore rupees. He's got properties worth about 16.3 crore rupees. He's got non-agricultural land as well, commercial buildings to the extent of 4.6 crore rupees, and residential buildings that are worth about 3.9 crore rupees. Now let's come to the value of his listed companies, 185 that are worth about 650 crore rupees. Just the first 5 are worth about 17.4 crore rupees. And let's pull up some of those names. He's bet big on large cap companies, the likes of ABB India, as well as Berger Paints. Interestingly, no Asian Paints in his list of holdings. He's got Colgate Palmolive, Century Textiles, Cummins India, Grinwell Norton, HUL, ITC, L&T, MRF, as well as Nesco, Nestle, P&G, Supreme Petrochem, to name just a few of the stocks that he holds.
And that's all we have on the show for now, but do stay tuned to NDTV Profit for more.
I have a right to decide who will run my country for the next 5 years. And for that, I need to vote. So I pledge to vote, and I encourage all my family members, all my colleagues at Hyundai Motor India, and of course, all the citizens of my great country to go ahead and vote. Vote now and vote forever.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which
Welcome, you're watching the Mutual Fund Show. I'm Tamanna Inamdar. Today we're talking about hybrid funds. Hybrid funds are back with a bang, and how. Now, look at this, for example. In FY24, the mutual fund industry recorded the hybrid segment actually recorded a 3.55 lakh crore inflow, marking a 366% rise for 1 year. Net flows of hybrid funds in this period have skyrocketed 870%. The AUM, that's assets under management of hybrid funds, have soared to 7.2 lakh crore rupees, up 51%. Now, what are hybrid funds? Why are they so popular in the last 1 year, and should you invest in them? That's what we're going to be talking about on the show today. And to speak on this, I'm joined by Udayan Adhe, founder of Udayan on Money. You must have seen him on social media, very, very popular with all of those little snippets on how to make money. Great to have you on the show today, Udayan. We have Pankaj Matpal, founder and CEO at Optima Money Managers. Pankaj, great to have you on as always. So let's start with the basics of what are hybrid funds. Udayan, let me begin with you.
So, Tamanna, first of all, thank you so much for having me. It's a pleasure to be here, and good afternoon to all the viewers. Now, hybrid funds, think of them as the name suggests, they are a mixture of various assets. So these could be stocks, these could be bonds, this could be gold, or a combination of all of this. And one of the benefits then of hybrid funds, as you can imagine, when you have a mixture of all these assets, is that you get to enjoy the benefits of all these different asset classes in one particular fund. And just given what has been happening in the world across in the past 2 to 3 years with rising geopolitical tensions, there's a new conflict that's potentially emerging out of the Middle East. Then interest rates have been at highs now over the past 3 years. So because of all these factors, including a taxation change, hybrid funds, with all the numbers that you reported, those are all the potential reasons why hybrid funds have become so popular over the last couple of years.
Okay. Now, when I say hybrid funds, on the face of it, that's a mix of equity, debt, best of both worlds. Essentially, you know, if you can look at it this way, the loss of debt funds is the gain for hybrid funds. As taxation tweaks made debt funds maybe a little less popular, people have gone in for hybrid funds. What's the basic premise, Pankaj, for a hybrid fund? Why would you recommend a hybrid fund for an investor? In what conditions?
Yes, Tamanna, see, hybrid means there are more than one asset class in a fund. It may be equity and debt, or equity, debt, gold, silver, or even real estate. So it means the investor can have multiple asset classes in one scheme. One thing is that we always recommend asset allocation and diversification. So investors can have multiple schemes in the portfolio, and through those schemes, they can have allocation in different asset classes. But if suppose somebody wants to invest in one scheme or starts SIP in 1 or 2 schemes, so it gives you scope of diversifying your portfolio across asset classes. That is one thing. Second thing, as you mentioned just now about tax. So see what happened earlier on debt-oriented mutual funds, even that long-term, short-term capital gain, it was qualified like that, and taxation was accordingly. But last financial year, because now the taxation is based on the slab rate. So if investor is investing in a hybrid fund, so in that case, if it qualifies for equity taxation, it means if there is a small portion of debt or gold, even then the complete asset or that complete gain from that mutual fund will qualify for equity taxation. So investors, if suppose they want to invest 25% in debt, 75% in equity, so in that case, otherwise, the 25% allocation in debt would qualify for debt taxation, which will be a little higher. But now, when you invest in a hybrid fund, it means these schemes will be tax efficient. So that is another reason which made it popular. So one is that asset allocation in volatile market, because these schemes provide more stability compared to pure equity funds. And second thing is taxation. So which is the main reasons, I'll say, out of multiple reasons which made them popular.
Okay. So as debt funds became less attractive, hybrid funds became more attractive. Now, Udayan, the next big question is that who should go in for a hybrid fund? Is it for everyone? what are the conditions best placed to invest in a hybrid fund?
So Tamanna, with hybrid funds, because again, they offer a mix of different assets and the returns, as even Pankaj said, right, are smoother because you get the favorability of bonds, which tend to be more stable, or gold, which historically, traditionally has moved out of sync with stocks, though that hasn't been the case in the past couple of years. But given the mix of this, hybrid funds become perfect for new investors or for people who are a little afraid of equity investing, who don't want to invest all their money into equities. And at the same time, arbitrage funds have formed now about 60% of the new inflows that are going into hybrid funds. And that just becomes a fascinating concept simply because of the taxation rule change. Because think about it, right? Earlier, a debt fund would have given you indexation benefit, so your taxation on it would have been lower. But now let's say a debt fund is giving you 7% returns, you are in a 30% category of taxation, you're going to end up with post-tax returns of less than 5%. Whereas with an arbitrage fund giving you a 7% return as well, you're going to potentially get taxed at about 6.26. The post-tax returns are going to be about 6.2, 6.3%. So hybrid funds, perfect for new investors, the balanced advantage fund category, multi-asset fund category, and for emergency fund purpose as well, right? For almost everyone, arbitrage funds have become the way to go about it. I have personally moved my emergency funds from pure debt funds to arbitrage funds since the taxation rule change. So I think emergency fund and just new investors, so that there's smoother return.
Okay, so good place to park your emergency funds, good place for new investors. Udayan, you talked about arbitrage funds. I think we should go into that into a little more detail because, you know, a lot of our viewers would want to know what exactly are arbitrage funds? How do you identify arbitrage funds and which ones really work out or which ones are the best?
So in terms of, I'll give you a small analogy to explain how arbitrage funds work, right? So let's say you have to buy a cricket ball and you go to your local store, it costs 10 rupees, but you go 1 kilometer further and it costs 10.5 rupees. So as you can imagine, there's a difference in pricing between two markets. That is what an arbitrage fund is in its purest form. It's just playing out different price changes. And because of the price change, it makes a small gain every single time. And that's why they tend to be safer. And that's why, you know, even parking your emergency fund in it becomes a possibility. So with that being said, my personal favorite arbitrage funds, if I were to name two, and these are not recommendations by any means, are the Kotak arbitrage fund and the one offered by SBI, purely because they have a supremely long track record and they also manage a lot of money, several thousand crores, which just makes them very safe alternatives in the arbitrage space.
Pankaj, your take on arbitrage funds and which ones would be in your top picks?
Definitely, I agree with Udayan because the arbitrage fund has become a good choice for parking money for short term. Short term, I said, because if you even redeem within 1 year, if you're parking for your emergency purpose, even then taxation will be 15% only, not like debt-oriented mutual fund now. And in long term, it qualifies for that long-term capital gain tax, which is only 10% if you redeem after 1 year. So that is one reason. Second thing, downside risk is very limited because you are not holding investment, rather you are only buying and selling in different market, how it works. So you're taking the benefit of arbitrage from that investment. So that is why. And not only this, in your portfolio, one is that emergency. Other than that, also parking your money. Like earlier, liquid fund was considered to be the best choice when you're parking for short term. But now if you see arbitrage, because post-tax returns will be better. And schemes-wise, I'll say that Edelweiss arbitrage fund is one good choice. And Kotak arbitrage fund can be considered.
Okay. Now, in terms of the whole set of hybrid funds, of course, we've now talked about how arbitrage is the best bet about it. It's great for emergency funds as well. Udayan, in the whole set of hybrid funds, how do you pick the right one? What should be the parameters or the criteria that you apply while picking the right one? And should it just be restricted to emergency funds?
So this is where it starts getting complicated, right? Because in the world of hybrid funds, there are multiple categories. So we have already spoken about arbitrage funds, perfect for emergency fund allocation. But apart from that, if you want to have growth in your portfolio, then where is it that you will invest your money? So that is where categories like a balanced advantage fund or a multi-asset fund, they do come in. Even within this category, there are subcategories like a conservative hybrid fund, an aggressive hybrid fund. May seem complicated, but think of conservative hybrid fund as it has more bonds than stocks in the portfolio. Aggressive hybrid fund as something that has more stocks than bonds. So if you have a growth outlook in your portfolio, if you want to use this money for longer term goals, not for emergency funds, then a balanced advantage fund can be useful. A multi-asset fund can be useful, because with a multi-asset fund, you're getting access to even categories like gold or real estate or REITs through your portfolio. So simply keeping that in mind, some of the good funds in this category, if you're looking at growth specifically and not as an emergency, then the ICICI Prudential Multi-Asset Fund, the HDFC Balanced Advantage Fund, and the Edelweiss Balanced Advantage Fund are wonderful options, because you don't have to really worry about changing the allocation, right? How much stocks to own, how much bonds to own. It's the fund manager's job, and based on their risk profile, based on their analysis, based on their entire research with their teams, they figure out when to increase allocation in these categories. So I think with hybrid funds, not just for emergencies, but also for long-term growth, which could also be smoother returns, because having different assets will also give you stability in your portfolio vis-a-vis a 100% equity portfolio.
Now, the context in which hybrid funds saw all of these allocations was a little different. It was in part because it's now becoming clear that the interest rate hike cycle is paused. You might see the reverse trend now flowing. We don't know when the rate cuts will start, but you're going to see the reverse trend coming in. Additionally, all of the, I would say, tension or fears about tax disadvantages in debt funds have now eased. Do you expect these kind of inflows to continue? Pankaj Matpal, that's the question for you. And for people making fresh allocations, should they be looking at hybrid funds as a first preference?
Yes, Tamanna, it's not only the tax planning or tax advantages with the hybrid funds, but I'll say if investors are more aware, they will definitely choose to invest in hybrid funds, because hybrid funds have multiple categories. Means it's not only one category of hybrid fund. You have choice of conservative hybrid fund. Suppose you are starting to invest in equity market and you want a small exposure to equity. So these conservative hybrid funds have allocation in equity to the extent of 10% to 25% only, and rest goes in debt. If you are little more risk you can take, in that case you have balanced hybrid fund where the equity allocation can be between 40% to 60%. Then if you can take little more higher risk, or your horizon is a little longer, you can go for aggressive hybrid fund where the equity allocation is minimum 65%. Then you have choice of balanced advantage fund, or which is also called dynamic asset allocation fund. Then if you want to invest in a small amount, or you want to have only one or two schemes, but you want the exposure across asset classes, so you have multi-asset allocation fund. So that is why if investors are more aware about mutual funds, I think that more money will come to this hybrid funds.
All right. So hybrid funds is a good choice for, I would say, the more mature investor, the one who understands a bit more, and definitely it's the flavor of this season and many more perhaps. We'll take a very short break, but Udayan and Pankaj, please stay on with us. The next segment is, I think, one of my favorites, where we take the questions of our viewers and give them our experts' answers. All of that coming up after the break.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty.
Welcome back. This is the part of the Mutual Fund Show where we take your questions. Sahil Dhanani writes in to us. He's aged 25 years old and says he's planning to start a 20,000 rupee SIP with a time horizon of 7 years in these 4 funds. He's mentioning those 4 funds and increase the investment amount annually. Have I chosen the right funds for my SIP? He says, additionally, I'm planning to invest 50,000 rupees as lump sum. Should I make the investment post-election? He's mentioned those funds, they're on your screen. Let me first start with Udayan, your view.
So Sahil, first up, you're 25 years old, investing 20,000 rupees per month. Give yourself a pat on the back, because not many 25-year-olds are going to be investing 20,000 rupees. And I am glad that you have a long-term investment horizon, because all the funds that you have chosen are equity funds, funds that are investing in stocks. Now, with regards to the 4 funds that you have that you have selected, I think it's a very, I don't have the allocation in front of me as to how much money is going into each of these funds, but I can write and tell the quant small cap is a small cap fund, the Nippon India group fund is a mid cap fund, SBI long equity, and ELS funds, I'm thinking that you with taxation, and Parik cap obviously more LATAM orient also gives you global stocks and you Indian taxation. So wonderful, well-balanced portfolio in terms of the 4 funds you have selected. And with respect to whether you should be investing that 50,000 rupees pre post election, I have one.
Udayan, your voice is cutting out. I think we need to check that connection. Your mic is getting stuck somewhere. Sure. You want to do a quick audio check?
I should do that.
Yeah, no, it's cutting out. We'll check that and we'll come back to you. Meanwhile, Pankaj, just your take for Sahil.
Tamanna, as Udayan was mentioning, I agree with him that Sahil has a well-diversified portfolio. He has investment across large cap, mid cap, small cap. Only one thing I've noticed that he has SBI long-term equity fund in his portfolio, which is a tax-saving fund, basically ELSS. So if he is investing intensely in this scheme, he wants to invest for tax-saving purpose, then he can continue. Otherwise, I would recommend him that he should replace this with the ICICI Prudential Nifty 50 Equal Weight Index Fund, which will give him more exposure to large cap. And in addition to this, because he also wants to invest 50,000 rupees in lump sum, and for this, considering his long investment horizon, ICICI Prudential large and mid cap fund will be a good choice.
Pankaj, just to the point that he makes, he asked, should I make this investment post-election? I thought that was quite interesting. Does that make a difference in your view? If someone's looking to invest lump sum, should they wait till after 4th of June?
No, see, no need to wait for the election. But what I'll say, instead of investing on a single day, if he can invest in staggered manner, so STP serves that purpose, he can spread that investment over next 2 months, 2 to 3 months. So he will get benefit of both the world, before election and after election. So investing in a staggered manner in 2-3 months will be a good choice.
All right, let me take the next question. It's with Narayan, who's aged 48 years. He says, I have around 2.5 crores of investment in mutual funds and PMS. I do a 10,000 rupees SIP and have added some lump sum amount whenever there is a dip in the market. Smart move actually over there, Narayan. So he said, I put an average 3 lakh monthly, including SIP and lump sum. So good amount of investment coming in. He says, I am 48 years old and hope to make my total investment 4 crores in 2 years when I am 50 for my retirement. The plan is to withdraw about half to 0.75% monthly from my total investment as SWP for monthly expenses. Additionally, I've taken one PMS called IIFL Multi-Cap PMS with a growth of approximately 12% in 2 years. Have I chosen the right funds? Is the PMS a good idea? This is a very structured, well thought out investment plan, and he wants to essentially retire in the next 2 years. Pankaj, is that seeming possible with a 4 crore rupee corpus?
See, Tamanna, because in mutual fund, when we do the calculation, it is based on the past experience. And because the horizon is also only 2 years, so if I calculate at 12% with his 2.50 crore lump sum, what he has now, and 10,000 rupees per month SIP, it comes to 3 crore 16 lakh in next 2 years. And if we expect 4 crore, it means the CAGR should be 26%, which is little means I think not realistic. So either he has to increase his investment amount or the investment horizon. Otherwise, 26% expecting from mutual fund, I think, or PMS even for that matter, will not be the realistic expectation. So he has to think about it. Either from the 2 years, he can increase the time to 5 years, 6 years, or increase the investment amount.
To increase the investment amount, by how much will he have to increase approximately, Pankaj?
So it should be, means if we take at 12%, so either that what 2.5 CR he has, he should add additional 1 CR to that, then it is possible, or monthly will be very big amount. So he has to see first thing that whether he can afford to invest that much. Otherwise, increasing the investment time, that will be a better choice.
Yeah, but then he'll have to retire at 55 or 56 instead of 50. So I don't know which one is tougher. Udin, I don't know if you had the details of... Sorry, you were saying, Pankaj. Sorry. You were saying.
Yeah. Yeah, Tamanna, see what happens that it is very easy to say, but 26% expectation is not the realistic one.
Okay.
And second thing, if I say just now that he should increase his investment by 1 CR right now, which may not also not be practical thing. So that is why I said that retirement is something you should retire when you have sufficient money to live on.
Yeah.
So that is why it is better to
Understood. The most doable option of all is that you push your retirement plans a little further. Udayan, what would be your advice for Narayan? The calculation that Pankaj has, he needs to have at least 26% CAGR growth to hit that 4 crore mark in another 2 years.
Yeah, you don't want to bank on the 26% CAGR, right, for your retirement plan. Never ever. Instead, the way I would look at this is you have, Pankaj, about 3.2 crores, right? If you keep investing the 3 lakhs monthly, you already have 2.5 lakhs currently saved up. So, and if you're hell-bent on retiring at the age of 50, then just reverse calculate. So think of whatever money you have, the safe withdrawal in India. There was a beautiful recent study that came out a couple of months ago, the first of its kind for the Indian market, which looked at a safe withdrawal rate for retirement portfolios. And the US rule is 4%. The Indian rule is between 3 and 3.5%. So if you have about 3 crores, that means you can withdraw 9 lakh rupees per year, inflation adjusted, for the next 30 to 35 years of your life. So in that case, you can recalibrate. Instead of withdrawing 12 lakhs a year, because you mentioned 0.5 to 0.7% monthly withdrawal, instead of 12, if you can withdraw 9, if that doesn't hamper your lifestyle, then you can still retire at the age of 50, and you don't need a 26% CAGR for that in that case.
Okay, so do you want to work harder and longer, or do you want to work lesser for a shorter period of time? That's quite a choice there, Narayan, but I hope that was helpful. Very quickly, Srinivas has written in to us. He's 50 years old, goal is a retirement fund. Says, my father has a retirement corpus of 25 lakhs and wants to invest in different instruments. Can you guide us? I don't know if Srinivas is talking about himself or his dad. But anyway, that's quite a vague point over there. But he says 25 lakhs is the corpus and wants to invest it. What would be the broad guidance? Udayan, let me come to you first.
So I am going to answer this from the perspective that his dad wants to invest this from his retirement perspective.
Yeah.
Because I think that would because you specifically mentioned a retirement fund there, so I'm going with that.
Correct. I'm not
Yeah.
sure if Srinivas is 50 years old or the dad's 50 years old. But anyway,
Got it. Let's just call him Srinivas.
Yeah. Okay.
So hopefully he'll be happy with our answer. So during retirement, the biggest change that happens to you is that your income stops. Now, that can be a very scary proposition to be in. If you have other sources of income, great. If you have kids that support you, great. But I think the first thing that you need to do is just take out some money from this, maybe 5 lakhs, 6 lakhs, and keep it in a very safe place that is non-volatile. Could be a fixed deposit, could be arbitrage funds when we discussed them earlier. And the idea behind this is you should have peace of mind, because especially when you retire, peace of mind becomes something that you crave for more, especially with financial security. And the rest of the 20 lakhs can be, say, split into a mixture of government schemes. But Srinivas, 50 years old, most government schemes for retirement aren't open for you yet. So it could be a mixture of different hybrid funds, different equities, but I would split that 20 lakhs about 50-50 into equities and bonds. And that would give me some stability as well as growth. And maybe even I can set up a small systematic withdrawal plan with that if I need that money. But I'm really big proponent of having that security amount for peace of mind for older people during retirement.
Okay, so good to have that corpus as well. That's all the time we have today. If you want to write into us, you want to ask your queries, do it on WhatsApp. The numbers are on your screen. Feel free. We'd love to hear from you and get our experts to answer your questions. But for now, that's all the time I have on the Mutual Fund Show. Pankaj, Udayan, great to have you on. Hope to see you soon. And to all our viewers, stay tuned. A lot more coming up after the break.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and every kind of volume buzzer. I'm your host Mihika Barre. But before we go on to the host of stocks that we do have in store for you today, let's just get a quick market check. Now, the benchmark up 0.25%, fairly flat, but in the green nonetheless. And the ones that have been gaining and in the Nifty 50 is a Grasim Industries, Bharti Airtel, and an HCL Tech. And when you look at the broader markets, you have the Nifty Mid Cap 150, which is clearly outperforming, up 1%, while the Nifty Small Cap is right there, up about 1%. Too. And when you look at the kind of counters that have been, gaining at the Nifty Mid Cap 150, you have something like a Vodafone. This is after the FPO was subscribed 6.36 times on day 3. A little underwhelming in terms of retail participant, but the QIB participants were up. Then we have AB FRL, which is Aditya Birla and Fashion, and we did see a block deal in that counter at a price of 264.8 rupees per share. We also have something like a BSE and an AB Capital that have been gaining. When you look at the small cap index, you have counters like an Aster DM that is down 20%, but the ones that have been gaining is a Tejas Networks, which we will be talking about in today's show, as well as an Amara Raja. Now, just a little bit, the industry outlook for the company seems to be positive, as well as the Tata Teleservices, which we will be addressing in trade today, and some defense counters like Cochin Shipyards, as well as Garden Reach and Shipbuilders. When you look at the sectoral indices, we have the Nifty Realty, the top performing sectoral indices. In today's trade, gains have been led by counters like Sobha, Macrotech Developers, as well as a DLF. And then we had the Nifty FMCG and IT that are also up almost from between 0.5 point to 1%, and the ones that have been lagging is the pharma index and the Nifty oil and gas. When you look at the Nifty pharma index, which has been in the red for most part of today's trade, and the ones that has been dragging the index, if you could get the Nifty pharma constituents up on your screen right now, something like a Sun Pharma, even an Abbott and a Lupin. So, losses from 1 to 3% on those counters. I'd also like to highlight some of the counters that did see some large trades in them, with something like a Hindustan Motors, which was up 9% intraday. A Union Bank, not much gains on that counter, up 2 to 3%. We also had a Grasim, which was one of our top Nifty 50 contributors. We saw a total block deal of 0.07 million shares at a price of 2,357 rupees. And HDFC Bank down 0.3%, but there was a block deal on that counter as well. We also had CDSL, it's up 5% in trade, and it's seen multiple block deals at various price points. But let's look at the stocks that we will be addressing in today's show, and the stocks that are in focus today on the back of higher volumes is something like a Sudarshana Chemicals, Hanasa Consumers, we have a Dolda Dairy, Mahindra Financial Services, a Tejas Networks, as well as the Tata Teleservices. But up first, we have Sudarshan Chemicals, which has reached an intraday of 12% in trade, and Varsha is joining us with key details on the same. Varsha?
Hi Mika, thanks for that. So yeah, Sudarshan Chemical is in focus. If you see, volumes are over 5x of its 30-day average, and stock has an intraday high of 12%. Now this is on the back of news that largest competitor Hubac has filed bankruptcy in Germany, and this is positive for Sudarshan Chemicals, as Hubac is the second largest global pigment players who has filed insolvency. Now court is expected to appoint insolvency administrator to examine the possibility possibility of continuing business or for some restructuring or activity or selling if the business can be sold in due course. Let's see what happens to that. But if you see Sudarshan, this is the third largest pigment player globally after DIC and Hubac, and in FY23 it had 35% market share. Now Hubac's insolvency will create void for an interim period during which Sudarshan can gain that market presence across the export market. Even if Hubac comes out of insolvency, the gained market share will be irreversible. Now Sudarshan's specialty portfolio is also strengthened in recent times with new products and validations thereof. Now if you see the levers, what are the levers for this company? The two levers will be, one is the specialty portfolio, another one is the export market, given the new capex that have been commissioned, and the majority of products are high performance product which will aid the EBITDA margin for the company. If you see, company's highest EBITDA margin has been around 15% in FY21. So structurally and directionally over a period of time, they should get back to their margin on the back of the high performance product. Also, once the utilization ramps up, the benefits will come which will see this EBITDA margin up 15%. So these are the levers for the Sudarshan, and on the back of competitor filing insolvency, the stock is buzzing today.
Thank you so much, Arsha. It will be key to see how the company performs with, a less competitive market. But up next, we have Honasa Consumers. Now it's up more than 8% in trade today, and it's held most of its gains. And we have Mahima joining us to give us an outlook on this company.
Right, Megha. So as you rightly mentioned, the company has held its gain throughout the day. Well, the volumes are around 8 times its 30-day average, and it did touch an intraday high of almost 8.7%. Now, in terms of market outlook, well, the management itself is expecting revenue to grow at a CAGR of 20% in the medium term. In terms of online growth, what they're saying is that the online growth is outpacing offline growth. And in terms of product innovation, well, innovation with 122 products were launched in the past 1 year. And the hero products are driving the revenue growth, and the focus remains on innovation. Now, the stock is buzzing in trade today because Jefferies has come out with a note on Honasa where they've given a target price of 590, which gives an upside potential of almost 53% from yesterday's closing price. What they're saying is that the Derma company is the second brand to achieve a considerable scale, so now it can be compared to other FMCG products like Pantene and Sunsilk. Now, in terms of active-based BPC, that has an exciting global opportunity, and at present, 3 brands from the active-based BPC have around 20% share. In terms of the TDC achieved, it did achieve the EBITDA break-even for Q3 FY24 recently, and what they're saying is that profit might see a slower ramp up, but eventually it will catch up. Now, in terms of what Jefferies has mentioned is that one thing that they really like about the management is that the focus is on agility along with the growth mindset. What they're focusing is not on profitability, but growing their brands. And moreover, they've also said that they also expect around 20% growth trajectory despite of the slowdown that Mamaearth itself has witnessed. Now, in terms of stock performance, the stock has been up around 15% in the past 1 month. However, the stock has been up around 30% in the past 6 months. Beyond that, the stock did not do very well. So 1 month and 6 months performance has been the same, that is at 30%. So this is the overall view on Honasa Consumers.
Thank you so much, Mahima, for that outlook. Up next, we have Sterling and Wilson Renewable Energy that is in focus today. Now, volumes were over 5.5 times its 30-day average, and the total traded volumes were at 1.12 crore equity shares, but sellers did outnumber the buyers. Now, the stock reached an intraday high of 10%. It spared some of these gains. It's up about 3%, but did reach a 52-week high today at 679.4 rupees, and it's been gaining in the last 5 days. Most of the gains in the last 2 days on the back of its Q4 numbers. Now, the stock is up 29% in the last 5 days. Now, when you look at the Q4 earnings, revenue was at 1,178 crores versus 88 crores a year ago. EBITDA grew at an EBITDA profit of 29 crores was an EBITDA loss last year of 352 crores. So it spared away those losses, and net profit was at 1.14 crores versus a loss of 421 crores a year ago. Now, when you look at the order book, they have an unexecuted order book value which has gained 65% year on year of 8,084 crores, and they've received orders worth 488 crores during Q4 itself. They also received their second international order which amounted to around 20 million euros, and this shows a big revenue potential because the revenue is recognized on a percentage completion basis. So as and when the progress of the project gets completed, the revenue in regards to that percentage is recognized. They've also had a revival on their profit and loss and their balance sheets. They've achieved positive consolidated EBITDA in FY24, and this was largely led by the domestic EPC business, in which the margins are in the company's target range. The domestic, they've also achieved profit before tax and the net profitability in Q4 FY24. And lastly has been their deleveraging tactics. Now, FY24 net debt was down 94% year on year at 116 crores versus 1,966 crores last year. And the company additionally has no debt repayments until the third quarter of FY25. But up next, we have Dodla Dairy, which is in focus today. Now, the stock's been buzzing and it's maintained, paid some of the intraday high gains, but it's up almost 8%, and it is buzzing on the back of higher volumes. And we have Anushi joining us to give us more details on the stock.
Hey, so Dodla Dairy is in focus over here. Again, as you mentioned, the stock did see an intraday high of about 11%, now pairing off some of those gains, while volumes for the main focus about 8 times the volumes as 30-day average, which is not just Dodla Dairy. Other dairy stocks in particular are in focus. Now, again, if you have to look at the likes of Parag Milk, Hatsun Agro, Heritage Foods, all of them are buzzing in the range of 2 to 10%, with Hatsun Agro clocking in higher gains with the Q4 numbers that came out. But just to describe the overall trends that have been happening in the dairy sector, strong tailwinds over here. Now they are moving past some of the key obstacles like the milk price increases and the shortages that we were facing, which had led to the procurement cost and all that also increasing up. So again, that remains on the focus. So now again, with the decline in milk prices, it is expected to lead to better margins in the coming period. Also, if you have to move in the H2 of FY25 going forward. Now, Investec recently had initiated a buy call on Dodla Dairy, wherein they had set a target price of about 1,400, which was a 60% upside. Again, a couple of strong reasons over here. They are expecting some strong growth in the procurement volumes at a rate of about 15% CAGR growth between FY23 to 26. While if you have to look at its overall business-wise, the African business and the value-added product mix businesses are expected to boost margins going forward. And also, if you have to see it compared to its peers and valuation metrics-wise, the company is believed to outshine its peers in the next 3 years. Now, coming to the analyst recommendations, not much of coverage over here. 2 buy calls, 1 hold rating, which implies an upside potential of about 14%. While if you look at a stock performance, strong numbers over here. In 1 month, 22% of a gain, while 6 months, it has clocked in about a 48% return. And in 1 year, the stock has almost doubled. So this is what has been happening in Dodla Dairy.
Thank you so much, Anushi, for that insight. Before we go ahead with our next stock, let's just take a quick market check. The Nifty 50 is still flat, up 0.28%. And when you look at the counters in terms of point contribution to the Nifty 50 change, we have Bharti Airtel that has been leading with 22 points, followed by an ITC and an SBI. The ones that have been dragging the benchmark is an M&M, an L&T, as well as a Sun Pharma. When you talk about Sun Pharma, it's down 3%, and we saw a total block deal volume of 0.06 million shares at a price of 1,485. Also, some of the other stocks that have been buzzing on the back of block deals that have been seen on those counters is a Mankind Pharma. It's up 2% in trade. Total block deal volume of 0.1 million shares at a price of 2,399. We also have a CDSL, which is up almost 5% in trade today. Now, the total block deal volume was at 0.03 million at a price of 2,100, as well as 0.09. But up next, we have Tejas Networks. Now, the stock has been a stock of the day today. It's up 20% in trade. It's hit its upper circuit. And we have Rucha joining us to give us insight on the same.
Thanks, Mihika. So Tejas Networks is up because it reported a stellar performance in the fourth quarter. Revenue was up 4.5 times at 1,300 crore, while EBITDA was at 300 crore approximately in profit terms versus loss of 8 crore in the previous quarter, while margin were at 23% versus estimate of just 7.5%. Now the key highlights are there was growth in all the segments, which was led by growth in wireless segments, while both domestic as well as international segments also recorded a stellar performance. Now the company expects to have an overall market growth, as well as it is looking at several high-scale opportunities both in India as well as international markets. The stock is up 40% in last 5 days and is up around 70% in the past year.
Thank you so much, Rucha. On to an NDTV Profit exclusive. Now, sources say that the 150 crore fraud reported by M&M Financial was detected in mid-March 2024 in Mizoram. Now, Pragati, who's tracking the story, is joining us live. Pragati, what are you gathering from your sources?
Right. So Mahindra & Mahindra Finance technical fraud was reported this morning to the exchanges, and the company in the exchange filing verbatim said that the financial impact is not expected to be more than 150 crore. But now our sources are communicated to us. We've gotten some fine-tuned details of how the fraud and what the fraud is about. Sources have told us that the financial fraud at M&M Finance took place in the Aizawl branch in Mizoram. That is very specific. Just in one branch, that's where the fraud took place. In fact, sources also told us that the personnel from the direct marketing vertical was involved in this fraud. Primarily, the fraud was happening in the car loan vehicles or the car loans that were given out. In fact, one area manager and 2 business executives are most likely under arrest, and this came out in fact in March 2024. That's what sources told us. We got to know that the FIR was filed with Mizoram police in Aizawl around 20th of March. The date may not be that exact, but that's when the fraud was found, and then the FIR was filed. Because the case was a little bigger than expected, there's also a likelihood that the case has been now transferred to the CID department, which is a special department in the Mizoram police. We also know that since these 3 people, 1 area manager and 2 business executives, are likely under the arrest of the police, we know that the Aadhaar and the voter ID documents were apparently being forged for last 2-3 years. Since it was happening for last 2-3 years and the numbers were getting inflated in terms of the business that was happening, finally the fraud was detected in March 2024, and accordingly the company took action. We have reached out to the company for official comments on this as well, but as of now we do not know, or we haven't heard anything from them. In a latest update, we also know that Mahindra Finance has reportedly shifted its earnings to now 30th May, which was scheduled for this morning. That's the NDTV Profit exclusive for you. We'll give you more updates as and when we have them.
Thank you so much, Pragati, for those details. Viewers, it's key to note that the stock has been in pressure since the start of day, down to an intraday low of 8%, with volumes over 8 times its 30-day average. But on that note, it's time to slip into a short break, but do stay tuned as we have lots more lined up on the other side.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Hello and welcome back to NDTV Profit. You're watching Large Trades. Let's quickly hear the conversation that my colleague Tamanna had with Indigo's Rahul Bhatia and former Tech Mahindra CEO C.P. Gurnani.
For the largest airline of India.
Yeah. So, that's actually my question. Is this an interface we will see used by Indigo? Is Indigo going to be a prominent or a first big client for IONOS? Either of you can answer that.
I think, let me go first, and it's a Singapore headquartered company, very clear focus on a global footprint. And the reason it is Singapore headquartered is because a lot of growth is coming in Asia, both in travel, transportation, or hospitality. And we want to, not only create AI centers of excellence or data centers of excellence, but we also want to tap into the growing needs of the consumers in this area. It is coincidental that the first 2 or 3 prospects with whom we are doing proofs of concept, they are outside India, and 2 of them in Europe, 1 of them in US. So I can only say yes, there is a desire to do business with Interglobe, but the focus of the venture is to create a global company.
Okay. So, Mr. Bhatia, this is not something...
Rahul, you want to add anything?
Yeah, this is not something that we will see on Interglobe Aviation or Indigo straight away.
Yeah, Tamanna, just to be clear, I presume you're not expecting that this company has been launched predicated on the fact that it'll have business from some of Interglobe's companies.
Sure.
This said, some of the businesses we are involved in are faced with certain issues, technological issues, and the same issues are faced with companies globally. Clearly, CP's organization is going to develop solutions, products, co-create products that makes the industry at large more efficient. And within that sort of sphere of development, if there are products or applications that that companies like Indigo find appealing, then of course there would be opportunity for Indigo and the NewCo to work together. But that is, like I said, it's the whole company is not predicated on business being brought in by Interglobe.
So strategically for Interglobe Group, Mr. Bhatia, and this question's for you. Can you give us the rationale of venturing into this space, into the AI SaaS space with Mr. Gurnani? What was the strategic thought behind it?
Tamanna, so one thing that I think Interglobe has is pretty uniquely positioned because it straddles travel, transportation, travel commerce, hospitality, logistics, cargo, and I think given what we do, I think there's an opportunity to create a thread of needs that provide ability for these different industries to talk to each other. And we've been wanting to get into this space, and CP was coming off his current obligations or his past obligations at the end of December. I was having a conversation with him for most of last year, and collectively believe that there's an opportunity to go out and do something. And this also would include, for example, airports. We engage with airports all the time. and it's just that one set of service providers at the airport don't talk to another set of service providers at the airport. And there are several opportunities like this where I think, given our domain sort of experience and understanding, we think we are uniquely positioned to bring some products and services to the marketplace.
Okay, so last question, because I know...
I'll give you an example.
Yes, please.
A lot of low-cost... Sorry, go ahead.
No, please continue.
No, I was saying, as an example, a lot of low-cost carriers in the world are powered by a company called Navitaire. Now, Navitaire was built many, many years ago. It's a legacy product. It's currently owned by Amadeus. Low-cost carriers have evolved over time. At one time, they started off being point-to-point airlines, and now they do a lot of interlining and do a lot of other things that Navitaire is not necessarily set up to provide. So their parent, they have a proposition in front of them. They know they need to evolve the product. They themselves are legacy based. So either they can go and embark on that journey, which could be somewhat slow to evolve the product, or else they can partner with companies like the new co we have, Ionos, bring agility, start on a clean sheet of paper, and work to develop a new product. Now, in that framework, can companies like Interglobe bring some institutional knowledge of where the bottlenecks are? Yes, we can, and consequently, we think we are set up for putting something pretty unique in the marketplace.
I pledge to vote and encourage all my colleagues at Godrej Industries Limited and associate companies to exercise their voting rights. It's the essence of democracy, and we stand firmly behind it. I would also urge everyone else to vote. We are thrilled to join NDTV's pledge to vote campaign and help spread the word in the corporate world and beyond.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which
Thanks for tuning in to India Market Close. And the close, I think the telling part about today's trade is not what the index is doing. Yes, it's about 0.25%. Yes, that IT stocks have behaved well today. And yes, the mid caps and the small caps are outperforming, and they will come up on your screen one by one. So let's get the mid caps and the small cap on screen for a minute. 1.21% higher for the mid caps and the small caps. But India VIX, that is the key thing in the session today. Is there a bit of complacency? Is there a bit of a feeling that things are going to be okay? Could this point towards a very quick upside? So therefore, would Nifty trades come into factor? And I think this drop of India VIX is something that we're going to talk to our experts about, whether there could be a swift up move on the Nifty from the current levels of 22,400 to maybe 22,600 or 700. If I can just get the call and put distribution up on the screen for a moment, because if you just see how the call positions are as of close yesterday or pre-open today, you had 22,600 as the place where the maximum OI existed. Look at this. The max OI on the call side is at 22,600, which means writers are effectively saying that until these levels are crossed, there isn't as much resistance really. And the maximum point of resistance is this. So could be pretty interesting. If we eclipse this and if this is covering here, then there could be some upsides that could very quickly come in. Get the heat map up on the screen very quickly and show you what's moving on the index and maybe some stock specific moves on the BSE 500. But on the index, the Aditya Birla Group stocks and telecom are doing very well. Grasim is up about 4%, Bharti Airtel 4%. There is strength in IT. Look at this, LTI, Infi, HCL Tech ahead of the numbers, 1.8%. Large cap IT has done really well for itself in the session. And auto has done very well for itself in the session. Maruti 1.6% higher as well. What's not done well? Sun Pharma correcting yet again. Reliance after the numbers down about 0.8%. Those two are the key sulking points. HDFC Bank continues to be lower, about 0.5% lower. Last piece, let's get the BSE 500 gainers and losers on the screen. You will see, I don't know if, we should get Vodafone, of course, up there. But right here is the star to my mind. Yes, Tejas Networks is the stock of the day, but the star to my mind is Vodafone Idea. Our short squeeze post the heavy subscription that we saw on the QIB book yesterday, bringing it up about 11%. But there is strength in Amara Raja today after Exide's move yesterday, strength in Hudson Agro because of results, strength in ITI, strength in Tejas, which is up 20%. On the losing side, M&M Financial continues to sulk. Aster is more of an adjustment because of dividend. But Spark corrects, M&M Financial corrects, Rallis post results corrects a little bit, and some bit of gravity being seen in Nippon Life as well. So that's to be watched out for. So this is the long and short of what's happening in the markets today. In moments from now, our guests will be with us and we'll try and ask our guests what to do. Dharmesh Kant will be joining us on the fundamentals, so we'll of course talk to him about that as well. But Tamanna, very quickly, anything specific that you want to mark at the broader end of the spectrum?
Yeah, some of them that you've talked about, definitely Tejas Networks, one of them. What a stellar show. Vodafone Idea, I think, has been the complete shocker of the day. Whoever didn't get that FPO is now wondering maybe why they didn't come in and all of that. Remember, a bulk of that subscription base came in right in the last day. In the afternoon, the retail book was not even fully subscribed. I think the other one I would mark out is Hudson Agro. That also on your screen, up about 9.5%, 10%. Piccadilly Agro as well, we should pick up again. Great numbers which have worked for it, so that's also 5% up today. M&M Finance on the downside, though this data breach, I wouldn't even call it a data breach, it's an out-and-out fraud. They get fake KYCs. This took place in their Izol unit. and 150 crores siphoned from the company. So a lot of questions coming in on what was the kind of compliance they had in place, why were there so many lapses that, you know, whoever this was could get away with it. Honasa Consumers is one that I would mark. Honasa has been having the second day in a row with a pretty good run-up. Their subsidiary Derma has been doing well, and you know, you've had an upgrade for Honasa as well. Positive brokerage reports, and that's why you're seeing Honasa up 8%. KP Energy is another one that I would mark out. They've received a 9 megawatt wind power project order, and you've seen that stock up 5%. So definitely pops of green over there. Some good news stories coming in. And Neeraj, I would even say even the VIX showing the change in sentiment and the mood. That's something that, you know, we should also point out how things have changed so dramatically in the last, I would say, 48 hours.
Yeah. I mean, the VIX is the story, as I said. It's actually VIX is the story. And the dramatic fall there. And let's talk about that, the trading implication and why this could be the case as well. What is the Motilal Oswal dealing room thinking like? Siddharth Khemka Johnson to talk about that and more. And of course, how is the drop in VIX and the uptrend from yesterday's session mean for Nifty trades, Bank Nifty trades as well? Kunal Shah of LKP Securities with us. Gentlemen, both of you, thank you so much for taking the time out and being with us. You know, I'll come to the trade in just moments from now, but Siddharth, just quick mention from you. What's the sense in the dealing room currently? Because this drop in VIX is a sharp one at that. Is there a bit of a complacency, and if so, why?
Yeah, hi, good afternoon, Neeraj. So I think this is because definitely a shocking thing. But if you look at a lot of events have now played out. And last week we had seen some surge in VIX on back of the geopolitical issues, which now seems to have subsided a lot, and there doesn't seem to be any cause of worry from that side. The only key events that remains is the ongoing election, which will be over the next 1.5 months, and then we'll get the result outcome in the month of June, which is also to a large extent factored into the market. So beyond that, I don't see any big event or cause of worry in the market right now, which could kind of impact the VIX.
You know, having said that, the question, I'll take Kunal, is why such a sharp move? And it's a fairly dramatic move. What is that telling us? Because yes, things like an election result which is priced in, etc., is very well known, largely known. What do you put down as a reason for the sharp move?
Yeah, I think definitely, since majority of the events are where we have passed those events, the kind of volatility what we had seen in the market in the last week, now the things have settled down on the global front as well. So I think whatever volatility what we had a little bit because of the geopolitical tension, that also settled down. And now that's where market is, we have seen the correction in India rates. Obviously, the election result is what market has priced in most of it. Probably after that, market would take a call and we'll see the momentum coming back in the markets. But till that, I'm expecting a pre-election rally to continue. I expect Nifty to touch its all-time high levels as well. And Bank Nifty is something which I'll keep on my radar because we have banking results still lined up. So the heavyweights like ICICI, Axis, they are still left with the results. So for Bank Nifty, it is very important to stay above 48,000. If we continue to sustain there, we might head towards 49 on the upside as well.
Yeah, Kunal, what would be your top picks this afternoon?
My top pick in today's trading session, we have seen specifically the mid cap and the small cap space doing very well. On the futures front, what I feel, the energy space is looking very good. So IEX would be my pick. Here we have seen a strong breakout on the technical charts as well. Since the last 2 to 3 days, base formation was done and now a follow-up move has been seen. So I'm expecting IEX at least to move towards the levels of 160 in the short term, and eventually it should go towards 164, 165 levels as well. So IEX is something which can buy at the current levels, keeping a stop loss of 147 and looking for targets of 160 to 165 on the upside.
Just before we get on to other things, Kunal, just wondering this. There are two ways to look at VIX, right? And I know you spoke about it, but I'm just wondering, there is an argument being made that this points towards a very swift, sharp up move ahead as well on the Nifty. could it well happen that we might see substantially higher levels, 200, 300 points higher in the next 2-3 sessions? Also, I mean, if that were to happen, we might see some unwinding on the call side as well, which are very heavily concentrated at 22,500 and 600.
Yeah, two things, Neeraj. Yes, you will expect a sharp momentum. As I mentioned, we are likely to see all-time high levels for Nifty, and that's where momentum would come in. Firstly, as you mentioned, yes, the resistance is there at 22,500, 600 zone, where these are the two strikes where the call writers are still active. So I'm expecting that unwinding to come. But one more data which you need to keep on your radar is the put writers. The put writers, the highest open interest is placed at 22,000. The next is 22,200. We need to see the shift in open interest getting higher and higher toward 22,300, 400 mark. So once that starts to happen, you will see eventually the call writer unwinding and the markets getting momentum. So today's trading session and probably the next trading session where 22,300, 400 is something, the put strike which you should keep on your radar. That is where if aggressive open interest is added, we are likely for that big move what you're talking about, 300, 400 points in the next 1 to 2 days.
Okay. Okay, so that's the view there, and a bunch of stocks reacting, but you have to argue that the stock of the day has to be Tejas Networks. Now, it hit an upper circuit on strong set of earnings. Rucha brings us the key details about those. Rucha.
There was a beat on revenue and margins as reported by Tejas. However, this beat was led by the BSNL 4G deal. Now the revenue grew 4 times to 1,300 crore, while the margins were at 23% versus an estimate of 7.5%. The net profit was estimated to be at a loss of 12 crore. However, the company reported a profit of 147 crore during the quarter. Now, this growth was led by the wireless segment, largely coming from India, while the order book was at 8,300 crore, 95% of which also came from India. Now, what the management mentioned in the conference call is that beyond the overall market growth, it is also looking at several high-scale opportunities in both Indian and international markets. So, the stock was up 40% in last 5 days and 70% in...
Yeah, well, yes, it has had a move. And, you know, before we extend that conversation, just want to mark a news flash that came in a minute ago. Also to just keep in mind, Mastech, of course, has gotten an order and that is up 3%. But NBCC order wins on FY24 on a consolidated level are up to 50%. There's a bit of a spike there too. But so those are a couple of interesting names. But Siddharth Khemka, can you comment on Tejas Networks? What's your, I mean, did you guys look at the numbers and what's the outcome of that? I mean, because it's not a cheap stock. It is expensive, but somebody out there likes the stock enough to bump it up 16% yesterday and 20% today.
Yeah, Neeraj, so unfortunately, Tejas is not under the coverage, but if you look at the broad headline numbers, been pretty strong. Plus, what the street definitely liked is the management commentary about the positive growth, or the strong growth outlook, the strong order pipeline that they have. What we see that is that the overall telecom space has been buzzing with a lot of stocks, interest in the market for the telecom stocks, be it Bharti Airtel, which is at all-time high. Now there is a lot of interest in Vodafone on back of the series of fundraise that they have done, and there is a hope of recovery. And you have some of the equipment companies, telecom equipment companies like the likes of Tejas, which are reporting strong numbers. So I think the entire space would continue to be in momentum. We are seeing with the Reliance Jio numbers also that bulk of the 5G capex has been now done, and the expectation is that from here on the monetization of the 5G network rollout will start happening. So we'll kind of see the improvement in ARPU across the telecom players, and I think this continuous capex by the telecom players have been fueling growth for the equipment players like the likes of Tejas.
You know, we also spoke today with Ashwini Agarwal on how Tata's acquisition of Tejas Network has helped the company stand out. Listen in.
I think the two themes that are staring out at us is that India is starting to do things at scale. And Tejas's acquisition by the Tata Group has allowed it to exploit the scale that was possible for the business. I mean, India spends a very large amount of money on telecom equipment, the hardware side of mobile telephony and data services. And this was a very, very small company, but with a very strong technology backbone. And I think the ownership at Tata has allowed it to win at scale. And I think what we've seen in the latest quarter is simply a small window into what the future might look like.
Okay, so that's the view on Tejas Networks complete. I mean, the numbers, of course, is what has led to this turnaround story, and fundamentally that cause is there. But of course, the Tata acquisition adds that sparkle as well. Very short break. On the other side of the break, we're going to talk about Vodafone. What a move post that FPO closing. If you didn't get in, should you now? What should you do with Vodafone? All of that coming up after the break.
Namaskar. After 5 years, we are again getting an opportunity to exercise our right to vote. This is a right which has been earned after a very long and hard struggle by our great leaders. We must not waste this opportunity. Once in 5 years, we get this opportunity to determine how our country will be governed, what will be the policies which will be followed to achieve economic, social development of the country. I have pledged that I will vote. I have appealed to all my family members and friends to come out and vote for the development of our great nation. Jai Hind, long live democracy, long live India.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some
Back with India market close right here on NDTV Profit. So Reliance is in the red, yes. You could argue that the results didn't enthuse the street too much. So that one is in the red. But look at everything else telecom. Sorry, I'm classifying Reliance as telecom, but Reliance is also telecom. But look at everything else as telecom. Look at Bharti Airtel amongst the top gainers on the Nifty. Vodafone Idea has had a bumper run in the session today. A short squeeze of sorts that has come in. Wonder if Indus Tower has gotten onto the act as well. It was quiet in the morning, relatively still quiet, but still 2.74% higher. So big show really out here. And Tamanna, in some sense you could argue that in Vodafone's case, maybe it was predictable because with the kind of institutional interest that came in, and I wonder why people went short in the first place, but there's a bit of a short squeeze out there. But what's working for Vodafone is working beautifully for Bharti Airtel. That's the big thing. I mean, the unsung hero of the telecom rally for the last 1 month has to be Bharti Airtel. It's had a wonderful move, and a safe move because it's the safest of the telcos if you want to really play the telco theme.
I would argue, actually, it's not an argument because I'm agreeing with you, but what is also working for Vodafone is what is working for Jio. And all the commentary that we've seen, that Jio is going to be the next big driver for a giant like RIL, if those tariff increases are going to come. I mean, if tariff increases do come for Vodafone with the kind of customer base it has, it will work out actually very, very well. There might still be some sort of fight left in this player, which has seen so many twists and turns, so many renames, but still has its loyal customer base. And now with a whole new sort of avatar, it looks like it might just come back.
Yeah, I mean, hopefully people who are on Vodafone will experience good 4G and 5G in days to come. And that might help the stock earnings per se as well, because that migration will clearly help. But yeah, it's been a stunning move by Vodafone for sure. The standout poster boy. Like we said, the Tejas may be the stock of the day, but the star player today has to be Vodafone Idea. Really strong move. Kunal, on the charts, an Airtel, a Vodafone, even a Indus Tower, how do these look?
Yeah, I think if you look at the entire space, they have been doing quite well since the last 1 month. Specifically, if we talk about Indus Towers, there has been a sharp rally from the lower levels. Around 190, 200, the bottom was formed, and from those levels, the stock has been continuously moving higher. So I think the entire space looks very good. Specifically, if I talk about Indus Tower here, the kind of move that we have got, this is probably a time where there's a resistance which is placed over here at 360, 365. So if anybody is holding it from the lower levels, I think good time to book some profit and continue to hold the rest of the position. The next level is 327, 330 zone. So if you get a dip towards that level, again, that could be a good opportunity to enter into fresh long trades.
Siddharth, what do you make of a Vodafone in terms of, all of this? There are two camps, I would say. One camp saying, ki theek hai, what happens when this 12,000-13,000 crores runs out? Where's the rest of the money going to come? The other camp that says that, look, the party has just begun with all these marquee investors coming in on board. So what camp are you in when it comes to Vodafone's future?
Yeah, so I think I am somewhere in between. While the fundraise is definitely positive and the names that have come into the FPO, that does provide some confidence. But if you look at the balance sheet and the asking rate, what is critical is that the moratorium on the debt repayment, both in terms of the spectrum as well as the AGR, would end somewhere, say for the spectrum would end in October 25, and the AGR moratorium will end in March 26. And the combined asking or the annual installment for both these would be about 43,000 crores. And they've just raised about, including the FPO, about 40,000 crores. So that is just the annual outgo that is going to come, and you just see the EBITDA of about 8,000 odd crores that they are making. So it's a big asking rate. Definitely, it's a kind of a you can say stamp of approval from a lot of these marquee names that there is a hope of recovery, and the fundraise will help them improve the serviceability and hence the market share loss that they have been witnessing. But I would still go with a Bharti Airtel, which is the market leader, continuously doing well, increasing in ARPU. Capex seems to be have done. So the peak Capex cycle is behind now, and healthy free cash flow generation is leading to deleveraging. So even at these valuations, I would be much more comfortable as a long-term investor into a Bharti Airtel.
Okay. So, well, Airtel, Vodafone, and well, not surprising that some of these is rubbing off on Indus Towers as well. You have to admit that that stock has been one indirect prime beneficiary. The rally in Indus Towers, after being stuck in the range of 210 to 230, it's in the last 2 months has moved quite surprisingly very swiftly from near 230 to 40 odd levels all the way to 358 currently. Look at that move in the last 3 months, and predominantly coming in post in the current year, YTD that is. So really strong show for Indus Towers, arguably one of the better performing stocks, and especially after it came out of the F&O ban, has just had a wonderful move. Look at that, this year 80%, and large portion of that rally has happened essentially post-Feb. So that's the point I was making. Anyways, so that's telecom and has done well. What's not done well, unfortunately for itself, is M&M Financial. Delayed its earnings board meet. Now a new date has come out as well. But the reason why the stock is down 5.5% is because of a large fraud. Harsh joins in with the details of that, which we've discussed all through the day, Harsh. So fine, the fraud, yes, but what next is the key question.
Well, you're right, Neeraj. In fact, still details coming, or rather trickling through for us. 30th May is, of course, the new date for the Q4 numbers, which we will expect. Personnel involved, well, it's the branch, one area manager, 2 business executives. So it looks like it's not exactly a very low-level employee kind of fraud. That's one piece. The other piece is we have a few observations from analysts, and I will try to quote them. One is with regard to the quantum, 150 crore, while in the larger scheme of things does not look very, very large, probably a quarter impact, 20% of a quarter profit kind of impact. But what they seem to be suggesting is your average average disbursements for FY24 per branch is roughly 40 crore. So the 150 crore in that context is quite large because it's 3 times, and therefore spread over multiple years is the way one would interpret it. Around 3.7 times of FY24 disbursements per branch. That's the quantum. So it's fairly large in that sense, and therefore the time period may be spread over multiple years, which is what some of our sources are also telling Pragati, one of our reporters. The other piece also is with regard to the impact on earnings. It's roughly 8% odd of FY24 EPS, or rather profit after tax, as per Centrum estimates, and it's roughly 22% of Q4 PAT, which is what I already covered. It also impacts net worth by nearly 1%. In fact, specifically 0.8% for FY24. That's the net worth impact as well. So in the larger scheme of things may not be very large, but the sentiment impact is massive. In fact, Centrum has downgraded the stock to a sell. They've even re-rated in terms of their price to book math. They've reduced the price to book from 2 to 1.5. That's the other negative, and that may continue to trickle through even tomorrow. We'll have notes coming in tomorrow as well, where there might be views as well as downgrades coming through. Target price for Centrum is 249. Target price given by Citi is 315. They are kind of playing wait and watch at the moment.
All right. So the financial impact on the overall picture might not be that much, but the fact that this could happen on their watch, and it's not a very low level involvement of personnel, maybe is what we're reflecting in the stock price as well. It's off its days low, but still about 5.5% down. Siddharth Khemka, any thoughts on M&M Financial?
So I think, Tamanna, if you look at, as you rightly summarized, that while it may not have a big financial impact as of now, definitely puts a lot of questions on the systems and processes that the company has. And I think it's definitely a negative sentiment event for M&M Finance. While we would be pretty positive on M&M Finance previously on back of the good growth that the company had been reporting and recovery in the rural segment and the rural farm segment specifically. But now even so we are waiting and watching today. We'll come out with an update at once all the details are known, and we'll revise our estimates. But for the short term, definitely a dampener on the sentiment for M&M Finance.
Okay. Thank you so much, Siddharth, for joining us today. Always great to have you on the show. Kunal stays on with us. We'll take a very short break, but on the other side, we get you our top buy today, sell tomorrow picks.
I pledge to vote and encourage all my colleagues at Godrej Industries Limited and associate companies to exercise their voting rights. It's the essence of democracy, and we stand firmly behind it. I would also urge everyone else to vote. We are thrilled to join NDTV's pledge to vote campaign and help spread the word in the corporate world and beyond.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles. Back with India Market Close right here on NDTV Profit. Trying to think what else has moved around a bit. There is strength in Infosys, marginal at that, if you will, but it's contributing to the gaining points. So about 0.63% higher for Infi in the session today. Of course, Bharati's been the big mover, of course, and like we said, SBI has had a decent move in trade today as well. The one stock to discuss is, of course, Reliance, which has come off quite rapidly today. I mean, it stayed lower, let me put it that way, but it's trading at the low point of the day. Kunal, for somebody who was long Reliance early morning, is this move downwards and closing in almost at the low point of the day reason enough to liquidate those longs, or are you constructive on Reliance?
Yeah, I think if you look at overall Reliance, it has been in a very sideways trend. We were waiting for that breakout about 2980, and we triggered that point. But again, we are seeing selling pressure from the higher levels post the results. So I think if somebody is holding it from the lower levels on the downside, keep 2900 as a stop loss. If that is taken out, then exit your long positions, because that is where the 50 EMA for the stock also lies. And if that is breached, we might see the correction getting sharper on Reliance. On the higher end, 2980, as I mentioned, when Reliance needs to surpass this level on a closing basis. Once that is done, we might see the rally continuing toward 3100 levels on the upside. So I think at the current levels, if you have already long positions, keep 2900 as a stop loss. If you want to initiate a fresh position, wait for a breakout about 2980, then fresh long positions can be created.
Dharmesh, hi, good afternoon. Great to have you on the show. Now, one stock that we'd love your view about is also Vodafone. We spoke about it briefly in the previous segment as well, but since you've come in and it is definitely the star of the day, just wanted your take on whether you see a further upside from here, those who've missed out the FPO. Is there a longer term story here to bet on?
Yeah, good afternoon, Tamanna. I mean, FPO subscription was a big surprise. And this shows about the kind of money and the liquidity which is sitting on for Indian markets and the stocks to be chased for. As far as Vodafone Idea is concerned, I think the hope trade is still on. And this is advocated by the government themselves when they said they want more players into the fray. And slowly and steadily, they will do things which is necessary for the Vodafone Idea to stay into the business and build into a profitable business. So the profitable part is the area of concern as of now, which I think the way things are moving in slowly, the way debt conversion to equity will happen from the government and the others, and follow-on equity flows will be there. I think 3 years time frame, if we do the maths on the back of the envelope kind of a calculation, there's a likelihood of Vodafone turning into a profitable company, and then next 2 years they can enjoy the benefit of that. So having that in regard, I think if one is willing to take a slightly long-term call with some volatility in place, 24, 25 should be the valuation-wise target price for Vodafone Idea based on the current, balance sheet which they are sitting on, and if it is being repaid to the fullest. So that is the hypothesis which we worked, but these are the rough calculations which I am suggesting. So answering your question, I do think there is, way to go up if investors have missed the FPO thing. Even buying at current levels should work well for them.
Okay, so it's still a buy at current levels, according to Dharmesh Kant. Another stock that has been buzzing today is Honasa Consumer. It's in focus after Jefferies has retained a buy rating with a revised target showing a 53% upside. Why is Jefferies so bullish on Honasa? Mahima is joining us with the details.
I'll start with the target price that they've given. They've given a target price of 590, which gives an upside potential of almost 53% from yesterday's closing. Now, what they've said is that the Derma Co, the arm of Honasa is the second brand to achieve a considerable scale, and now it is competing with FMCG brands like Sunsilk and Pantene. They've also said that actives-based BPC is an exciting global opportunity for Honasa, and 3 brands from this particular segment garner around 20% share overall, and TDC achieved EBITDA breakeven of around in Q3 FY24, and this is why profit ramp up will be a little slower. However, it will take up in the H2 FY25. Now, in terms of what they like about the management, they've said that the management focus and agility along with growth mindset is something that they really like, and they have also said that offers active based products will be garnering a leading 20% growth, and they expect overall 20% growth trajectory despite of the slowdown in Mamaearth that they've seen. So these are the overall reasons why Jefferies is bullish on Honasa.
A recent listing may not have too many charts here there, but Dharmesh, fundamentally Honasa, do you guys at Chola like this one?
See, as far as business is concerned, I mean, they have been doing pretty well, and both organic and inorganic route which they have adopted have worked well for them, and they are buying good brands. So no questions or doubts out there. But how do you justify such kind of a valuation? I mean, 20-25% kind of a CAGR even over 20 years time frame does not justify a 1500, 1600 kind of a PE multiple right now. So that's the only challenge as far as stock price valuation is concerned and the business valuation if you compare the two. So that's the reason why we have kept away from this any kind of sort of a recommendation as far as buy is concerned on Honasa. Business-wise, nothing wrong out there. Only valuation is where justification is hard to find.
Okay, that's Honasa 8.5. Now some buckets of strength. So we were talking about Vodafone just a while back. Look at Vodafone. Look at Grasim. You look at any of the Aditya Birla Fashion. This and maybe even Ultratech, I don't know, but the entire bucket of Aditya Birla Group stocks have done really well in the session today. Kunal, you may not look at some of these stocks in this fashion, but individually from an ABFRL, Vodafone, we've spoken about Vodafone of course, but a Grasim, maybe Aditya Birla, Sun Life AMC, but this whole bucket of stocks have done well. Is there something that stands out on the charts or the derivative positions?
I think multiple stocks which are looking very good even from the current levels. First, I would highlight your AB Capital. I think if you look at the listing price for AB Capital, which was listed in 2017, it was somewhere around 240, 250 zone. We are trading at 216. So we are almost nearing to the listing levels as well. I think I'm expecting that levels to be touched in the very short term. So 230, 240 levels is what I'm expecting for AB Capital. Already a strong breakout on the technical charts that has been visible with volume. So this rally will continue on the higher end. The second one is ABFRL. It has been a massive underperformer since a long time. And finally, we have seen the volume-based breakout that has come in. 265, which is the hurdle zone from where earlier multiple rejections were seen. In fact, in today's trading session, we surpassed that level of 265. We went toward 270. So I think in the last 1 to 2 days, we have seen a sharp rally. One can start accumulating even at the current levels. If you get any dips into the stock, utilize that to buy. On the lower end now, 230, 240 is a very strong support zone. So the stock will see multiple bounces even from those levels. I'm expecting the stock to at least go towards the levels of 300, 312 on the upside. So ABFRL and AB Capital both are looking very good on the chart perspective.
All right, a clutch of stocks that we want to talk about, and we spoke with Hudson Agro today. Hudson Agro has had a good set of numbers, and we'll play out what the management is also saying. But overall, the fact that milk prices are up and, you're going to see no end to the consumption at all. You've seen a Dodla Dairy, a Hudson Agro, Heritage Foods, Parag, Milk Foods, quite an interesting move in all of these stocks. And yeah, there you can see it on your screens. Now, how will this impact Hudson Agro's top line going forward? Listen in to what the company told us today.
Last year has been an abundant supply of milk for all the people. And this is the time to store and reserve. And we have stored and we have kept a reserve. This year we are expecting an acute summer according to the Weather Bureau. If that is the case, the flesh may not be as good as last year, but we have got a war chest of commodities. In any eventuality, the cost of inflation will not hit us, and we are well prepared to meet any contingencies without any difficulty. And we will not be surprised by the price increase or anything, and we will be able to manage with our own stock in a much better and competent manner.
All right, so Hudson Agro there, of course, numbers also looking fantastic, and that's why you've seen that kind of an up move, triple-digit growth. Kunal, is this a stock that you like, or would you still be constructive on it at this level?
See, I think this is one stock where we have seen buying momentum since the last 2 days. You can see the major part of the correction for the stock is over. This is something which on the technical charts is looking very good. 1200 is the next resistance zone for the stock. Again, on the levels of 1200, we have seen multiple rejections and the stock has corrected. But the kind of base formation it has happened in the last 2 to 3 days, it has surpassed its 50 EMA as well as 100 EMA with volumes. So I'm expecting that 1200 resistance also to be taken out in the near term. So if you're trading for a short-term perspective, look for targets of 1200 on the upside. For positionally, I think it can at least go towards the levels of 1350, 1400 on the upside.
Dharmesh Kant, just your take on a Hudson Agro. Let me add a Piccadilly Agro also. I mean, not in the same space. One is milk, and one is a very different product. But both these stocks firing away today. And would you see a further upside here?
I don't track them closely, so difficult to comment on them. Apologies for the same.
No.
I'll just take a moment on Piccadilly Agro because we interviewed the management today, and it's interesting because they've done nearly 40 crores in Q3 profit and circa 40 crores in Q4 profit, but Q3 had a one-off exceptional other income. Q4 is pure profit, EBITDA margin at 23%. 23 or 24%. They said that for FY25, the average margins may be about 20%, which is very good relative to the 4, 5, 6% that they've enjoyed in the preceding few quarters. And to Harsh's question of whether they can, we're talking about Piccadilly Agro, by the way, so we should just keep that in mind. To Harsh's question of whether they could go only 30-35% revenue growth, or can they do more? He didn't say a no when the question around doubling of the revenue came in. Last but not the least, they're expanding capacity on the, this is the Indri whiskey maker, right? So they're expanding the capacity for Indri and others 2.5 times by FY25 and 5x of the current capacity by end of FY26. So it's a stock in a growth phase, looking very robust from a numbers perspective. The only pickle is that they got 3 business segments, and the sugar segment and the distillery segment, which will supply ENA to other companies, cannot be valued at 30-40 times the way consumer businesses are. Those 2 segments will get valued at maybe 10-12 times. And that is where I think people need to be very careful when they're ascribing consumer company valuations maybe to a business like this.
Okay, fair enough. And which is why we spoke about Piccadilly Agro, and like I said, very different from Hudson Agro in the product that they sell. But nevertheless, I don't think there's going to be any reduction in consumption for both set of products. We did speak to Piccadilly Agro today on the company's growth guidance for FY25. Listen into what they said.
We should be able to, because most of the products which we have now and which are in the pipeline are all premium or super premium products. And the company decided about 4 years ago that there's a lot of pressure on the the cheaper products where the volumes are huge, but the market pressures and the inflation was affecting it very badly. And we decided that we would discontinue that segment and concentrate only on the premium segment and the luxury segment.
All right, so consumption is going nowhere, especially if it's premium products. But the question is, what is the overall trend? And important to talk about this because Tata Consumer is set to release its Q4 numbers today. All eyes on that stock, which has had a bit of a seesaw in the last couple of sessions. Now coming back into positive territory, but it's not had a great day. Mahima is joining us with what the street is expecting.
Right. So I'll start with, what kind of expectations you can have in terms of the 4 numbers that we always discuss. Revenue is expected to grow double digit around 10%. And we're expecting that the margins will improve by 100 basis points. And we expect that the net profits will also grow in double digits. Now, in terms of demand trends, the consumer staples, the demand trends is expected to be subdued. However, easing of raw material prices is something that will aid the margins. In terms of rural demand, it is continued to, it will continue to remain languish. However, this will be the major reason that will be dragging the volumes down. Now, in terms of revenue cost synergies, that should be a key watch out for, because this is something that we'll be seeing because of the recent acquisitions of Capital Foods and Organic India that they have made. Now, in terms of segments, beverages business is likely to grow on 9 to 10%. Tea is likely to grow on 5 to 7%. Nourishco is expected to grow around 40%. And in terms of international business, they are expected to see a growth of 6 to 7% anywhere. Now, in terms of key things that will be, the major reasons to watch out for TCPL, we'll have something like market penetration for the international business, operating leveraging benefits, and volume growth in the F&B business, which is expected to be around mid-single volume digits. So these are the key things that will be, on the radar to watch out for in TCPL.
All right, so that was Mahima with the expectations for Tata Consumer. Kunal Shah, Dharmesh Kant with us. Dharmesh, I'll come to you first. So you're going to have an interesting week as far as FMCG and the consumer space is concerned. A lot of big numbers expected, and I would say the kickoff in a sense is from Tata Consumer. Now, do you think that the fact that rural demand is still a bit sluggish, this has been said and communicated everywhere, will be priced in? What are you watching out for?
No, I don't think that sluggishness of rural demand is priced in. And the type of heat wave which is doing the rounds is going to have, again, a dent on the rural demand going forward. So I think any hint of a weakness out there would be difficult for these companies to sustain the current valuation multiples, a sharp profit taking can come into a play. So I would be keenly watching the management commentary and how they are guiding us to the volume growth and the blended price realization guidance. So that is on the entire pack as a whole. Coming specifically to Tata Consumer, I think it's a stock to be bought on every declines because their 20-25% profitability CAGR is on track, and the management has been able to deliver. So premiumization everywhere is the theme which is doing the rounds, and it's likely to have a good 2-3 years going forward.
Okay, 3:20, that time of the show we'll get in closing strategies. Kunal, a BTST or an STBT as the case may be?
Yeah, I think overall we have seen some good action even in the F&O space. So the kind of stocks which are buzzing right now, my focus will be again the stock what we discussed is ABFRL. So I think we have seen some correction from the higher levels. So I think a good opportunity to again enter into the trade. 262, 260 is where the stock is currently trading. So one can again initiate BTST at the current levels for the stock, keeping a stop loss of 254 and looking for a targets of 270 on the upside.
Okay. Okay. So, well, Dharmesh, there is a corporate action that's happened, demerger or spinning off that has happened as well. The stock is up 9%. The group as well is doing well today, but ABFRL in particular, what is the house view there?
See, we have recommended this, before this entire arrangement was announced. It was way back 1 year back, and since then the stock did not perform, whereas counterpart like Trent has been doing phenomenally well. So I don't think after this demerger and splitting of the businesses, it's going to catch the way Trent has been. Because still the entire business model of Trent is quite different from ABFRL, Pantaloon or the existing business. So a branded business is going to have a tough time. That is the view. So what we are looking forward to is ride this momentum for 10 or 15% more and there to take the profits. So that is what we are waiting for. Is there in the portfolio recommendations, but I think at around 285.90 we would be recommending profit taking out there. So that's still, the growth we are expecting there.
Maybe FRL having a superb day. Otherwise, stock up about 9%. But apart from that, you've had a lot of move there completely on even a Suzlon. I want to mark out a Suzlon. I want to mark out, all of those spaces in the renewables as well, which have been doing fairly well today. Is this something that you're tracking, Kunal?
Something is what I'm not tracking much, but I think if you look at technical charts perspective, the stock is in a sideways trend. We are seeing rejection at higher levels around 45-46 zone, and on the lower level, the buying is visible around 36-37. So it's stuck in a very broad range, a break on either side, either above 46 or on the lower end below 35-36 level. Then we'll see trending moves coming, or else we might see the stock trading in this range only.
Range-bound trade on the markets as well today. The Nifty and Sensex now not moving too much. It's IT stocks which are actually doing fairly well on trade today. But, a bit of pressure coming in on some of those counters. A Rallis once again down, a Spark for another consecutive day. I think 8th consecutive session. A Spark is on a 5%, bottom sort of circuit. And having quite a tough time. You have a Zomato also pulling back today, down about 3% after its good run yesterday. But we are in election season, and we are talking about what you should know about your candidate and how rich is your candidate. Alex is joining us with the portfolio of one particular candidate today. Yes, Alex?
Well, it is Amit Shah that we're speaking about today, and most interesting is his stock portfolio, but we'll come to that in just a bit. Let's first talk about his taxable income that was reported in the previous financial year, and that stood at close to 75 lakh rupees. It's an increase from what he reported in FY19, which stood at about 57 lakh rupees. Now, let's take a look at some of his other assets. He's got domestic bank fixed deposits of about 1.9 crore rupees. He's got cash that was declared at just over 24,000 rupees and movable assets that amount to 20.3 crore rupees, most of which are in individual listed stocks. We'll come to that again in just a bit. Jewelry of close to 73 lakh rupees. Interestingly, he does not own a motor vehicle, and he's got no mutual fund investments either. The total value of his property stands at about 16.3 crore rupees, and he's got agricultural land, non-agricultural land, as well as commercial buildings and residential buildings and flats. Now, let's come to his stock portfolio, which is, in fact, the most interesting part. He's got 185 stocks that are worth a cumulative amount of 17.43 crore rupees, and he's got quite a few large cap companies. You'll recognize most of these names, the likes of ABB India as well as Berger Paints. He's bet on this particular counter in the paint space and not on Asian Paints. It's quite interesting. Bharat Forge as well as Colgate Palmolive, Century Textiles as well as HUL, ITC, MRF, L&T, Nesco, Nestle India. You name it. You name the large cap, the frontline large cap, and he's got it in his portfolio. That's what I thought was most interesting.
Well, one thing though, Alex and Tamanna, Mr. Shah is not the candidate for the mutual fund show. He won't be a viewer because he doesn't own mutual funds. Yeah, but that's interesting. Alex, thanks for putting that into perspective. And interesting. I love this segment. It's a great way to marry finance and politics in some fashion.
Correct. And you know, what it's also telling me is that our politicians are pretty astute at investing. As well, probably they have someone helping them do it, but it shows the faith in that. And that also tells you maybe why BSE is such a rage, because everyone is investing. 13% up today on BSE. It's hit a 52-week high. It's at an all-time high. Kunal, are you tracking what's next on the charts for a BSE today? We're trying to figure out why or what has changed. Is there a large trade, etc.? But for now, are you liking BSE?
Yeah, I think if you look at it, the stock is into an uncharted territory. So definitely you will see higher levels going forward. The kind of up move what we have got. A fresh breakout, especially in today's trading session after almost a 10 days consolidation period. So this could again lead the stock even higher towards the mark of 3,300, 3,330 on the upside. So I still expect some more upside in the stock in the near term. Entering into fresh positions at the current levels, the risk reward would not match. So if you get any dips in the stock, utilize that. But if you are already holding, keep on continuing holding the stock. There is still 100 to 150 points upside left on the stock.
Dharmesh, can I quickly wrap up with maybe a BSE if you look at that one. Fundamentally, is there more upside here?
Yeah, I will give you a very simple answer. The thesis is this active participants of the market is going to grow by 5x in next 7 to 8 years. So that way, fundamentally, even at current level of activity, the earnings will go by 5x for BSE. So it's still a doubler from here.
All right. The markets have dipped last couple of minutes. Just before we wrap up, Dharmesh, NBCC has seen a spike because of new orders and a business update that they gave, and that's just come in. It's off those highs though, but still about 6.5–7%. Any view on an NBCC?
Yeah, I mean, it's a constructive view, but as of now, we don't have any buy recommendation on the stock. It's more of a hold kind of a recommendation, which we have been maintaining for the last 6 months. So orders are trickling in, flowing thick and fast, and so has been the space with all the infra and construction companies belonging to the government side. So continue holding the position.
Okay, Dharmesh as well as Kunal, thank you so much, both of you, for taking the time out and being with us. Really appreciate your time. Let's start wrapping up the markets and very quickly, like we said, the Nifty's come off. It's ending very, very flat. I don't know if the global cues have to do something with it. Volatility is still lower and the broader market's still very active, so which is actually a good sign. Get the heat map up on the screen. And then, of course, after the heat map, we'll show you the volatility index yet again. A lot of red now relative to what was. Sun Pharma, the top loser, but BPCL. RIL is one key reason why this might be happening, because it was down 1%, now 1.5%. So piling on the losses a little bit. Some metal names featuring out there in that list as well. HDFC Bank still in the red. What's done well? The same set of stocks, no big changes, but for the fact that Nestle has moved from being the red to being 1.5% in the green. It's been a quite an intraday move for a Nestle. But before Tamanna talks about the broader end of the spectrum, should mark the VIX. India VIX should come up on your screen, and as we end the day as well, volatility has largely stayed lower. This is a crash. This is not normal. I'm sure this will pick up at some point of time, but this is just complacency of another order, really, if you will. This is not what usually happens in an election period. But Tamanna, broader markets are not complaining about all of this.
Yeah, I'm just fascinated with the India VIX and how does that drop 19%? What is everyone so excited about, or is there something that we're missing there? But yeah, broader markets definitely doing better, and I think on the Nifty it's RIL today, which is dragging down the index. And if you pull up the Nifty contributors, I'm sure you'll see that perhaps as well that it is, yeah, absolutely RIL 30 points, pulling down the Nifty, Sun Pharma there, and HDFC Bank. So those heavyweights not really helping out today. But if I were to talk about some stellar sort of action points, I would definitely pick a Vodafone, because the Vodafone story today has been astonishing, to say the least. ABFRL is the other one. The Aditya Birla Group companies have had a good day. ABFRL has had a good day as well, 9.5%. The demerger has been on, but the con call takeaways seem to have been something that have enthused the markets. Some spots like a Tejas Network, I thought very interesting. I want to see what Sterling and Wilson has also done today, but Tejas Network is ending the day on a 20% upper circuit. Sterling and Wilson is having another good day. They've come off their highs of the day to about 8% or up today, but still doing fairly well. So some good pockets of green there. M&M Finance I would mark out for a negative sort of news flow. But I don't know if you could have a technical bounce back, because at the end of the day, it's a 150 crore loss, which has been identified. So that leak, whatever it is, will be plugged down about 5.5%. The fact that they had to postpone their result announcement because of it is a little bit of a surprise.
Yeah, and also that it's just kind of trended lower today. It's not shown any attempt at making a bit of a bounce,
Yeah.
which is also a bit disconcerting. But yeah, maybe now issue found, dealt with. Maybe it brings about a bit of a reaction back. But
BSE is the other star.
What a star.
Intraday chart. We should pull up the BSE intraday chart, because I'm trying to understand what happened there. 52-week high, all-time high, and in completely unknown territory. Yeah, towards the end, you've seen that peak being hit. 3247 was the day high for the BSE. It's going to close about 13% up. So a good day all in all. I think when an RIL sulks, it's going to be tough for the markets. We'll see if there is a recovery tomorrow. But I don't know, are you feeling as confident as the India VIX is the big question for all of our viewers as we wrap up this edition of India Markets Close. So from Neeraj, me and the team that puts the show together, thank you so much for watching. We'll see you back on India Market Open.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide?
An important announcement, a corporate announcement today by Interglobe Enterprise. So Interglobe and CP Gurnani of Asago have announced a joint venture to launch a company called Ionos, which is pioneering AI-driven innovation. Now, what exactly is Ionos? What will it do? To speak on this, I'm speaking now with Rahul Bhatia. He is Group Managing Director of Interglobe, and CP Gurnani, Chairman of Asago Group. Welcome, gentlemen. Thank you so much for speaking with us here on the NDTV network. Let me begin by asking you, Mr. Bhatia, what Ionos is about. I hope I'm pronouncing it correctly. What is this company and what will it do?
Well, I think you're pronouncing it pretty correctly. It's a little bit of a tongue twister, but Ionos is the word, and it's inspired from the Greek word called everlasting. I'd rather have CP walk you through the objectives of the company, and then I can chip in at a later moment in time. CP?
So again, to be brief, having been part of the IT industry and innovation industry, there was always a requirement that some of the sectors IT could do a lot more. Technology at the right time has become the catalyst. Now with the advent of quantum computing, advent of AI, advent of the GPUs, our assessment is that many of the processes, particularly in the segment which is called TTLH, but it is really travel, transportation, logistics and hospitality, there is a need for intervention by technology. So Ionos is creating an IntelliOS or an operating system to make enterprises in TTLH more intelligent, more data-driven, more customer-driven, and create an experience for not only our direct customers, but customer's customer. So we are excited because AI is becoming a lot more easy to use, with conversational AI becoming mature, with prompt engineering becoming mature, Gen AI being able to differentiate, and if you use it right, it can also be made responsible. So we are excited. There is a lot to be done, but there is clearly a gap in the industry, and we are targeting TTLH. Main reason is could be served better. Number two, the domain expertise is coming from Interglobe Enterprises, because they happen to have a footprint in this industry. They are reasonably well invested in logistics, well invested in hospitality, well invested in urban mobility, cargo management, logistics, and obviously better known for the largest airline of India.
Yeah, so that's actually my question. Is this an interface we will see used by Indigo? Is Indigo going to be a prominent or a first big client for Ionos? Either of you can answer that.
I think, let me go first, and it's a Singapore headquartered company, very clear focus on a global footprint. And the reason it is Singapore headquartered is because a lot of growth is coming in Asia, both in travel, transportation, or hospitality. And we want to, not only create AI centers of excellence or data centers of excellence, but we also want to tap into the growing needs of the consumers in this area. It is coincidental that the first 2 or 3 prospects with whom we are doing proofs of concept, they are outside India, and 2 of them in Europe, 1 of them in US. So I can only say yes, there is a desire to do business with Interglobe, but the focus of the venture is to create a global company.
Okay, so Mr. Bhatia, this is not something.
Rahul, you want to add anything?
Yeah, this is not something that we will see on Interglobe Aviation or Indigo straight away.
Yeah, Tamanna, just to be clear, I presume you're not expecting that this company's been launched predicated on the fact that it'll have business from some of Interglobe's companies.
Sure.
This said, some of the businesses we are involved in are faced with certain issues, technological issues, and the same issues are faced with companies globally. Clearly, CP's organization is going to develop solutions, products, co-create products that makes the industry at large more efficient. And within that sort of sphere of development, if there are products or applications that that companies like Indigo find appealing, then of course there would be opportunity for Indigo and the NewCo to work together. But that is, like I said, it's the whole company is not predicated on business being brought in by Interglobe.
So strategically for Interglobe Group, Mr. Bhatia, and this question's for you. Can you give us the rationale of venturing into this space, into the AI SaaS space with Mr. Gurnani? What was the strategic thought behind it?
Tamanna, so one thing that I think Interglobe has is pretty uniquely positioned because it straddles travel, transportation, travel commerce, hospitality, logistics, cargo, and I think given what we do, I think there's an opportunity to create a thread of needs that provide ability for these different industries to talk to each other. And we've been wanting to get into this space, and CP was coming off his current obligations or his past obligations at the end of December. I was having a conversation with him for most of last year, and collectively believe that there's an opportunity to go out and do something. And this also would include, for example, airports. We engage with airports all the time, and it's just that one set of service providers at the airport don't talk to another set of service providers at the airport. And there are several opportunities like this where I think, given our domain sort of experience and understanding, we think we are uniquely positioned to bring some products and services to the marketplace.
Okay, so last question, because I know.
I'll give you an example.
Yes, please.
A lot of low cost. Sorry, go ahead.
No, please.
In the world are powered by a company called Navitaire. Now, Navitaire was built many years ago. It's a legacy product. It's currently owned by Amadeus. Low-cost carriers have evolved over time. At one time, they started off being point-to-point airlines, and now they do a lot of interlining and do a lot of other things that Navitaire is not necessarily set up to provide. So their parent, they have a proposition in front of them. They know they need to evolve the product. They themselves are legacy based, so either they can go and embark on that journey, which could be somewhat slow to evolve the product, or else they can partner with companies like the NewCo we have, Ionos, bring agility, start on a clean sheet of paper, and work to develop a new product. Now, in that framework, can companies like Interglobe bring some institutional knowledge of where the bottlenecks are? Yes, we can, and consequently, we think we are set up for putting something pretty unique in the marketplace.
Okay, I know you guys are in a hurry, so just one last very quick question. Like Mr. Gurnani said, this is going to change the experience in the space. I wanted a brief, for example, from a customer point of view and the customer's customer point of view. Give me an example of what this kind of innovation would change. I'm leaving that to open to whoever wants to field it. Yes.
Okay, so Rahul Bhatia spoke to you about airports and airline sector being integrated. Last year I had a chance to visit the previous year the FIFA World Cup in Qatar. From the time the gate opened on the aircraft to the time I got into the car, it took me exactly 14 minutes. Why? Because it was computer visioning and the data all integrated. My hotel information was available to immigration, my airline information was available to immigration, and hence I got a green light as soon as they saw my picture. Now, to me, that versus some of the European airports where the wait could be 20 minutes to 1 hour, I mean, it's clearly an area where we need to improve. Now, can this 14 become 12? Maybe there are other ways of doing it. But the point again is that there is a room for data, analytics, AI, predictive, workload management, and being able to provide better customer service. I can give you 100 more examples, but all you have to do is listen to the customer. Customer is saying very smart technology solutions, but make them more intelligent.
Yeah, and we're looking
forward to
seeing.
Thank you again, Tamanna. Thank you. You've been very kind.
Thank you so much for taking out the time. I know it's been a busy afternoon and great to speak with both Mr. Gurnani and Rahul Bhatia. We're looking forward to seeing some of these innovations roll out in real life. So that was the top team speaking on the launch of Ionis.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes...
Hello and welcome to NDTV Profit. Joining us today is Mr. Raghu Panikar of Kane Semicon and Bhanupriya Krishna of Perceptives Solutions. Welcome to NDTV Profit.
Thank you.
So, first of all, just wanted to know what is the update on the OSAT project that you're planning in India, sir?
So, at this point in time, we are almost in the last stages of getting this approved with the government. It should be a couple of weeks away where we should get the approval. So that's the stage it is in now.
Okay. What are the plans for this facility in terms of production capacity, number of assembly lines? If you can give us some details about this.
Yeah. So, we intend to get into an OSAT because we are primarily a EMS company, Electronic Manufacturing Services. With the investment that has come in through an IPO fundraising year and a half back, we decided either to do more of EMS, which is one option. Second is to vertically integrate ourselves and get into closer to electronics. That is semiconductor, which is to do manufacturing in semiconductor, hence OSAT. It augurs well with the services setup that we are doing, electronic manufacturing services, hence outsource semiconductor assembly and test. Another area that we are going into is bare board PCB, because these are the two components which are imported items, and these are the two components that get into EMS. Hence, we are getting into semiconductor manufacturing. So the semiconductor manufacturing that we intend to put is almost on a 50-acre land. That necessarily means that we have huge capacity to build. There will be approximately around 13 to 14 manufacturing lines. Case in point is another important aspect of engineering, which is the ATE part of it, which nobody else is thinking in India. And that's where we're going to make a difference. The full capacity of this plant, which will come on a 50-acre line, which is 13 to 14, will churn out 1 billion devices, a full capacity.
That's annual capacity?
Annual capacity of 1 billion devices.
All right. So what is the kind of investment that will go into producing this 1 billion chips on an annual basis?
Yeah. On a roughly basis, if I look at the first 5 years of investment, somewhere around 5,000 crores.
Okay.
But then, as you would know, a part is borne by the government, central government subsidy, part is borne by the state government subsidy, the remaining part we have raised money through QIP and the money is available. But that doesn't mean that after 5 years what happens, right? After 5 years or within 5 years, we have to be self-sufficient. We have to invest in newer technology. We have to invest in CapEx after the 5th year, which means there's a lot of investment that will happen. And the current financials that we worked out, it seems to us that we'll become positive in the 3rd or 3.5 years.
What do you want to achieve from this plant? So what is the revenue target from this plant, say from year 1 till year 5, and when you properly become after the first round of funding that goes on?
I'm almost on a silent period for the because Kaynes Semicon is the subsidiary of Kaynes Technology, and Kaynes Technologies just concluded a very good year of last year, so I'm not allowed to put in the numbers. But then if I may stick out and say, my own vision for Kaynes Semiconductor is to make it $1 billion. I got to list this. That's a good question. Yeah. I got to list this into the stock market. So this is the two dream that I'm living. And then necessarily, like Bhanu mentioned, that what do we do for this, for the engineering community, for the students and stuff like that. We missed mechanical engineering. There is a lead frame design. Mechanical engineers will come in. Chemical engineers come in because a lot of gas is being used. So I'm sure we're going to net create a positive effect. What happened, like Bhanu mentioned, 30 years before in design, we are going to replicate that or do it a little bit more faster in the semiconductor manufacturing. So, make it $1 billion, list it, and make sure that, we have abundance of talent in India. We rather use the talent and also export it to those countries which are aging a lot and there are not much engineering community there and stuff like that. So that's what I would tell.
All right. Thank you so much, Mr. Panikkar. Thank you, Bhanupriya, for the lovely chat. All the best. Thank you. Hello and welcome to NDTV Profit. Joining us today is Mr. Vivek Raghuraman. He's the co-founder of Mixtech, a US-based startup involved in the AI and HPC sectors. He's in India at the DAM Capital Investor Summit, Investor Meet, with a new AI chip, so to speak. Mr. Raghuraman, welcome to NDTV Profit.
Thank you.
So first of all, we went to your website to check what you do. So your website says siliconization in progress.
Right.
So let's just start the conversation there.
Sure. So what we as a company are focused on is improving the interconnects between the server chips, the high performance computing chips, and the new GPUs or the AI accelerator chips that are being designed. So today, as you are all aware, most of the development or the largest GPUs that are being made are by companies like NVIDIA. And then eventually these are need to be scaled to big size data centers. Right now they are very small clusters. But then as you start scaling them, you run into significant power issues in terms of the network power consumption. So we are trying to address that space by using a technology called silicon photonics. Now this technology so optic fibers have always existed in data centers, but the density requirements of these GPUs to communicate with each other, the latency requirements are all driving for a paradigm shift in terms of implementing these new silicon photonics based chips that can be integrated with the GPUs. So the newness in this is basically today's GPUs are interconnected to each other predominantly using electrical links. These are high-speed electrical links where the data goes between the GPUs or GPU to memory, and the communication happens for whatever the large language models or the generative AIs are being developed.
You have something actually on the table that in front of us, there's actually a chip that you have brought us. Just talk to us about this particular chip.
So yes, so you talked about siliconization, about what we are going to be doing. So this is a prototype of the siliconization that we are looking at, wherein what you see is a very large body GPU ASIC that is constructed using the most advanced packaging technologies, 2.5D, 3D integration packaging technologies, and the silicon photonics integrated with that packaging. And this is going to be sort of the future of how the GPUs are going to be designed and how the GPUs are going to communicate with each other.
So this is a photon-based transmission rather than electron-based?
That's correct. That's correct.
Okay.
So this uses photons, which are directly converted at the package and then transmitted out.
Okay. In that sense, of course, they're going to consume less power because that's the biggest concern about AI chips, AI supercomputers, their power consumption. So how much does this particular chip reduce or address that concern?
So the major power that is consumed in the AI chip is actually the core silicon. But the other aspects of it, this is basically the networking, the memory, these are other aspects that consume power. And then there is an aspect of density. So with this solution, it provides two benefits. One is the density and the other is the reach. And combined, it saves about 30% of the power coming out of a GPU ASIC compared to the technologies that are available today.
All right. Thank you so much, Vivek, for speaking with us. Thank you, viewers, for tuning in. This is Tushar for NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Market ends a little higher as broader indices outperform benchmarks. Nifty Realty is the top sectoral gainer. The Supreme Court cracks the whip, asks Patanjali if its apology in 67 newspapers is as big as its advertisements, rebukes the government for halting drug advertisement regulation. Home Minister Amit Shah goes big on large cap stocks, declares holdings of over 17 crore rupees with investments in companies such as ABB India and Bharat Forge. Madhya Pradesh Chief Minister Mohan Yadav says there is no anti-incumbency against PM Modi and BJP is confident of winning the Chhindwara seat. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host Pallavi Nahata, and as always, the show aims to bring to you market headlines along with national and international news. Before we move on to the show, it's time to see how D Street performed today. My colleague Neeraj Shah joins us for a quick market wrap to share all of the intraday action. Neeraj, over to you.
Well, the markets had an okay day today. The large caps at least ended flat, but I think the standout was India VIX today. So if you just look at what the markets have done, it'll look okay, but volatility came off quite rapidly, and the broader markets certainly did well. So mid caps and small caps in particular, had a pretty decent run in trade. 1% higher for the mid cap index, and the small cap space too, about 1%. So pretty strong showing out there. Bring up the Nifty 50 heat map, and you will see a little bit of sulking of Reliance, HDFC Bank, Sun Pharma, and a few others which corrected in trade. Sun Pharma, Reliance post the numbers 1.36% lower. Sulked big time in trade today. HDFC Bank too, somewhere in the top losers list. Not top loser really, but the third of a percent. On the flip side, what did well? Grasim 4% higher, Bharti Airtel 3.83, and Bharti kind of negated the pressure that Reliance was putting on the markets from a points perspective, the point contribution perspective. Nestle had a decent outing, Maruti had a decent outing, autos per se, with Maruti, Tata Motors, Eicher doing well, had a pretty decent outing as well. But the broader end of the spectrum was punctuated by some result reactions that we saw. I mean, just look at the winners. They just up 20%, some very strong showing there. Hudson Agro, 8.5%. We don't quite have Piccadilly Agro out here, but that stock had a great run too. Cochin Shipyard, Garden Reach Shipbuilders, and that whole bucket had a good run in the session today as well. There's some strength in Aditya Birla Fashion, which brings me to the Aditya Birla Group stocks, from an Aditya Birla Fashion to a Vodafone to a Grasim. The clutch of those Aditya Birla Group stocks did very well. What didn't do well? M&M Financial corrected after delaying the results because of a 150 crore KYC fraud. Spark continued to grind lower. Rallis, a result impact being seen here. ABB is sulking after a brokerage note put the valuations into question. And Aster DM had a technical correction because of going ex-dividend. But that notwithstanding, it was a day which belonged to the broader end of the spectrum, with the likes of a BSC, with the likes of Garden Reach Shipbuilders, and a clutch of other stocks doing really well in trade. Let's see what tomorrow has in store.
Thank you, Neeraj. And on to an NDTV Profit exclusive. Sources say that a financial fraud took place at M&M Finance's Aizawl branch in Mizoram. Now, this comes after the company postponed its fourth quarter earnings to May 30th. Pragati Oberoi has been tracking the story and she joins us with more about it. Pragati, what are you gathering from your sources?
Mahindra & Mahindra Finance technical fraud was reported this morning to the exchanges, and the company in the exchange filing verbatim said that the financial impact is not expected to be more than 150 crore. But now our sources are communicated to us. We've gotten some fine-tuned details of how the fraud and what the fraud is about. Sources have told us that the financial fraud at M&M Finance took place in the Aizawl branch in Mizoram. That is very specific, just in one branch. That's where the fraud took place. In fact, sources also told us that the personnel from the direct marketing vertical was involved in this fraud. Primarily, the fraud was happening in the car loan vehicles or the car loans that were given out. In fact, one area manager and two business executives are most likely under arrest, and this came out in fact in March 2024. That's what sources told us. We got to know that the FIR was filed with Mizoram police in Aizawl around 20th of March. The date may not be that exact, but that's when the fraud was found, and then the FIR was filed. Because the case was a little bigger than expected, there's also a likelihood that the case has been now transferred to the CID department, which is a special department in the Mizoram police. We also know that since these three people, one area manager and two business executives, are likely under the arrest of the police, we know that the Aadhaar and the voter ID documents were apparently being forged for last 2-3 years. Since it was happening for last 2-3 years and the numbers were getting inflated in terms of the business that was happening, finally the fraud was detected in March 2024, and accordingly the company took action. We have reached out to the company for official comments on this as well, but as of now we do not know, or we haven't heard anything from them. In a latest update, we also know that Mahindra & Mahindra Finance has reportedly shifted its earnings to now 30th May, which was scheduled for this morning. That's the NDTV Profit exclusive for you. We'll give you more updates as and when we have them.
Thank you, Pragati. And with that, on to some stock-specific action. Vodafone Idea shares jumped more than 14% intraday as the company set the offer price for its follow-on public offer at 11 rupees a share. The company's FPO was subscribed over 6 times. Moving on, when you issue an apology, it does not mean that we have to see it by a microscope. This is what the Supreme Court had to say to Patanjali's apology in regards to the misleading advertisements case. Now, the SC has said that it is expanding the scope of the case, and it has asked Patanjali's counsel whether their apology in the newspapers was the same size as the advertisements. My colleague Varun joins us with more details on that. Varun?
So yeah, in the weekly hearing that has been taking place in the Patanjali misleading ads case, senior advocate Mukul Rohtagi, appearing for Patanjali, informed the top court that a public apology has been tendered in a total of 67 news dailies. However, the top court expressed displeasure at the size of the apology that has been tendered, and it said that the size should have been the same as that of the misleading advertisements in question. In addition, the court pulled up the Centre for putting on hold Rule 170 of the Drugs and Cosmetics Act and termed it an arbitrary and a culpable exercise. It must be noted that as per Rule 170, any advertisements pertaining to Unani, Ayurveda, homeopathy and Siddha cannot be aired without the permission of the state licensing authorities in order to prevent the issue of misleading advertisements. The court asked whether the centre is more concerned with the revenue that is coming in or whether it is more concerned with the things that are going out in the public fora. Lastly, the court said that it is not gunning against a particular company but all those FMCG companies that affect the general public through their misleading advertisements. As a result, the court has impleaded the Ministry of Consumer Affairs, the Information and Broadcasting Ministry, and all other state licensing authorities to see what actions have been taken by them against all these statutes in question and their violation. As a result, the court has now posted this case for another hearing on April 30, that is next week, and where both Baba Ramdev and Balakrishna will again have to be present before the court.
And in more legal news coming in from the national capital, Delhi Chief Minister Arvind Kejriwal and K. Kavita's judicial custody has been extended by 14 days in the liquor policy case. Currently, both of them are in Delhi's Tihar jail. The next hearing is scheduled for May the 7th. Moving on to the FMCG space, Everest has clarified to NDTV Profit that their products are still available in Hong Kong and in Singapore, and the report of them being banned is false. Now, this statement comes after Hong Kong and Singapore have banned MDH's Madras curry powder, Sambar mixed masala powder, the curry mixed masala powder, and Everest's fish curry masala. These were banned after carcinogenic pesticide ethylene oxide was found. Now, according to the Everest spokesperson, the Singapore Food Safety Authority has asked the importer to recall the product and temporarily hold for further inspection. While Hong Kong's recall is a standard procedure, it's not a ban. Moving on, Rahul Bhatia of Interglobe Enterprises has joined hands with former Tech Mahindra CEO and Asago Group Chairman CP Gurnani for an AI venture, Aeonos. NDTV Profit exclusively spoke to both of them on the kind of services the company will offer. Listen in.
Having been part of the IT industry and innovation industry, there was always a requirement that some of the sectors IT could do a lot more. Technology at the right time has become the catalyst. Now with the advent of quantum computing, advent of AI, advent of the GPUs, our assessment is that many of the processes, particularly in the segment which is called TTLH, but it is really travel, transportation, logistics and hospitality, there is a need for intervention by technology. So Aeonos is creating an IntelliOS or an operating system to make enterprises in TTLH more intelligent, more data-driven, more customer-driven, and create an experience for not only our direct customers, but customer's customer. So we are excited because AI is becoming a lot more easy to use with conversational AI becoming mature, with prompt engineering becoming mature, Gen AI being able to differentiate, and if you use it right, it can also be made responsible.
And with that, it's time to slip into a short break, but stay tuned. We have a lot more lined up for you on the other side.
The power of India lies in the strength of its people. Our forefathers fought for every individual to have a voice and to use that voice to shape the future of our country. So voting day is not a holiday from work. It is a day we must answer our call to duty as citizens of India. I, Ajay Bijli, pledge to encourage my entire team at PVR Inox, their families and friends, and the larger business community to vote, because this is the true power of Indian democracy. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future. We've got...
Welcome back. You're watching The Reporter on NDTV Profit. Now, in today's segment of How Rich is Your Candidate, we bring to you the wealth details of Union Home Minister Amit Shah. My colleague Alex Matthew joins us with more. Alex, over to you.
Is Amit Shah that we're speaking about today, and most interesting is his stock portfolio, but we'll come to that in just a bit. Let's first talk about his taxable income that was reported in the previous financial year, and that stood at close to 75 lakh rupees. It's an increase from what he reported in FY19, which stood at about 57 lakh rupees. Now, let's take a look at some of his other assets. He's got domestic bank fixed deposits of about 1.9 crore rupees. He's got cash that was declared at just over 24,000 rupees and movable assets that amount to 20.3 crore rupees, most of which are in individual listed stocks. We'll come to that again in just a bit. Jewelry of close to 73 lakh rupees. Interestingly, he does not own a motor vehicle, and he's got no mutual fund investments either. The total value of his property stands at about 16.3 crore rupees, and he's got agricultural land, non-agricultural land, as well as commercial buildings and residential buildings and flats. Now, let's come to his stock portfolio, which is in fact the most interesting part. He's got 185 stocks that are worth a cumulative amount of 17.43 crore rupees, and he's got quite a few large cap companies. You'll recognize most of these names, the likes of ABB India as well as Berger Paints. He's bet on this particular counter in the paint space and not on Asian Paints. It's quite interesting. Bharat Forge as well as Colgate Palmolive, Century Textiles as well as HUL, ITC, MRF, L&T, Nesco, Nestle India. You name it. You name the large cap, the frontline large cap, and he's got it in his portfolio. That's what I thought was most interesting.
Well, 33% or a third of the candidates contesting in the second phase of the Lok Sabha elections have declared assets of at least 1 crore rupees. According to an analysis done by the Association for Democratic Reforms, out of 1,192 candidates, 390 are crore-patis. Among them, 140 have a wealth of 5 crore rupees, while 112 are worth between 2 to 5 crore rupees. The average asset per candidate contesting the April 26th elections is 5.17 crore rupees. Now, staying with elections, NDTV's editor-in-chief Sanjay Pagalia spoke to the Madhya Pradesh Chief Minister Mohan Yadav, who said that there's no anti-incumbency against Prime Minister Modi. He added that the BJP is confident of winning the Chhindwara seat. Listen in.
भी अभी सेटल होकर राज्य चलाना है और फिर एक बड़े चुनाव प्रचार में आप लगे हुए हैं, तो उसमें जो सबसे बड़ा चैलेंज है आपके लिए वो है कि मोदी की गारंटी तो हो गई, लेकिन अब आपको मोदी को गारंटी देनी है कि 29 में से 29।
निश्चित रूप से, और मुझे इस बात का पूरा भरोसा है, प्रदेश की जनता ने माननीय मोदी जी के 10 साल के कार्यकाल को देखा है। वैसे भी हमारे प्रदेश में 2014 में हम 27 जीते थे, 2019 में गुना हम जीते थे। अब माननीय श्रीमान सिंधिया जी भी हमारे साथ आ गए, तो स्वाभाविक रूप से 28 हो चुकी है और 29वीं केवल लोकसभा छिंदवाड़ा बची थी तो हमने जिस ढंग से कैंपेन की है और जनता का जो प्रतिसाद मिला है, मैं निश्चित कह सकता हूँ कि छिंदवाड़ा भी हम जीत रहे हैं।
तो छिंदवाड़ा जीतेंगे तो एक बहुत ही बड़ा रिकॉर्ड बनेगा, लेकिन चूंकि ये तीसरे बार की इनकम्बेंसी है तो ऐसा हो सकता है कि एक आध सीटें चुनौती आगे पीछे और कहीं 28 का 27, 26, 25 तो नहीं हो जाएगा।
नहीं, ये तो कहीं से संभव ही नहीं है। माननीय मोदी जी के काम से जनता जिस ढंग से आनंदित है, आपको एक उदाहरण देता हूँ। माननीय मोदी जी ने पिछले इसी विधानसभा चुनाव में, जिसमें हम लोग जीत करके आए, एक स्लोगन चलाया, एमपी के मन में मोदी, मोदी के मन में एमपी। इतना हिट हुआ, आपके सबके बड़े बड़े राजनीतिक पंडितों के सारे रिकॉर्ड ध्वस्त हो गए जो कह रहे थे कि यहाँ सरकार बीजेपी की नहीं बन रही है। तो लगातार हम 2003 से बीजेपी यहाँ सरकार में है, एक सवा साल कांग्रेस का छोड़ दे तो लगातार बीजेपी। तो मोदी जी के उस भाव के कारण से राजस्थान भी जीते, मध्य प्रदेश भी जीते और छत्तीसगढ़ भी जीते। तो इसलिए मोदी जी का कोई एंटी इनकम्बेंसी वाला मामला नहीं, मोदी जी को तो और उसका लाभ मिल रहा है और हमको भी लाभ मिल रहा है।
इनफैक्ट आप सही कह रहे हैं कि विधानसभा में जो मोदी प्रीमियम है वो लोकसभा में उससे ज्यादा हो जाता है। तो इस बार वोट शेयर का नंबर आपके दिमाग में क्या है?
देखिए, बहुत स्पष्ट है। पिछली बार हम अपना अभी लेटेस्ट अगर स्टेट में देखा जाए तो हम लास्ट चुनाव में 44 थे, लेकिन इस बार 48% पे गए विधानसभा में। और बिफोर लास्ट ईयर के कंपैरिजन करें तो लास्ट ईयर हम 58% वोट शेयर मोदी जी के नाम पे गए थे। तो निश्चित रूप से आप करने वाला, क्योंकि कांग्रेस और उसकी पोजीशन खराब है।
58% के ऊपर जाना आपको?
100% जाएंगे, क्योंकि जिस ढंग से कांग्रेस लगातार डाउन होती जा रही। पहली बार कांग्रेस ने मैदान छोड़ा, खजुराहो सीट उनने सपा को दे दी, उनको मालूम क्लियर हारने वाले हैं। तो अब ये इससे बड़ा क्या प्रमाण होगा? सपा ने वापस गले डाली कांग्रेस की, दोनों ने मिलकर बीच में कैंडिडेट फंसाया, ना उनका रहा ना इनका रहा, कुल मिलाकर कैंडिडेट ही नहीं है। तो आखिर ये सब चीज़ें लक्षण दिखाई देते हैं। आप छिंदवाड़ा, राजगढ़ कांग्रेस के स्टार प्रचारक हैं, लेकिन एक बार भी अपनी लोकसभा छोड़ के बाहर नहीं जा पा रहे। ये अपने आप में संकेत आते हैं कि आखिर इनके प्रदेश अध्यक्ष, कांग्रेस ने कहा कि सबको चुनाव लड़ना चाहिए, लेकिन अध्यक्ष जी ने कहा मैं नहीं लड़ूंगा। तो जो ना प्रदेश अध्यक्ष लड़ना चाहते हैं, ना स्टार प्रचारक अपनी, भोपाल में राजगढ़ के बजाय दिग्विजय सिंह जी पिछली बार यहाँ लड़े थे, उनसे कहा यहाँ से लड़िए, तो बोले नहीं मैं राजगढ़ लड़ूंगा। तो जहाँ कैंडिडेट
राजगढ़ में ही हैं या वो घूम रहे हैं राज्य में?
मैंने कहा केवल राजगढ़ में। और हमने तरीका निकाला कि मैं पद यात्रा करूंगा। ये कुछ भी कर ले, कांग्रेस के लोग सफल नहीं होने वाले।
Let's now shift focus to the hot seat Jhalawar in Rajasthan. Former Chief Minister Vasundhara Raje's son Dushyant Singh has been renominated for the Jhalawar Baran Lok Sabha constituency. Here's a ground report by my colleague Harsha Kumari Singh. Let's have a look.
आप लोगों ने जो आशीर्वाद दिया है, जो यहाँ से शुरू होता है, वो आशीर्वाद की गूंज विधानसभा तक पहुँचती है।
Jhalawar, a constituency that's always voted in the Rajes for more than 4 decades. Vasundhara Raje and son Dushyant Singh hitting the campaign trail as Rajasthan goes into a countdown for the final battle. Dushyant inherited this Lok Sabha seat from his mother Vasundhara Raje when she stepped into state politics and took the reins as Chief Minister of Rajasthan for 2 terms. Dushyant has won 4 elections here since 2004. The last with a margin of over 4 lakh votes. The battle for Dushyant is not as much against political opponents as it is to retain the attention of his voters and work for the development of Jhalawar.
पानी को क्या लिफ्ट कर सकते हैं? अभी जो जगह पहले थी उसे लोगों को मिला है पानी, पर अब और लोग मांग रहे हैं। दो इशू नहीं है कि खाली आश्वासन देना, इशू है आश्वासन के बाद उसको फाइनल डिलीवरी तक पहुंचाना। ये आखिरी चुनाव तो नहीं है, इसके बाद में चुनाव होगा। तो ये एक परिवार है हमारा, तो जो लगभग 34 साल से 35 साल से आ चुका है।
Vasundhara Raje's political fortunes have changed tracks recently, with the party backing an entirely new rung of leadership in both Madhya Pradesh and Rajasthan. Shivraj Singh Chauhan and Raje have had to make way for young leaders. But in Jhalawar, Raje's charisma counts.
It depends on who you call the boss, whether you call Jaipur boss or you call Delhi boss, because a lot of the work is done here, so it's actually a partnership. झालावाड़ का हमारा बहुत पुराना रिश्ता है, मैं गिन नहीं सकती अब 30-35 साल हो गए, और जैसे मैंने आपको बताया 3-3 पीढ़ी सामने बैठी हैं, एक हमारे खुद की उम्र की, एक अगले दुष्यंत की उम्र की, एक उसके नीचे की.
Jhalawar on the border with Madhya Pradesh was chosen by the late Rajmata of Gwalior, Vijay Raje Scindia, as a safe seat for her daughter Vasundhara, away from the caste fault lines of Dholpur, the family into which Vasundhara married. But for the people of Jhalawar, she is still Maharani Saab and Dushyant is Raja. And it is this royal political lineage versus the commoner image that the Congress is hoping to cash on. Urmila Jain Bhaya, wife of former minister in the Gehlot cabinet Pramod Jain Bhaya, will face off with Dushyant Singh once again after 15 years. She fought against him in 2009 and lost by over 50,000 votes.
राजा और महारानी पिछले 35 सालों से यहाँ पर जमे हुए, 4 बार से सांसद दुष्यंत जी है. दुष्यंत जी ने झालावाड़ 12 के आम जन से जुड़े हुए मुद्दे, चाहे कृषि का हो, शिक्षा का हो, चिकित्सा का हो, रोड का हो, अपने बिजली का हो, नल का हो, ऐसा कोई भी एक भी मुद्दा अभी तक संसदीय क्षेत्र में उन्होंने नहीं उठाया कि आम जन का चहुमुखी विकास के लिए विशेष पैकेज ला करके और अपने संसदीय क्षेत्र का वो विकास कराए. मैं यहाँ की बहू बेटी भाभी मेरे को मानते हैं.
This is as much Vasundhara Raje's election as it is her son Dushyant Singh's pitch for a 5th term in a constituency that is known for growing oranges, soya bean, coriander and garlic. Of course, the need for agro-based industries and the need for irrigation is a key water issue here. But once again, after 15 years, the Rajes face off with the Congress's Urmila Jain Bhaya, who has pitched herself as the Bahu, Beti and Bhanji of this area.
And that's all we have on this edition of The Reporter, but do stay tuned to NDTV Profit for more news and updates and of course our continuous coverage of the Lok Sabha elections 2024.
I pledge to vote and encourage all my colleagues at Godrej Industries Limited and associate companies to exercise their voting rights. It's the essence of democracy, and we stand firmly behind it. I would also urge everyone else to vote. We are thrilled to join NDTV's pledge to vote campaign and help spread the word in the corporate world and beyond.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. You know, we are the, in many ways, we actually are the generation which is going to build the country. You know, our parents spent their whole life building roti, kapda, makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June. So I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah, on a day when the broader markets are showing exceptional strength yet again. The case for a chat with our guest today, and there shouldn't be a surprise considering his views in the past that we're talking about a few of the things that we're talking with him. One is the change of trajectory of rate cuts going to have an impact on deposit growth and on market-wide valuations. I think that's a conversation that we'll have. Is urban consumption, while has looked good, can it pick up further and will it show in the staple results because it's a week of very important FMCG numbers? And is telecom no longer being a duopoly, leading to a much anticipated uptick in the fortunes of everything related to the sector? I think we'll talk about all of this and more with Ashwini Agarwal of Demeter. He joins us right now on the show. Ashwini, great having you. Thanks for taking the time out. Hope all is well.
Good morning, Neeraj. All is well. Thank you.
And Ashwini, great to have you. Can I start off with this, Ashwini? I mean, this is now the 6th or the 7th time in a row that we're seeing the market climb the wall of worry. The reasons may dissipate, the reasons may change, but every single point of time that people have called this market to look very, very wobbly and worrying, right? And for the right reasons, I might add, right? This market seems to come back and climb the wall of worry. Is this, therefore, while expensive a market, remain a buy on dips market?
Neeraj, it would appear so. I mean, if you look at the market trajectory from the bottom of COVID, there was only one sort of meaningful correction that you saw, which started sometime in June or September 2021. And then lasted through till March of 23. And even that period, if you break it down, you saw one big decline from September 21 to June 22, and then again from about Jan 23 to March 23. Jan 23 to March 23 was also a fairly mild correction, though, that was the point when the whole Adani stock and Adani group was under a lot of pressure. But barring that, there has been no meaningful correction. And partly the reason is that the macroeconomic outlook for India has never been better. I mean, if I look back at 32, 33 years of my investing career, I think long-term prospects for India have never appeared to be brighter. I mean, you don't have any macroeconomic imbalances. You have a very pro-business policy tilt. And I think, on a global stage, India is set to continue to grow well. So, what's happening is that the domestic investors have kind of understood that this is the long-term trajectory for India and this is how it's going to go. So use every dip to accumulate. And further still, don't just bother about the short term, just keep investing for the long term. And the mutual fund flows are telling you that. So, a value investor like me can keep, despairing that the bond yield to equity yield differences are at all-time lows, and all indicators are telling us that the market is super expensive. But I really don't see how there is going to be a very deep correction. You could always have a 8 to 10% correction, events for which will unfold as we go along. But I really don't see how it's going to be much deeper in the current framework, unless, of course, elections deliver a surprise or something goes wrong in the rest of the world. Then we'll have to see.
Yeah, interesting point, Ashwini, because I remember you also, yes, you were rightfully pointing out, right, that if you look at on a valuation benchmarks, it's difficult to make a very convincing large call here. So, Ashwini, what have you made of the results season thus far? Because IT selectively is sulked, but maybe it was in the price, and the start of the financial services reportage, whether the quarterly updates or the actual results, has been okay.
Yeah, I think that's the right word. It's okay. There's no positive surprise. And yes, that can turn out to be a headwind for the market, because if you recall, both the September 23 quarter earnings in aggregate and the December 23 earnings in aggregate surprised the street. They beat the consensus numbers. And the beat was probably not led so much by the large caps, but the mid cap and the small cap cohort did exceptionally well. And aggregate earnings actually did reasonably well. And what we are what we are seeing in the quarter so far, and let me caveat this by saying that we literally have had a handful of results. So we don't know if this is a reflection of things to come. But till now, we haven't had a very strong positive beat so far. The sole exception is probably Bajaj Auto. And even there, if you look at how the stock behaved post the earnings, clearly the earnings surprise was well baked into the stock price. So yes, I think if the earnings season doesn't kind of lead to massive or doesn't lead to reasonable earnings upgrades, you could have a situation that market could drift down from here. But again, it might be a correction similar to what we saw last year between July and October 23, which was of the order of about 8% or thereabouts. And I don't see anything deeper than that for the time being, unless something bigger comes to pass, which I spoke about, earlier in the conversation.
True. Okay, Ashwini, not asking to talk about a specific stock, but I'm just trying to understand what is the issue with some of the larger banks currently? For all the conversation around how HDFC Bank is giving value, and everybody from the marqueest of investors to somebody who's a newbie but does good work has given or made this argument about, look at HDFC Bank valuations currently versus its own history versus its peer set, and the stock has to do well. Now, you've heard this argument now for 12 to 18 months, right? And at different points of time, the valuation has looked cheap, and it's only succumbed to some further selling, except for maybe the last 1 month when it's found some feet. Is the market telling all of us something that it wants to look at large behemoth stocks or financial stocks or other stocks in a different light than what they may have been looked at in the past?
No, Neeraj, I don't think so. I think the bottom line at the end of the day in India is earnings growth, and which is the primary driver of stock price, and the secondary driver of short-term momentum is earnings surprise or earnings upgrades. Now, in the case of HDFC Bank, and due disclosure for your viewers, I do own a position there, being value investor, and obviously it hasn't done well for me last few years. But the point in HDFC Bank is that the merger has led to a situation where it will take them time to fix the liability side of the balance sheet and get to a loan to deposit ratio of about 90%, which is where they need to get to over a period of time. And this interim period, you will see you kind of below industry loan growth or higher than industry deposit growth being forced upon them and resulting to NIM compression. Now, the March quarter was reasonably constructive. It wasn't so bad, but I mean, that's what the street is pricing in. Coming to the rest of the financial sector, I think the question that I'm struggling with is that you will have very decent loans growth, but you will have some compression in margins because deposit costs are on the higher side and liquidity is on the tighter side. Now, the two will compensate each other. And below that, I think on the PPOP side, which is pre-operating profits, banks should be able to meet analyst forecasts. But there is no pickup left below the PPOP line in terms of lower credit costs. I mean, low credit costs are already in the base. So from here on, it's business as usual. And, over a period of time, one should expect that credit costs will normalize to long-term trends. So, you can't build an earnings case of very superlative earnings. Barring some of the PSU banks, which might see some significant write-backs on account of massive provisions and write-downs that they've done over the last 3 or 4 years. For the large private sector cohort, I really can't expect that. And valuations are kind of also, again, ho-hum. They don't leave a lot of room for the upside. So there's no room for earnings surprise. So, what's going to drive these stocks? I'm not very clear.
Okay, the other aspect is telecom. It's right up there in the points of conversation, Ashwini, with the Vodafone FPO getting subscribed the way it has. I mean, the QIB book demand was eye-popping, to say the least. Yeah. And some marquee names out there. Now, piece this together for me. A sector which largely has been looking for tariff hikes but haven't come. Jio for the first time, and in the analyst call yesterday and some analyst notes seem to suggest that the management is now open to looking at some price hikes. So if we are looking at not a duopoly, but 3 people now being there, Vodafone, I suspect, will not gain market share, but will not lose terribly now, and all of that. And if there is a price hike and all of that, does it bring the sector firmly in focus for the next 12 to 18 to 24 months? And I'm not just talking about the telcos, I'm also talking about an Industar, I'm also talking about some of the ancillaries.
Absolutely. I mean, if price increases come through, and the competitive intensity from a price perspective abates, whether it's 3 reasonable players or whether it was the case up till now, which was essentially 2 very strong players and one the third player struggling because of limited balance sheet. Whichever way you think about it. I mean, so long as the pricing power can be exercised by the players, you will see earnings upgrades and you will see the stocks do well. And the entire ecosystem, which is the tower companies and so on and so forth. So obviously, this is very good for the industry. If the price increases come through, we have the cheapest data in the world and we have the lowest cost of, mobile connectivity in the world. So, a little bit of price increase is possible. And if that comes to pass, I think, all these stocks will do very well. I think that's really the case. And which I think is why everybody jumped at the opportunity to make this investment in Vodafone Idea. Which was priced to bankruptcy at some point in time in the recent past. And now, at the offer price, it still offers substantial upside if the sector economics were to improve in aggregate.
Okay. Well, and telecom, remember, Industar has an upgrade from CLSA, amongst others who have already upgraded the stock for a while. And Vodafone's successful subscription means that the market will want to believe that the dues to Indus are now more probable to get commissioned to Indus Tower, therefore, and that could also act as a positive. But that is a nice summation from Ashwini Agarwal. Really, what we need to do is take a quick break. It's time for one. We come back, we extend a little bit of this earnings conversation because there are a lot of companies in the mid-sized end that have come out with a spectacular set of numbers. We'll try and talk about some of those, or a large coverage around a broader end of the universe, and then of course, talk about the consumer piece as well in detail. Stay tuned, viewers. We'll be right back.
Co-presented by
पतंजलि केश कांति ऑयल एंड शैम्पू टूटना मना है.
Co-presented by
Panasonic Green Impact.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future. We've got your options covered. Futures and options strategy that will help you move with the tide. An unmissable trade. If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade,
Back with Talking Point right here on NDTV Profit. Let me get in my colleague Anushi to talk about some of the results that came out post-market hours on Monday and are making a serious move. Anushi, what do you have on your list?
Hey Neeraj, so first on my list is Tejas Networks. Quite a spectacular set of numbers over here. If you have to look at the revenue, that has gone about 4 times up now in this quarter, while the EBITDA and the margins are at 23% margin, which is higher than the Bloomberg estimate of 7%. Now even the net profit has swung back to the profit number at 146 crore compared to a loss of about 11 crore. Now this revenue that we are seeing, about 4 times the growth over here, it is supported by all its product segments, especially led by the wireless segment. Even if you have to look at the domestic play, both the private and the government side performed well, clocking in about 100% of a growth over here, while the international business saw about a 10% growth. Again, if you have to look at the margins, where the major play is, so the margins 23% compared to about 7.5% of an estimate. Now this is on the back of the company indicating in its Q3 con call also that they had recorded lower set of margins due to the lower capacity that they saw. So that was on the lower end of margins, while this Q4 they were expecting this higher segment margins. So that has led to the improvement in margin mix also. Other than that, the order book stood at about 8,200 crore, with the India recording about 7,900 crore of an order book. Now moving on to next is the Hudson Agro product. Again, a 13% of an up move over here. Strong set of numbers, revenue seeing about a 14% of a growth side. While this is on the back of the normalization that has happened in the milk procurement, which is leading to these better sales realizations also. Apart from that, the EBITDA and the margins is, again, the focus remains over here. EBITDA about 47% of a growth side, but the margins have moved up to 11% compared to about 8% earlier. Two key reasons that I would like to highlight over here. The purchases of stock in trade has gone down by about 49%. So that has supported the kind of growth that we are seeing in this number. And another is the huge differential in the inventory changes also, leading up to this net profit also going about 108% up. So these are the two stocks that are buzzing on the back of strong Q4 earnings.
Okay, Anushi, thanks a lot for that. Well, it seems like that from milk to whiskey, the sales are really happening in the consumer space. Hudson Agro has had a good quarter. Indri whiskey maker Piccadilly Agro had a very strong quarter. In between all of that, of course, Anushi spoke about Tejas Networks and the blowout set of numbers that they've come out with as well. Ashwini, large caps have been slightly quiet, but some of these niche mid-sized players are making their presence felt in a big way. Anything that stood out for you, not just in terms of this quarter numbers, but something that you may have noticed in the last 3 to 6 months?
So think about both the stocks that were highlighted by Anushi, which is Tejas and then Hudson Agro. I think the two themes that are staring out at us is that India is starting to do things at scale. And Tejas's acquisition by the Tata Group has allowed it to exploit the scale that was possible for the business. I mean, India spends a very large amount of money on telecom equipment, the hardware side of mobile telephony and data services. And this was a very, very small company, but with a very strong technology backbone. And I think the ownership by Tata has allowed it to win at scale. And I think what we've seen in the latest quarter is simply a small window into what the future might look like. So that's one theme. And what you're seeing in Hudson Agro is the other theme, which is normalization of margins after the kind of boom and bust cycle that we went through during COVID. Now, while I could go into why milk went through this boom and bust cycle, but I think the point I'm trying to make is that the opportunity resides exactly here. One set of companies are going to be companies that will go from being small, mid-sized players to very large companies. So the opportunity set is extremely large. And there'll be another set of companies in the mid-cap space, small-cap space, which have been hit by very high raw material prices and the margins are compromised, where you will see certain amount of normalization of margins. And I think both these will continue to offer some earning surprises in the time to come. And I think, that's where I'm trying to kind of find ideas. So upstream chemicals, agrochemicals is one industry where I think you will see more of a margin normalization coming through. And of course, the scale business is there in variety of industries such as railways, defense, manufacturing, etc. But where valuations are very, very challenging, so one has to participate with some care. Coming to consumers, I think there are two factors at play. One is that the rural demand has been fairly soft for the last couple of years, driven by soft commodity prices, agricultural output prices, and by limited amount of spending that has gone into rural India. Rural India hasn't fully recovered from the upheaval in urban jobs that happened during COVID. So that's one. And the second is in urban India, you're starting to see a lot of innovation, a lot of direct-to-consumer sales by new startups, which is at the end of the day eating into potential revenue of the big boys. So the large companies in the consumer staples area are not able to produce the kind of growth because some of that growth is getting eaten away by new startups, Mamaearth, or whether it's Nykaa or whoever else it is. So that is playing out. So I think the urban consumer demand is not so bad, but I think there are far more people vying for the consumer's attention.
Interesting. Ashwini, can I request you? I mean, take some time. It doesn't matter. But tell us about how you think about this opportunity sizing when you talk about it. I mean, because whichever example, I'm not saying necessarily Tejas, but whatever else, would love to understand how you think about what the opportunity could be a few years out. How do you think about this?
Well, I think there are various ways to do it. I mean, you try and look for an industry which is very large relative to the size of the player. You try and make an assessment of whether the company has the ability to exploit that size. And the story is not entirely forecastable at the outset, and you have to take a leap of faith and slowly it unfolds. For example, in recent months, we've seen news of BrahMos missiles being exported from India. over the last 2 years, we've seen significant focus on the success of India's space program. While it has been successful over the last few decades, I think it has come into focus only in the last 2 years or so. So, there are a lot of industries which have a lot of scale possible to them. And innovating at scale has become possible in the last 8 to 10 years, where I think the Indian industry probably lacked the confidence, lacked the bravado, I don't know, and possibly even lacked the policy support previously. If you were to look back at India's history, up till say 2014, 2015. So I think one difference that this administration has definitely made is that through policy support and through the organic growth of the Indian market per se, has made people aware about the opportunity of scale. So it's a very difficult question. How do you size the opportunity? I mean, it is a bit of a leap of faith. It is a bit of just kind of zooming out and thinking about how big the opportunity can be. And then placing your bets accordingly. I mean, you look at batteries, for instance. I mean, Exide, something I don't own, but they signed up an agreement to supply EV batteries to Hyundai. Everybody knew that they are investing in EV. They had a very strong balance sheet after some asset divestments that they had done. They have a very, very strong brand name and a very strong manufacturing backbone. So then the rest is just multiplication and trying to figure out who wins.
Okay. Well, and I'm sure it's not as easy, viewers, by the way, but it's good to get these the thoughts in process. Just one final question, Ashwini, before we wrap up this conversation. The age-old favorites have been IT services. For after a really long time, they are going through a period of lull. Some people argue that because this industry is survived and thrived for so many years, you will see a comeback again. Some argue that we are not mutual fund managers. We don't have to have every sector in our portfolio. Why look at IT right now? There are other sectors better out there. We'll revisit IT when the promise is shown, maybe buy it 15% higher, but that's a better way to do it. Which way would you lean on? You are not a mutual fund manager either.
I think the latter, easily. I think the earnings growth is quite lukewarm. And I think if you look at the valuations, despite the correction and severe underperformance on relative basis, valuations are still expensive. I mean, if you look at just the last decadal valuation range of something like Infosys, it has traded at lower multiples in the past. I tend to buy into the argument that if you don't see earnings momentum and earnings growth, is there really a need to be here? Now, I will just make one provision here, that IT services and stocks like HCL Technologies and Infosys have a very decent dividend yield at this point in time. So if the market were to go through a correction, for reasons that are not very clear to us right now, these stocks will probably outperform, supported by the dividend yield, strong cash flow profiles, and obviously best-in-class scores that they generate on corporate governance and so on. So I think they're good companies to protect you on the way down. But if you are really bullish on India and you want to invest for the next 5 years or 10 years, my suspicion is there are better stories to play.
Got it. On that note, Ashwini Agarwal, thanks so much for taking the time out and speaking to us today.
Thank you. Thank you for having me here, Neeraj.
Pleasure was ours, and viewers, thanks for tuning into this leg of The Talking Point.
Presented by
Patanjali Kesh Kanti Oil and Shampoo, Tootna Mana Hai.
Co-presented by
Panasonic Green Impact.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
For the past 2 years, people who have wanted to have unsecured loans one after another, have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio, or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms indicates their willingness to issue back-to-back loans quicker than traditional banks. Besides
Hello and welcome. Thanks for tuning in to the Small and Mid Cap Show here on NDTV Profit. I am Harsh Saita. With me is Mahima Vacharajani, and wish to welcome a very special management because the numbers have been extremely strong. The stock is up